हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल देखोगे क्रूड ऑयल नेचुरल गैस कल के लेवल है, कुछ खास चेंज हुआ नहीं है। कल क्रूड ऑयल में एक सेलिंग का ट्रेड बनाया था, रेजिस्टेंस एरिया पे मार्केट क्लोज हो गया था एक्चुअली में। आज हल्का सा गैप डाउन हुआ है, तो कल का ये कॉन्ट्रैक्ट चेंज हो गया है, ध्यान रखना। कॉन्ट्रैक्ट इज चेंज इन क्रूड ऑयल। नेक्स्ट मंथ का कॉन्ट्रैक्ट ट्रेड हो रहा है फिलहाल के लिए। एंड नेचुरल गैस भी देखोगे, कल सेलिंग का ट्रेड था, सेलिंग आई थी, पॉइंट ऑफ इंटरेस्ट पे रुक गया था, हल्का सा गैप डाउन हुआ है। देखते हैं थोड़ा सा एग्जैक्टली सपोर्ट पे आता है तो इसमें भी एक बाइंग का प्लान करेंगे, नहीं तो हो सकता है और गिरता ही रहे। इंडियन मार्केट भी देखोगे हल्का सा गैप अप हुआ है, बाइंग आ रही है वापस। डे हाई कल का निफ्टी में निकलने ही वाला है, ऑलमोस्ट मुझे लग रहा है निकल ही जाएगा। बैंक निफ्टी तो थोड़ा दूर है डे हाई से, निफ्टी मुझे लग रहा है डे हाई निकल जाना चाहिए। यूएस वाइस प्रेसिडेंट जेडी वेंस पाकिस्तान इस्लामाबाद जा रहे हैं फॉर टॉक के लिए। आज लास्ट डेट है शायद पीस टॉक की, सॉरी जो सीज फायर है उसकी। तो देखते हैं, मुझे लग रहा है सीज फायर बढ़ जाएगा आगे, मोस्ट प्रोबेबली देयर अ वेरी हाई चांसेस सीज फायर विल इंक्रीज। कि अभी और न्यूज़ की बात करें तो और कोई न्यूज़ फिलहाल तो नहीं है। लेट्स सी कोई और न्यूज़ अगर आती है तो। बाकी डेटा की बात करें, 12:30 लंदन सेशन ओपन, इवनिंग 5:30 न्यूयॉर्क सेशन ओपन। 6 PM पे यूएस में इंपॉर्टेंट डेटा है आज, दैट इज को रिटेल सेल्स। और यूएस प्रेसिडेंट ट्रम्प की स्पीच भी है, तो देखते हो क्या बोलते हैं। मुझे लग रहा है शायद तब तक कुछ हमें पता भी चल जाएगा, कुछ होने वाला है या नहीं होने वाला है बिटवीन ईरान और यूएसए। दैट इज ऑल्सो इम्पॉर्टेंट। 7 PM पे यूएस मार्केट ओपन एंड देन इम्पॉर्टेंट टेस्टमनी है आज। फेड चेयरमैन जो डेजिग्नेट नॉमिनी है वॉर्स की, उनकी टेस्टमनी है। तो देखते हैं क्या क्वेश्चन उनसे पूछते हैं, क्या वो होते हैं नहीं होते हैं, बनते हैं नहीं बनते आने वाले दिन नेक्स्ट फेड चेयरमैन। एंड देन 7:30 पर भी पेंडिंग होम सेल्स का डेटा भी है आज। सो काफ़ी इवेंटफुल डे है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। थोड़ा सा कॉन्ट्रैक्ट फ्यूचर का आपको अलग दिखाई दे सकता है, बिकॉज जैसा मैंने बताया कल फ्यूचर की एक्सपायरी होगी, तो नेक्स्ट मंथ का फ्यूचर है, हम उसी मंथ का फ्यूचर यूज़ कर रहे थे, तो वो कैरी फॉरवर्ड हो गया इस चार्ट में।
He does what he truly feels. Ultimately, he is the final decision maker, and he makes decisions in the best interest of the United States of America. And he doesn't care about the political consequence. He doesn't care about what he knows the fake news media will write. He does what he truly feels is in the best interest of our country. And when it comes to Iran, of course, that is ensuring that they can never obtain a nuclear bomb, which they were very close to doing. And President Trump and his negotiating team found that the Iranian regime was pushing us around, stringing us along. They were looking forward to enriching more uranium to build these deadly weapons, and they were getting ready to attack our bases, our troops, and our allies in the region. And President Trump said, not on my watch. And that's why he ultimately made the decision to launch this successful operation several weeks ago, and why he continues every day to remain focused on the long game, to ensure that Iran can never obtain a nuclear weapon. And that's what he's going to achieve here. And if the American people want the truth, they definitely should not pick up the New York Times or the Wall Street Journal or watch CNN, especially these days in the midst of this incredibly successful
ऐसा नीचे आएगा नेचुरल गैस टारगेट जोन पे, तो एक बाइंग का देखते हैं यहाँ से। Apple has announced that John Tennons, the Senior Vice President of Hardware Engineering, will take over the CEO of the company on September 1st, 2026, as Tim Cook prepares to step down after 15 years in a role. ऑलमोस्ट ऑल टाइम कल का हाई से रिजेक्शन ले रहा है निफ्टी। एक्सपायरी भी है निफ्टी में, ध्यान रखना, टुडे इज द एक्सपायरी एज वेल इन निफ्टी। ऑप्शंस। डे हाई अगर ब्रेक हो जाए तो मज़ा आ जाएगा। डे हाई ब्रेक नहीं हुआ तो फिर मुझे लगता है साइडवेज टू बेरिस हो सकता है। बट अगर थोड़ा सा भी कंसोलिडेशन किया डे हाई के आसपास निफ्टी फ्यूचर ने तो 24,600 फ्यूचर में जा सकता है, 24,600 के आसपास। कल भी कंसोलिडेशन हुआ था, डाउन आ गया, मुझे लग रहा है अगर अभी कंसोलिडेशन हुआ तो मज़ा आएगा वापस से। डायरेक्टली नहीं ब्रेक होना चाहिए। बाकी 24,400 की कॉल में मोमेंटम अच्छा आ गया था मॉर्निंग पे। देखते हैं और कितना मूव करता है। ऑलमोस्ट 55 से 116 117 के आसपास जा चुका है, थोड़ा बहुत वापस पुल बैक आ रहा है। निफ्टी को देखो निकलना है तो फटाफट से ब्रेकआउट मिल जाना चाहिए डे हाई के ऊपर। फ्यूचर में मिला तो मजा आएगा। अगर ब्रेकआउट नहीं मिला निफ्टी फ्यूचर को डे हाई पे, कल का जो डे हाई था निफ्टी फ्यूचर में, तो फिर प्रीमियम कुछ खास बढ़ेंगे नहीं। आज एक्सपायरी भी है। ठीक है, बाकी मुझे लग रहा है 24,400 का कॉल अगर 180 के आसपास, 180 190 के आसपास आता है तो उसमें मुझे लग रहा है फिर से एक सेलिंग देखने के लिए मिल सकती है। जो लोग अगर ट्रेड कर रहे हैं, ऑप्शन सेल करना चाहते हैं, तो इस ऑप्शन को ध्यान में रखना। 24,400 का कॉल अगर मिलता है 180 190। बाकी थोड़ा और सेफ प्ले करना चाहोगे तो 24,450 में कहूँगा उस पे जाना। वो थोड़ा और सेफ है और थोड़ा सा और ज़्यादा एक्यूरेट है सेल करने के लिए। दोनों ही जो कॉल हैं सॉर्ट करने पे, इन पे मोमेंटम अच्छा मिल सकता है आज के दिन एक्सपायरी में अगर आता है प्राइस। 24,450 का कॉल 150 टू 160 के बीच में, एंड थोड़ा सा अगर रिस्क ले सकते हो तो 24,400 का कॉल भी सेम ही है, 170 टू 180 के बीच में अगर आता है तो ऑप्शन सेलिंग के लिए। या फिर अगर ये 24,400 का कॉल 50 के नीचे कहीं चला गया, सस्टेन करता है, तो तब भी शॉर्ट कर सकते हैं इसको। बेटर है थोड़ा ऊपर ही मिले। सो इसलिए देखना पड़ेगा निफ्टी ब्रेकआउट करेगा या नहीं करेगा आज डे हाई का। फिर से रिजेक्शन ले रहा है। नेचुरल गैस को देखोगे डेली टाइम फ्रेम पे मार्केट ने रिसेंटली काफ़ी बड़ा एक सपोर्ट ब्रेक किया था 260 के नीचे। तो हो सकता है वापस एक बार रीटेस्ट करने चला जाए अपसाइड की ओर इन फ्यूचर। बाकी अब जब तक 280 के ऊपर सस्टेन नहीं करता, ये बहुत ज़्यादा बुलिश तो नहीं है। लुक्स पेरिस। डेली टाइम फ्रेम पर ही ऊपर सपोर्ट ब्रेक हुआ है, तो नीचे एक सपोर्ट और है, मार्केट वहीं पर रुकने की कोशिश कर रहा है कंटिन्यूसली। तो अगर वापस 230 के नीचे मार्केट, आप कह सकते हो डेली टाइम फ्रेम पे 3 कंटिन्यूएशन डेज में क्लोज नहीं करता है, 3 कंटिन्यूस डेज में, तब तक ये बहुत ज़्यादा बेयरिश भी नहीं हो सकता। तो नीचे मैक्सिमम 230 आ रहा है शायद, उसके नीचे भी गिरेगा, इसके चांसेस कम है। ब्रेक कर सकता है बट 3 कंजिक्यूटिव कैंडल क्लोज करेगा, चांसेस कम ही है। तो 230 to 240 अच्छा सपोर्ट है डेली में वापस से। 30 के नीचे चला गया मान लो कंटिन्यूसली क्लोजिंग बेसिस पे ऑन डेली टाइम फ्रेम। हो सकता है हम वापस 150 टू 160 की रेंज में आ जाएं, बट अभी उसके लिए 130 ब्रेक होना जरूरी है। ऊपर एक सपोर्ट ब्रेक हुआ था तो उसका डेली टाइम फ्रेम पे रीटेस्ट ही बन सकता है मोस्ट प्रोबब्ली, नथिंग एल्स। तो बहुत लार्जली शॉर्ट तो मत ही करना कभी भी नेचुरल गैस को। कभी मोमेंटम अगर सडनली आ गया तो बड़ा मूव आ सकता है। ओवरऑल कहें तो 230 टू 280 एक रेंज बनी है बड़ी, एंड 240 टू 260 एक स्मॉलर रेंज। ठीक है, निकल रहा है मार्केट निफ्टी में डे हाई के ऊपर, बहुत अच्छा है। थोड़ा कंसोलिडेशन करके निकलता तो बेटर था। बाकी 24,400 का कॉल भी बड़ा मूव अच्छा कर गया। ऑलमोस्ट 55 से 141, देखते हैं 170 180 तक जाता है क्योंकि वहीं पर एक रेजिस्टेंस है जहां पर सेलिंग के चांसेस बन सकते हैं वापस से। 150%, 150, 400। निकलता है, सस्टेन करता है, जैसे मैंने थोड़ी देर पहले बताया 24,000 डे हाई के ऊपर, जो कल का डे हाई था 24,470 490 के ऊपर अगर सस्टेन करा तो 24,600 तक पॉसिबिलिटी काफ़ी हाई है जाने की। नाउ डिपेंड अपॉन कि वो किस तरह से मूव करेगा। के ऊपर अगर मार्केट निकलता है देन वी विल गो टुवर्ड्स 24,900 टू 25,000 इन फ्यूचर। तो ये दो टारगेट रहेंगे अगर मार्केट ऊपर जाता है तो। मोस्टली 25,600 के आसपास, 24,600 के आसपास निफ्टी पहले रुकेगा। तो देखते हैं सस्टेन करता है नहीं करता है। ब्रेकआउट तो हो रहा है डेफिनेटली, बट इस तरह का ब्रेकआउट नॉर्मली सस्टेन नहीं करता है अगर ये सीधा चला गया। थोड़ा कंसोलिडेशन होना जरूरी है यहाँ पे। 24,500 490 के अप्रॉक्सीमेटली। फर्स्ट हाफ है शायद थोड़ा वॉल्यूम कम है करंटली क्रूड और नेचुरल गैस दोनों में ही। निफ्टी कल का हाई ब्रेक कर रहा है, कंसोलिडेशन करके जाए तो ऊपर बेटर, सस्टेन शायद फिर ना करे अदरवाइज। निकल तो रहा है निफ्टी फ्यूचर भी अपसाइड की ओर, लेट्स सी। कंटिन्यूसली अपसाइड ही जा रहा है, ओपन इक्वल टू लो करंट कैंडल निफ्टी फ्यूचर में। थोड़ा सा और ऊपर। अब थोड़ी बहुत प्रॉफिट बुकिंग आ रही है निफ्टी फ्यूचर में, अदरवाइज बुलिश ही है। ब्रेकआउट तो हो चुका है, कंसोलिडेशन करके ब्रेकआउट नहीं हुआ, नॉर्मल ब्रेकआउट हुआ है। प्रॉफिट बुकिंग आने लग गई है। निफ्टी 50 में ब्रेकआउट किया बट सस्टेन लग रहा है शायद ना हो पाए, बिकॉज डायरेक्टली ब्रेकआउट हुआ है। तो लग रहा है शायद क्रूड ऑयल ना एक बार और ऊपर की ओर जा सकता है। एक चांसेस क्रूड ऑयल में फिर से वापस कल के रेजिस्टेंस को हिट करके जाने के हैं। इस लेवल के नीचे नेचुरल गैस में बहुत ही हैवी क्वांटिटी में शॉर्ट नहीं कर सकते, अगर लेवल ब्रेक भी होता है तो भी। सी देखते हैं एक बार ये पुल बैक देता है क्या क्रूड वापस से, या फिर डायरेक्टली आएगा नीचे। टी कंटिन्यूसली बुलिश बना हुआ है, सस्टेन तो कर रहा है डे हाई के ऊपर। Crude oil, crude oil today, what move is possible? ऐसा कोई पर्टिकुलर मूव एक्सपेक्ट नहीं है, यही रेंज मुझे लग रही है फिलहाल के लिए. दिस रेंज विल होल्ड मोस्ट प्रॉब्ली इन क्रूड ऑयल. इस रेंज के बाहर कहीं निकलता है तब फिर देखेंगे, अदरवाइज तो यही रेंज मुझे लग रही है. प्राइस आज होल्ड करेगा अभी के लिए.
On Iranian linked. If this Iranian ship is able to successfully go through Hormuz without getting boarded or taken by U.S. authorities, then again, this would be perhaps a small win for Iran. If it is boarded, then it illustrates that they will not be able to get any ships through as these, even as the peace deal negotiations are on the table, and they could potentially meet in Islamabad in the next 24 hours to discuss it if Iran does send a delegation. Now, sure.
Well, I was going to say, I guess it's a chicken and egg scenario over here, but the Iranian delegation have also asserted that they're not going to attend unless the blockade is lifted. So how are traders assessing the potential for the upcoming talks and the real possibility that maybe in anticipation of the talks, you do get the blockade lifted?
I think the traders are looking at this as a glass half full situation. When you look at the oil prices, that's where we basically stand, right? With Brent oil in the mid $90 level, it is higher than pre-war levels, where we were in maybe the $70 range, but it's not as high as the height of the war when we were a few weeks back when we were in $110 level for Brent. So we're somewhere right in the middle, likely traders trying to hedge their bets. But it does indicate that there is maybe some sort of expectation that even if there isn't a peace deal, maybe the ceasefire is extended for a week, 2 weeks, 10 days, anything to just keep this going. And maybe you'll start to see an easing of traffic. Because last week, before the recent spat and tension over Hormuz between the U.S. and Iran, you did see some traffic kind of come back. Not huge traffic, right? We're talking 10, 20 vessels a day compared to more than 135 before the war began. Yeah. But still, you were seeing some sort of increase there.
And yet, yesterday, Kuwait declared a further force majeure on oil shipments. Talk us through the announcement.
Yeah, so customers received force majeures for shipments not just now and that have been happening, that were supposed to happen over the last month, but also future shipments, and a warning as well that even if there was some sort of normality, if there was Hormuz to open again, you would still have delays and potentially cancellations as they increase their output, right? They were not only hit as tensions were quite high in March with attacks, but also they're dealing with higher inventories. Their ships, full within the Persian Gulf, so you have to bring some new ships in there. It does sort of indicate and illustrate that even if Hormuz were to open, it would take a while for the market to get back to normal. Not only are our facilities have to be restarted or ramp up production, you also have some places that need to repair their plants. One being the Ras Laffan LNG export plant in Qatar. It was damaged by Iranian missiles in mid-March, and because of that, it could take 3 to 5 years to fully bring back 17% of their capacity that was damaged there.
Bloomberg, Stephen Safinsky in Singapore, thank you so much for bringing us the latest on the Strait. Well, coming up, Mistral AI says it's focused on helping large enterprises customize models to their own data and workflows. Our interview with the French AI company's chief revenue officer is coming up next. This is Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Mistral AI has been shifting beyond its open source roots, building out a full stack platform aimed at helping large companies tailor AI to their own data and workflows, particularly in industries like finance and manufacturing. Chief Revenue Officer Marjorie Danovich spoke to us about the global momentum.
We very much found our niche in the context of larger enterprises needing customization of models and portability of models everywhere. It means that we coexist with the players you've mentioned, and we really found our stride in helping organizations really achieve end-to-end business transformation. Use cases where off-the-shelf AI is not sufficient, when you're going to need really to deploy those models everywhere and customize them to your own IP, to your own data. Really, Mistral is finding great leadership in that segment of the market.
How much revenue comes from outside of France and outside of Europe?
Yeah, we've seen a tremendous, I would say, acceleration globally. So we have quite a bit of a customer in Asia today, Ministry of Defense Singapore, the Ministry of Home Affairs in Singapore as well, and more momentum in Asia. In the United States, we're having also quite a bit of momentum with customers like Cisco, Dell, all the way to Snowflake. So the momentum that Mistral is experiencing is very global in nature. And that's because the need of customization and the need of portability is not only a geopolitical topic. It's a topic that's concerning all enterprises that are really trying to achieve return on investment. And for that, customization is a key topic for them wherever they are.
Is Mistral AI fully committed to the US?
We are very committed to the US, very committed to all markets, and most importantly, very committed to the larger enterprise that's really in need to accelerate their transformation.
Bloomberg's Francine Lacroix speaking to Mistral AI's Chief Revenue Officer, Marjorie Janovich. Now to some corporate news. Jeff Bezos is reportedly close to a $10 billion fundraising round for his AI startup that's developing models capable of understanding the physical world. The FT cites people familiar with the deal, saying the fresh funding values the company, known as Project Prometheus, at $38 billion. The startup has dozens of employees, some of them poached from leading AI labs such as OpenAI and Google DeepMind. Amazon shares rose after the bell following news it will invest $5 billion in Anthropic and may inject $20 billion more over time. Anthropic, maker of the Claude chatbot, also plans to spend more than $100 billion over the next 10 years on Amazon cloud services and AI chips. Amazon is one of Anthropic's biggest backers, with prior investments totaling $8 billion. And the German chancellor has said his government rejects hostile and aggressive tactics in Germany's banking industry. Friedrich Merz was speaking to German banking executives after Commerzbank formally rejected UniCredit's takeover bid. The UniCredit CEO had earlier issued a stinging criticism of Commerzbank's strategy. And Andrea Archel will be speaking with Francine Lacroix on The Pulse. Catch that interview today at 9 a.m. London time. Very topical. And coming up, Euro area PMIs due later this week could offer an early read on the effects of the Iran war as companies face up to surging energy prices. We'll also speak exclusively to the CEO of German logistics firm DHL next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jemana Versace with your top stories. A fresh pick for Apple. John Ternus is named CEO as Tim Cook hands over the reins after 15 years in which he's built a $4 trillion business. Oil slips and the global stock rally resumes on optimism that the U.S. and Iran will meet for a second round of talks. Plus, a promise of Fed independence. Kevin Walsh is set to pledge to steer clear of distractions in testimony seen by Bloomberg ahead of his confirmation hearing later today. And this is how markets are reacting in the early hours of trade as we head into the European Open. European stock futures up 0.5%, S&P and the Nasdaq up 0.2 and 0.3 respectively. We saw a bit of a dip yesterday, this after President Trump made some comments to our Bloomberg colleague suggesting that the ceasefire in the Middle East will not be extended beyond the Wednesday deadline. So there are high stakes involved for these potential upcoming Islamabad talks if they do indeed take place. But beyond that, of course, still keeping a close eye on the earnings season in the U.S., in Europe, and on Kevin Walsh's testimony later today in front of the Senate banking panel. So that's something to watch out for today. Commodities, though, still in focus. We are seeing Brent slip a little bit today on back of that optimism surrounding those Islamabad talks or potential talks. And the selling has accelerated in the last hour. We're now down 1.6%, just shy of $94, but still about $8 higher than where we got to on the lows on Friday after there was a suggestion that the streets would be fully reopened again. Clearly, that has not transpired. European markets, gas futures down 3% as well. Those are Dutch TTF contracts. And then 10-year yield in the U.S. as we head into Kevin Walsh's testimony, not doing a whole lot. 4.24 is where we're at. Though I will note that the front end of the U.S. Treasury curve is pricing in about 13 basis points worth of rate cuts by the end of this year. Time now for your front page news. The financial press today dominated by Tim Cook's decision to step down as Apple CEO. The FT points out that John Ternus will become only Apple's third chief executive in 30 years. It says he will take over at a challenging time for the company as it faces pressure from the Trump administration to shift production to the U.S. The Wall Street Journal describes Ternus as a veteran engineer and says Tim Cook will be remembered for squeezing so much profit out of the iPhone. And Germany's Handelsblatt says Ternus is taking over from Tim Cook earlier than expected. The paper reports Cook will now focus on Apple's relationships with global political decision makers, a field in which it says Ternus has little experience. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. That is on the terminal. Some of the top stories for today. But let's go back to Apple. Tech stocks are leading a rally in global equities today. Let's get more on the change of guard at Apple. Joining me now from Los Angeles is Mark Gurman, Bloomberg's chief correspondent for Apple. So start off by telling us what we know about John Ternus and what his main challenges are going to be.
Ternus has been Apple's head of hardware engineering for the last 5 years. He's done an excellent job. His legacy in that role is upping the product quality and the performance of the company's products. We've seen how the iPhone has evolved in recent years with the iPhone Pro models and the iPhone Air. And so he's done a very good job there, also on the iPad. The MacBook Neo has been a smash hit so far. And so he's the right guy. He's got the product chops. He's got the age. And he's got the charisma and the innovation spirit in order to be Apple's next CEO. So I think it was a great choice and probably the only choice for Apple at this juncture.
Do we understand anything about what his AI strategy could look like when he takes over the reins?
The AI strategy at Apple is now to become a platform company and use the software stack to run AI from various other players on top of its hardware that Ternus has helped lead the development of. Apple runs AI models on its hardware better than any other company at this point in terms of computers. So they're going to keep pushing down that path. Mark, really good to have you on. Bloomberg's chief correspondent for Apple, Mark Gurman.
Well, commercial traffic through the Strait of Hormuz is at a virtual standstill after a brief and confused weekend reopening that ended with the first U.S. seizure of an Iranian vessel. President Trump has told Bloomberg that the straits will stay blockaded until a deal is signed. Now, while the Strait of Hormuz remains effectively closed, companies moving goods across continents are working to assess how they will be impacted by surging energy prices, jet fuel shortages, and rising air freight rates. So join me now for an exclusive conversation is Tobias Meyer, CEO of DHL Group. Really good to have you with us on the show. Let me start off by asking you how the Iran war has disrupted your own business operations.
Yeah, good morning, Jumana. Well, it obviously had a tremendous impact over recent weeks, and we're very glad also for the safety of our employees that now the immediate military threat to GCC countries has reduced. We had some quiet days, but the main economic problem, the Straits of Hormuz still being closed, that has not been removed. That's impacting us as it relates to the movement of containerized goods. But it obviously creates this issue. The world is lacking 10, 12 million barrels of crude oil every day.
Yeah. You know, a lot of comparisons are being drawn between this episode and COVID in terms of the supply chain disruption. How would you say what's happening today compares to what happened back in COVID times?
Well, I think this is very different. COVID led to a significant spike in the demand for certain goods. People couldn't spend on services because they weren't allowed to go out, they weren't allowed to gather, and that shifted significant spending power into new electronics and other commodities, which then led to that huge demand spike. Here, we have some operational disruptions. We had closure of airspace. That's something that is not entirely new, but the order of magnitude is new. We shouldn't forget that Western airlines are also not flying over Russia. So the corridors that are left for the transit, especially between Asia and Europe, have become quite limited, and that remains a concern.
Yeah.
And then there is the problem in the supply of oil. We are still addicted to hydrocarbons, and especially for aviation, there is no alternative to jet fuel for the foreseeable future, and that remains a big concern.
Yeah, and given what you're saying, and given, I mean, we've been reporting on this, the squeeze that's occurring in jet fuel, are you repositioning any of your planes? Are you preparing for the possibility of shortages over the next few months?
Well, on this, there's not much we can do. We're talking to our suppliers. Obviously, the willingness to pay is important in this. The price needs to steer where oil and its products are going. That's the best mechanism that we know. And that's, I think, also politically important. This shortage of supply will need to create price signals that steer this into the right channels so that essential elements, the transport of critical goods, for instance, can be maintained. We cannot tanker fuel for intercontinental flights. That's technically not possible. That's also neither economic nor environmentally wise. So the supply is something that needs to be organized with the respective companies locally, and that could become a problem, especially in Asia.
And overall, though, what does air cargo movement actually look like right now in the region? Give us an update on the capacity and where you stand.
So we obviously have a significant reduction in the capacity available by the Middle Eastern hub carriers. Those operations are still very much limited. For us as DHL, we have a large own fleet of around 300 aircraft. Our main hub in the region used to be Bahrain. We weren't able to use Bahrain for some weeks. That's now starting up again. We used Riyadh and Muscat primarily as airports of entry. We used other seaports, and we have a very extensive road network in the region. So we were able to support our customers well over the last weeks, and I'm very proud of our colleagues in the regions who put up with those very adverse circumstances to keep goods moving and keep supply chains running, but especially the situation on the energy supply and the continued blockage also of the Strait of Hormuz for containerized goods that continues to create challenges.
Yeah, okay. So how has that translated to air freight costs? What have we seen in terms of pricing for, since the inception of the war, which is going on for almost 2 months now? And can we continue to expect higher push pricing on these air freight costs in the coming weeks and months?
Yeah, so there's the immediate region where indeed there's also now strong demand. More goods need to be flown. We see also a strong demand for technical goods, spare parts, for repairs. So that is very strong. But maybe the bigger spillover in terms of overall effect on freight rates is on the Asia-Europe trade lane, where the capacity of the Middle Eastern hub carriers has played an important role. Now that capacity is lacking. So you see tight markets out of India, out of Southeast Asia, especially to Europe. And you will continue to see elevated freight rates up until the situation has further eased and resolved itself in the Middle East itself.
Yeah, and of course, there is a lot of optimism that maybe we get a diplomatic breakthrough in the coming days. And I just wonder, looking ahead, whether you expect to see a permanent realignment, a structural realignment of trade, the way trade is conducted between East and West, perhaps the emergence of new corridors, pipelines that look to bypass the Strait of Hormuz. Is it your expectations that we will see a reconfiguration somehow of some of these supply chains?
I'm not sure. The Middle East is structurally attractive. The inherent growth factors, relatively young population, a very conducive economic policy. I don't think that will change. And people also, economic decision makers, tend to forget pretty quickly. I mean, the region was turbulent over the last 30, 40 years. We as DHL have experienced some of that. So it is not an entire surprise. Now, the conflict might be larger than what we have seen in recent years, for sure, and it's very tragic for the people that are impacted. But I do not believe this will structurally change how trade is facilitated. Trade is flowing, trade is needed. Trade is needed also for people to participate in innovations. Think about pharmaceuticals, medical devices. Those will not be produced in every country. Yeah. Quite the opposite. Those goods get more complicated, more concentrated, and these are goods that need to be traded.
Yeah, I guess a broader question then to round things up about the state of the global economy. Given the demand that you're seeing right now, how would you describe the health of the consumer in terms of where we are in the cycle and the fact that even though we have this war going on, demand visibly is still there?
Well, we have seen this before, that you have crisis situations that are not fully recognized by consumers as having an impact. And then there is this one event, a big plant closure in a Western country, that sparks broader discussion, broader uproar around, the real economic implications for people, and then it flips. And then you see a significant change in consumer sentiment. Now, this hasn't happened yet, and I think there is also a lot of political talk trying to prevent that from happening. But if the underlying economic issue, the lack of supply of energy, the 10, 12 million barrels of crude oil per day, if that is not resolved, it will come to that tipping point. And I think there are many people that are aware of that, and that's why also those discussions are needed, and political momentum is building up to resolve the situation in the Strait of Hormuz.
DHL Group CEO Tobias Meyer, thank you so much for joining our show today. We appreciate it. Well, coming up, UK Prime Minister Keir Starmer's political future may now rest with the official who got fired over the appointment of Peter Mandelson as ambassador. We'll look ahead to today's crucial parliamentary hearing on the matter. That's next. This is Bloomberg.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts April 30th at noon on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. And now to some of the other top stories we're following this morning. European Central Bank President Christine Lagarde says two main factors around the Iran war are hampering efforts to map out a monetary policy response. Speaking in Berlin, Lagarde said the length of the disruption and the potential spillover of energy prices to broader inflation are complicating the ECB's job. U.S. Labor Secretary Lori Chavez Derrimer is leaving her post, becoming the latest member of President Trump's cabinet to exit. The White House says she is taking a position in the private sector. Chavez Derrimer has been under investigation after allegations she engaged in an inappropriate relationship with a staff member, committed travel fraud, and was drinking in the workplace. The Labor Department has denied the accusations. The future of Keir Starmer as UK Prime Minister appears to rest with the bureaucrats he fired over the vetting of former UK Ambassador Peter Mandelson. Former civil servant Ollie Robbins is due to appear before Parliament today and is expected to say he felt pressure to approve Mandelson despite opposition from vetting officials. Keir Starmer yesterday apologised for the appointment.
At the heart of this, there is also a judgment I made that was wrong. I should not have appointed Peter Mandelson. I take responsibility for that decision, and I apologise again to the victims of the paedophile Jeffrey Epstein, who were clearly failed by my decision.
Let's bring in Bloomberg opinion columnist Rosa Prince. So we just heard Keir Starmer saying he's sorry, he's apologized, but he's still facing criticism for claiming he was unaware of the vetting issues around Peter Mandelson.
Yeah, he is. The Prime Minister had a very uncomfortable couple of hours in the House of Commons yesterday afternoon, and this morning things aren't going to get much better for him. Really, that original sin of appointing Peter Mandelson to the biggest diplomatic job in the UK Foreign Service, which is UK Ambassador to the US, it doesn't go away. It's still there, and he was repeatedly criticised for that. And the reason for that is that a lot of the flaws in Peter Mandelson, he had a bit of a shady past, were well known, including his friendship with Jeffrey Epstein, including his business links to China and Russia, and not least the fact that he'd had to resign twice before from the UK cabinet. So a bad decision. Mr. Starmer is doing his best, though, to deflect some of that guilt, at least, by blaming the Foreign Office. So it emerged last week that Mandelson actually failed his security vetting, and yet the Foreign Service still put him forward for the job, said he was clear. cleared. And they themselves admit, Ollie Robbins, the senior official, admits that he did not tell Mr. Starmer about that. And the Prime Minister said he was furious. Ollie Robbins, we understand, will say that was the way that the procedure works. You either are cleared to go or not. And he is expected to say he felt under pressure to push through the appointment despite those security concerns because he thought that was what Starmer wanted.
Yeah, I mean, unless you've been following UK politics very closely, you probably would be unfamiliar with who Ollie Robbins actually is. How much influence is he going to have, or is he likely to have, on Keir Starmer's future today?
Yeah, I mean, in a way, you're kind of not meant to know who he is. So the British government works by having elected politicians that take the decisions and then unelected officials who implement them. And they're meant to keep a low profile. Ollie Robbins was a little bit more well-known to the British public because he had led the negotiations during Brexit. So he was a familiar face to some members of the public, but still relatively low-key. I think that's all going to change this morning when he appears before a powerful committee of MPs and to explain himself. I think it could be extremely uncomfortable for the Prime Minister. He's already an unpopular Prime Minister, and we here are going into big midterm local elections in a couple of weeks. And he had hoped that he was kind of getting his premiership back on track. He had been praised for the way he did not follow Donald Trump into the war in Iran. But that looks like that's all going to dissipate as Mr. Robbins really hits back and seeks not to take the blame for this big mess.
I guess one of the key questions here is, does the Prime Minister have the support of key Labour lawmakers as well? What is his standing within his own party?
Great question. You're right, because no matter how far Keir Starmer falls in the opinion polls, he will stay in his job as long as his own colleagues, Labour legislators, his MPs, choose not to seek to topple him. Now, from what I'm hearing around Westminster, they still haven't reached that point. Partly that is because those elections are coming down the track. But a big part of it, I think, is that however upset they are with him, and they don't think he's a good Prime Minister either. They're very unhappy that the party is doing so badly and that voters have turned against the Labour Party, not least for the populist Reform UK. They do not agree on who they would replace him with. And they're kind of, each candidate is kind of blocked by a faction who doesn't like them. So as long as that scenario continues, Mr. Starmer seems safe in Downing Street.
Bloomberg opinion columnist Rosa Prince, thank you so much. Well, plenty more coming up. We're going to take a look through some of the key charts that we've been looking at today. A big day of events coming up. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Apple has, built up this legacy of an incredible amount of connected devices. And by the way, I think that's the real genius of Tim Cook. He didn't necessarily know which products, but he knew they had to be connected. Now, Turnus is going to take that. He knows which products to develop. So that's what's going to be interesting to watch as we move forward.
Bob O'Donnell from Technalysis Research reacting to the news that Tim Cook is stepping down as Apple CEO. This is a chart of Apple stock over the last year versus Magnificent Seven semiconductor index, the yellow one, the semiconductor index, and clearly shows that there has been a little bit of an underperformance of the Apple stock versus other key Magnificent Seven names in the basket. So again, one of the big challenges for the incoming CEO is how quickly Apple can adopt AI. Switching over, another chart that I'm looking at as well is a front-end yield pricing and the fact that, at least in the case of UK and Japan, two-year yields are trading higher than the base rate, i.e. the market is implying in a rate hiking cycle. Not the case for the US, which is essentially flat. So something to bear in mind into that Kevin Walsh testimony later today. And then switching over, just to leave you with a chart on China, everything in China seems to be trading up, whether we're talking about bonds, FX, and equities. So financial fortress is what our colleague is calling it over in Hong Kong. And in terms of risk events today, watch out for 7 a.m. UK jobs figures, 10 a.m. Germany's zoo survey expectations, and then, of course, that Kevin Walsh Senate Banking Hearing Committee later today. And also coming up later on Bloomberg, we'll be speaking with the Ukrainian Deputy Prime Minister. Catch that interview at 10:15 a.m. London time. The opening trade is coming up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Good morning. It is Tuesday, April the 21st. Here's what's on the agenda. Markets regain their footing on AI, and Iran talks round 2. Will the real Kevin Walsh please stand up? And Tim Cook hands over the reins at Apple.
European markets then, stock markets yesterday, Tom, down a bit, up a bit today is the expectation. Are we happy? Are we in a range? Are we waiting for more news out of Iran? Or are we happy to move higher on the tech themes? That's certainly something that the Asia session likes to run with. But Euro Stoxx 50 futures up by 0.5%. Brent crude also waiting for news out of Iran, moves of 1% to the downside. We're told the Iranians are going to be there. We just don't know exactly who. And the pound, a little bit of movement in the pound this morning, but not much. 135.21. We're waiting for news on the jobs front. Will any of that cut through the inflation, Bank of England and politics, of which there is plenty in the UK? The countdown to the opening trade starts right now.
Good morning. As far as I can tell, the narrative looks something like this. There are talks taking place in Islamabad. The equity market firmly believes that we are going to see de-escalation as a result of those talks, as a result of which we can focus on other things, i.e. the AI trade. The earnings story looks pretty good so far. And, oh, yes, we've got a nice little kicker coming through from lower volatility, which allows the hedge funds basically to re-lever. So all of that's kind of the nice story. But is there something coming after that? And is the market beginning to worry about this, i.e. the fact that we get stagflation further down the road? If the market is worried about this, there's no sign of it. Yes, certainly in the equity markets, because this quarter we're going to focus on tech and earnings. Next quarter, maybe we'll worry about the stagflation story. The bond market's a whole different story, and we'll come on and talk about that throughout the show. But for now, equity markets are quite happy. Yeah,
it seems interesting that a lot of the people we talk to, even if they are saying, no, the market's not complacent, the market is right to move on and focus on these other things, even a lot of those people don't think that there's nothing to worry about in terms of stagflation and an economic downturn. They just think it's not here and now, and it will be countered by AI to some degree. To what extent, we'll have to wait and see.
Citi putting out a report in terms of how the oil tightness that we're seeing could feed into that inflation longer term. With the build-up of inventories, they're saying even if a deal is done this week, it's going to take about 2 years to build back the inventories that have been lost as a result of the closure of the Strait of Hormuz, which kind of builds on that picture, which is what is the time frame for when this really feeds into, particularly on the earnings front, the focus on margins. And we're going to be speaking to Madison Fowler because she's been thinking about this as well at JP Morgan about how to price this longer term in terms of the inflation impact and the concern there, even as they remain pretty constructive on the near-term upside for equity.
It's interesting. Are there things that could come out of the talks? If the talks take place, which it looks as if they will, the Iranians reportedly will be there. If they do, are there details that will matter to the markets in terms of how long any deal is going to last for, or will the markets just be extremely happy to move on?
You know the answer to that question.
Certainly in the short term. They don't seem to want to dwell on the detail.
Yeah, you don't want to dwell on the detail. You don't want to focus on the longer term, because at the moment, things look OK. So let's not rock the boat. But clearly there is going to be a problem further down the road. The bond market's really interesting as well. What does the bond market do with this? Stagflation is the worst outcome for the bond market, right? But the bond market at the moment kind of can't decide if that's the kind of the central case, or whether or not you get a de-escalation which allows oil prices to come down, which takes inflation off the table, or whether or not you get a growth shock which takes rate hikes off the table and delivers rate cuts. So there's kind of multiple scenarios there as well. So the bond market almost feels like a rabbit hole caught in the headlights as well. The equity market seems kind of more nimble and sort of, we'll just take the good news for now. The bond market looks...
Because there's more risk premium priced in at the front end of the bond market.
Yeah.
Isn't there? I mean, they're above the base rate for these central banks, but above 3.75% on the 2-year for the Fed. So there's a suggestion that there's a bit more risk premium at the front end of the bond market and maybe a bit more complacency in the equity markets. But there's 2 deadlines that President Trump is looking at as well. which is China and the meeting in China, and that's in May, and wanting to clear the decks on Iran before he gets there. And then longer term, of course, the midterms. So two of those factors you can assume are playing into the thinking of the president who wants to get this deal.
A bit more pressure applied by China to the Iran situation over the last 24 hours, which is interesting.
So if you're the next Fed chair, what do you do with this?
Well, what do you do with this? And will this matter to markets? I know that John Author's putting out a piece saying that nothing that Kevin Walsh says today in his Senate testimony is going to really matter to markets. But I mean, you know, let's dwell on it for a moment, because it might. There are things that he could say that might. I mean, the reason he says that, of course, is because Tom Tillis is still standing in the way of him actually getting confirmed. But let's see. I mean, we've heard from him already. He's put out some details in a note that Bloomberg has seen about what he is going to be saying. And a lot of it comes down to, it sounds like a pretty kind of traditional Wall Street Republican view of stay in your lane. You know, the Fed does monetary policy. The Fed should do monetary policy. It shouldn't do social policy. It shouldn't do fiscal policy. It should just do what the Fed, you know, the FOMC is designed to do. So there'll be a lot of that kind of messaging. But it might be more interesting how he responds to the questioning, which will be a lot about Fed independence, of course, but also, as you said yesterday, around the balance sheet. And also, Elizabeth Warren has been trying to ask him through written questions. You know, has he promised President Trump anything? So all of that about his relationship, the way he sees the relationship with President Trump when he's in office, could be interesting. At least, you know, something to get the popcorn.
What happens when he doesn't cut rates? How does Trump respond?
For how long does Trump hold back? And Scott Bessent,
not long,
Scott Bessent has recently said, you can have a bit of time, and then the president came out the next day and said, no, we still need lower rates. So yes, Fed independence. He's been pretty consistent on the question of the balance sheet. He hasn't been consistent on the question of inflation and how the Fed should respond to that, and changed more dovish in 2025. So how does he answer that question? And then there's a question about the structure of the Fed and Fed presidents, and whether or not, for example, investigations into people like Lisa Cook are something that he would support, the firing of Fed presidents. So those kind of changes as well. So there was a lot that he's going to have to dance around to try and find that balance.
And I know you're going on to talk about tech, and actually he's got some interesting views on AI and the inflation dynamics around AI, and he's been emphasising recently the deflationary narrative around technology. So we'll see if that comes out.
Maybe that is the cover for Kevin Walsh, as he points out to the future, AI productivity gains. That's going to lower inflation, and that allows you to push rates lower. Major news.
Let's talk about Cook
in terms of Tim Cook. So he's going to be stepping down September the 1st. Mark Gurman of Bloomberg had reported that this was likely to happen, and had also reported as well prior to today that John Turnus was going to be taking over, and that's exactly what has been confirmed from September the 1st. Just looking back at Tim Cook's reign as CEO, the stock is up about 2,600% since Tim Cook took over 15 years ago. The market cap's gone from about $300 billion US to a little over $4 trillion US dollars. So in terms of investors in Apple stock, Tim Cook has performed for you. There have been some missteps along the way, of course, but otherwise this is a robust business that he's handing over, with questions particularly when it comes to AI and how they respond to that.
Isn't he a hardware guy?
John Turnus is a hardware guy, yeah.
Don't we have a software problem, i.e. an AI problem at Apple?
We do, and they're leaning heavily on Gemini, they're leaning heavily on Google to resolve part of that. But is that a long-term strategy? Is that something that they're going to be comfortable with?
Why have they picked a hardware guy?
Because hardware, agentic AI, embedded devices, embedded AI in devices, robotics, all of that is still going to be central to Apple and their competitive edge. And they have this touch point across billions of consumers worldwide, and it's hardware that has made that possible for them.
It is interesting, isn't it? Because one of the missteps that you talk about was around the car and the autonomous driving. So, you know, that was a, I mean, I guess it was software and hardware, but it was a very big bit of hardware that didn't really work out. I was looking at some of the ideas that they've got that they're working on at the moment. New smart glasses, new AirPods, all sounds pretty standard. A pendant with a camera, frankly, sounds a bit spooky. And what I read is a tabletop robot, but it's not a sort of, you know, just little robot doing acrobatics, which I thought it might be. But it's actually more of a screen.
That's your dream still, isn't it?
It's still my dream.
No, Anna's dream is a robot that chases pigs or balls or whatever they were.
Oh.
Wasn't it? That's what you got excited about the other day?
Yes, sort of, yes.
Yes.
Long story.
Thilan Nugent is Commerzbank's commodity and FX research head. She'll be with us shortly. Madison Fowler, JP Morgan Private Bank global investment strategist, here as well. Rob McCare, former UK ambassador to Iran. He's going to be with us in the second hour of the show to talk geopolitics.
Yeah, he's got really interesting views on maybe divisions within the leadership in Iran, and what that could mean for talks as well. Let's get ahead and look ahead to what else we are watching throughout this Tuesday, 9 a.m. UK time. Then Ollie Robbins, the testimony, of course, from the former senior Foreign Office official, who, of course, the UK Prime Minister has accused of not telling him about a particular vetting procedure for former UK ambassador to the US, Peter Mandelson. So that testimony is going to be very significant for the fortunes of the UK Prime Minister. We'll bring that to you, of course, and be across that. 10 a.m. UK time, the German ZEW survey. So a touch there, an update in terms of the health of the German economy. 1:30 p.m. UK time, we're going to get US retail sales on the consumer. And 3 p.m. UK time, it is Kevin Walsh, Fed Chair, hearing, of course, hoped for Fed Chair, from Kevin's position at least. That hearing will be covered for you on Bloomberg TV, of course, with all the analysis. And at 5 p.m. UK time, on the earnings front, within the semiconductor hardware space, ASM International earnings.
Let's get to, well, we should linger on the UK maybe a moment, because just in a couple of hours we're going to be hearing then from Ollie Robbins. So that's the politics, and politics is clearly centre stage. But we do have some other data out right now. December to February, wages, excluding bonuses, rising 3.6% year-on-year. The estimate was 3.5%. But this goes to February. I don't know if anything before March really scratches the surface. It doesn't seem to be moving the pound. Might not move gilts. Gilts much more interested in the future leadership of the Labour Party and the Bank of England inflation narrative at the moment.
Which of those two things do you think is the dominant driver at the moment?
Until May the 7th?
Well, precisely. Well, maybe earlier. Who knows what's going to come out of today's hearing with Ollie Robbins. The Prime Minister clearly has a number of significant risks that he faces right now, but this is the most clear and present one. But you do wonder, with those elections, those local elections coming up, whether he survives until then. I don't know. How is the bond market going to react when he goes? How is the gilt market going to deal with a potentially more left Labour Party leader being in number 10? I don't know. Who's the next chancellor? There's so many questions around the gilt market right now. Yeah. But the data's not telling us very much.
Do those who want change, do they really want Andy Burnham? If they do, it's a long game. They've got to wait a long time for that to happen. So that's a totally different sort of time horizon. That takes us in the march to the next election.
And even as the Prime Minister stays, will he have to make concessions to the left of the party, which will mean more spending anyway? So in any scenario, there is a reading that you're going to get more spending and more pressure on the bond markets. How much is priced in at this point remains a question.
Again, how does the gilt market react to this? At the moment, the gilt market's sitting on its hands, kind of watching all of this, isn't ready to move quite yet. OK, Tuesday morning, what else do you need to know? Amazon shares rising after the bell in the US following news that it will invest an additional $5 billion in Anthropic and may inject $20 billion more over time. Anthropic, which of course is the maker of the Claude chatbot, also plans to spend more than $100 billion over the next 10 years on Amazon Cloud Services and AI chips. Amazon is one of Anthropic's biggest backers, with prior investments totaling $8 billion. Ukraine expects oil to resume flowing through the Druzhba pipeline as soon as today, clearing the way for the European Union to unblock a much-needed €90 billion loan for Kyiv. The pipeline supplies Hungary and Slovakia with Russian oil, or did so before it was damaged in an attack in January. EU leaders approved the loan in December, but Hungary later blocked the disbursement of the funds, with outgoing Prime Minister Viktor Orban conditioning the aid on the resumption of oil flows. And finally, the German Chancellor says his government rejects, quote, hostile and aggressive tactics in the German banking industry. Friedrich Merz was speaking to German banking executives after Commerzbank formally rejected UniCredit's takeover bid. Merz made clear that his reference was to, quote, recent events, without explicitly naming Commerzbank. UniCredit's CEO, Andrea Orcel, had earlier issued a stinging criticism of the German lender's strategy, and he will be speaking to Francine Lacqua later this morning. You can catch that interview at 9 a.m. UK time.
Coming up on the programme, global airlines are feeling the pressure as jet fuel prices reach new heights. We will discuss how carriers are planning to manage the energy crunch. Plus, Kevin Walsh heads to the Senate with his confirmation for Fed Chair in limbo. We will discuss the potential roadblocks ahead for Walsh and what to expect from his testimony. Up next, we'll be joined by Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International. How should you be positioned in these markets as we head into these talks in Islamabad? IB plus BBTV Go is the function to use on the Bloomberg terminal if you want to get involved in these conversations. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Welcome back to the opening trade. Now, President Trump has told Bloomberg he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire on Wednesday evening, Washington time. Meanwhile, Bloomberg understands that Tehran is preparing to send a delegation to Islamabad for talks after earlier casting doubt on its participation. For more, we're joined by Bloomberg's Jumana Basechi in Dubai. Jumana, take us into the prospects then of what we should expect from these talks. What would it mean for a ceasefire? We do expect the Iranians to go, which is progress on this time yesterday.
Yeah, well, preparations is most definitely underway in Islamabad, though we're getting close to noon, lunchtime over here in the region. So I think at this point, it's fair to assume that if the discussions do happen, they're probably going to happen tomorrow. Also of note, J.D. Vance, the vice president who is leading the U.S. delegation, hasn't left the U.S. yet. So you've got to assume that if there is going to be another round, it will probably happen tomorrow at some point. Now, yesterday, President Trump did speak to our colleague Jeff Mason, our White House correspondent, and did tell him that he is going to extend the ceasefire deadline by 1 day. So that takes us to Wednesday evening, which also suggests that there's a crucial 24 hours of a potential for a diplomatic breakthrough coming up. Now, to your point, we still don't know who exactly from the Iranian side is going to be participating, if indeed they will be participating at all. There have been numerous posts, various comments coming through from officials and Iranian leading negotiators, including the Speaker of the Parliament, Mohammad Ghalibaf himself, who said Trump seeks to turn negotiating table into surrender. We do not accept negotiations under the shadow of threats and have prepared new cards for the battlefield. This is echoed also by Iran's ambassador to Pakistan, saying that they will not negotiate under threat. And basically what they're saying here is as long as the U.S. naval blockade persists, they will be less incentivized to participate in this next round of discussions. So right now we're in a bit of a standoff where ultimately the president has to make a decision about whether he wants to maybe perhaps temporarily lift the U.S. naval blockade that's in place in order to facilitate this next round, or, and the alternative is you allow the ceasefire to pass, and both sides are saying that they are ready once again to militarily intensify operations. So again, I've said this many times, but we are heading into a crucial 24 hours, and whether these Islamabad talks actually go ahead will be critical for where we go from here.
Absolutely. Jumana, thanks for the update. Always appreciate it. Jumana Basechi joining us out of Dubai. Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International, joining us around the table. The equity market thinks that we are going to get de-escalation. Is that the right trade? Is it right to focus on AI and tech and all the other things that are going on in equity markets right now? Earnings are looking pretty good. We've got a re-leveraging of hedge funds. Is that the right signal to take from what we are hearing Jumana talk about?
So I think equity market is right to focus that right now we are in this posturing phase. There's a lot of noise. We have been in this camp of messy resolution. But you can argue that there's, and for justified reasons, that there's a lot of focus on the earnings. And those earning numbers which are coming out include March, which was that 1 month of hostilities. So I think that is giving that confidence in equities. But at the same time, bond markets have locked in some permanent increase in yields. So there is this, and oil is significantly up.
Is the bond market right to do that? Because there's also an argument that's floating around that's basically saying bond markets are wrong right now, and that what you're going to see is either de-escalation and the oil price comes down and the inflation premium comes out of the bond market, or you get a growth shock, which basically forces central banks not to hike, but actually to cut aggressively.
So I think we are in the camp that, the short end may have gone overreacted to this shock, especially if a de-escalation starts to take hold. But I think the main issue here from a medium-term perspective is the long end, because every government in the world is going to have to spend it on defense. Right. You are going to have hoarding in oil. These are choke points which have been activated, especially for Asia in this case. And China template was that you hoard, you can pass through this shock. So I think and that also means that oil may have to, in addition to logistics issues, may carry a more permanent premium. So our expectation is $80, $85 average oil. So bond market, I think long end is the one which we'll be focusing on as the fiscal pressures again rebuild, especially on defense, energy resilience, more domestic capex. So these are the more longer-term permanent themes which are probably going to come out of this shock.
So that $85 view on oil, when does that start to factor into the earnings story? It's not the quarter we're looking at now, clearly, because the markets are looking at upgrades to earnings. When does that become an issue, and where do you see margin vulnerability?
So I think this current quarter is because the oil has been up for more than 6-7 weeks now, and we do expect that even if an announcement of a deal comes in, and also I think devil is going to be detailed in the deal as well, how clean it is, how sustainable it is. I think a lot of other questions, but so I think as we go through this Q2, we should see this start to feed. The jet fuel prices, all the products have been elevated for some time. We don't expect them to go to pre-war levels, and the vulnerability areas are the consumers of energy, and geographically that means that the low-income countries in Asia are going to suffer a semi-permanent shock. U.S. is immunized. They have a lot of oil. Their exporters, probably WTI, will start to, come back to pre-war levels, but not Brent and not the grades which were passing through the strait. So I think this is a dislocation at its core. Doesn't mean it's a systemic issue, but certainly there are going to be winners and losers. And I think low-income countries in Asia, and then specifically the sectors which are consuming these products, we think are going to see margin pressure.
So how do you think about allocating around that dynamic?
So basically, we are waiting for two things. As this de-escalation comes in, I'll start with FX. We expect that FX depreciation, the dollar depreciation will restart. As the diversification flow starts to come in, gold will probably start to do well again. Then if you go to bond markets, as I mentioned, long end, steepening of the curves, governments are going to be spending money, and then when you come to equities, we are going to start reallocating away from US back into some of the beaten up areas in EM. LATAM looks great, energy resilience plays, and real rates in some of these countries. So I think this dislocation for us starts to create opportunities, but again, this de-escalation has to happen. All this goes out of the window if we have a breakout of war.
Yeah, let me ask you about that de-escalation then, Salman, because I appreciate that in the first instant, the response in markets might be quite binary, deal or no deal, up or down, risk off, risk on, whatever. But what is it about the detail then that will matter? What is it that keeps oil prices, energy prices relatively elevated?
So I think in terms of the deal, there are two things we are talking about. If you cut the noise, the strait, that's the jugular vein. Who controls the strait? at what terms, and the risk that the strait can be weaponized again. Right, so I think there was, if you remember in the last Islamabad 1.0 talks, there were some leaks that, US and Iran were talking about a joint venture on the tolling. So, that story didn't take hold afterwards. But I think what is the status of the strait? Can Iran do the tolling? Please remember that 80% of the traffic from the strait goes to Asia. Most of that goes to China. Europe obviously is second on the order, usually on the gas side. So it's a very geographical, geopolitical game which is happening. And I think the status of the strait is going to be the most critical one.
OK, so we watch the status of the strait. On your EM Asia calls, Salman, there is a view that actually this becomes a fiscal story in Asia because governments act to protect the people from higher prices, more so perhaps than in developed markets. Is that something that worries you with your EM call?
So some of the lower income EMs, for sure. Right now, I think some of these countries are having molecule shortage. So, even if they give fiscal, they're not going to get the molecule. Like countries like Pakistan have used their army and navies to get the tankers. I mean, India did some deals, but the smaller countries have not been able to do that. So the second story is if oil remains elevated, how these countries will fare. That's why we like LATAM, the commodity plays. We underweight India. We still think that, India it will suffer from the AI issue. And also elevated oil prices. So there are some specific, differentiation plays which potentially will start to become more cleaner if the de-escalation comes through.
OK, Salman Ahmed, thank you very much indeed. With that view on the markets in light of the geopolitics as we continue to expect and monitor, of course, developments on the ground in Islamabad, coming to us from Fidelity, of course. So there is and remains the key focal point, Salman point. We can think about the uranium deal. We can think about all sorts of different parts of this conversation between the US and Iran. But it's really all about the strait and what comes out on the back of these conversations if we assume there is going to be a deal.
Equity markets focusing on the AO trade. Bond markets sort of focused on inflation, growth, stagflation. Oil markets still kind of focusing on the idea that actually we've got a problem here.
We will tell you, we will, in fact, continue these conversations. We'll talk FX and commodities with Thulan Nguyen. That conversation from Commerzbank coming up shortly. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Tuesday the 21st, 30 minutes ago until the start of equity trading here in Europe. European equities were down, let's call it circa 1% yesterday. Today we're up a little bit, but not as much as we lost yesterday. But nevertheless, the positive narrative in equities still seems to firmly be there. We're keeping a close eye on Islamabad. But also earnings today. It's a huge day for earnings in the United States. Names like GE, Boeing, all these kinds of names are going to be reporting earnings later. So that earnings narrative will be there as well.
Yeah, absolutely. So the earnings narrative rubbing up against the pre-existing tensions around Iran, although increasingly moving through that, it seems, from a market's perspective. From the bond markets then, which have been preoccupied by the inflation dynamic coming out of the Middle East, this is the picture right now. We see at the margins some buying of European bonds and those yields going down a little. We will watch with interest what happens to gilt markets. They had plenty of time to respond, of course, yesterday to what Keir Starmer was saying in Parliament. We ended the day up 7 basis points on the 10-year gilt yield. We'll see if there's another day in that story as we wait to hear from former senior civil servants at the Foreign Office.
Meanwhile, today oil and gas lower in today's session, slipping this morning on signs that Iran will attend negotiations with the US in Islamabad before the ceasefire between the two sides comes to an end. Tulan Nguyen, head of FX and commodities research at Commerzbank, joins us now. Tulan, thanks for your time. Happy Tuesday. If we do get a deal in Islamabad, whatever the nature and makeup of that deal, what is the likely snapback in oil prices if a deal is come to on this second round of talks?
Well, I think we've got a taste of such a reaction at the end of last week, right, when the Iranian leadership announced that the Strait of Hormuz was open, and so we immediately dropped back below $90 per barrel in Brent oil. So I think something similar would happen if we were to hear an agreement tonight. However, I think the last couple of days were also a lesson to the market in terms of how reliable any kind of announcement is. So it really depends if this announcement is a joint announcement, is it only coming from one side? So the details will certainly also matter.
We were speaking to Fidelity earlier on the show. They got a view of $85 a barrel on Brent on the assumption that there is some kind of deal or lasting ceasefire. What is your understanding of the ability to get physical crude back onto the markets if the Strait of Hormuz is reopened, and what the lag and time frame that we should be looking at is?
I think $80 per barrel in Brent oil actually until the end of the year is something that we are looking at. So that already shows you we're looking at a continued relatively tight supply, even if there were a solution to the conflict and the opening up of the Strait of Hormuz in the next couple of days. So I think it will be rather difficult, and it's not only about a normalization of the shipments through the Strait of Hormuz. It's also obviously about reparations of energy infrastructure in the region. I mean, you probably have heard IEA chief Fatih Birol has said that more than 80 energy assets have already been damaged in the region. So that will also take up time to be repaired. So against this background, I think it will take a couple of months until we will see a significant uptick in production and shipments from the Gulf region again.
Tulan, good morning. Can I ask you about Chinese oil stocks? To what extent do are they still very well provided for in China? Because they had been doing a lot of work to stock up before this happened, of course. But we have heard the Chinese leadership being quite outspoken now, moving to a new phase, perhaps, in the language they're using about the war.
Yes, I think they're in a relatively comfortable position right now. We've seen, we don't have official numbers, obviously, but we can deduct the amount of stocks from imports and obviously domestic production. They're at quite a comfortable level. And they have driven stocks up quite significantly over the past year, which is obviously very beneficial at the moment. And at the same time, China is also restricting the export of oil products. So on that side, I think they're rather comfortable as well. For them, obviously, there is a room to obviously wait this out to some extent. But at the same time, I think they are one of the main receivers of oil from the Gulf region. So that's also in their interest that this conflict will be resolved soon. Even though stocks are rather comfortable, they will not last forever. And so I think it's also in their interest to put some pressure on Iran to find a solution to this conflict.
And Tulan, what kind of messaging are you taking away from the extreme, the structure of energy prices right now, the backwardation, extreme backwardation that some are describing?
Well, time spreads have come down somewhat, obviously, and that goes hand in hand with the fact that the oil price, so the most traded oil price contract has come down. Markets are relatively relaxed. They are betting on some sort of resolution of this conflict. I mean, obviously, I think no one is naive enough that they will think that there will be a lasting solution to this conflict, but at least a simmering down, basically a return to the status quo that we saw before the outbreak of this war, where there were always talks taking place, and obviously sometimes they were talking, sometimes not. We saw some volatility in that even before the war, but obviously not to the extreme that we've just seen. And I think it's rather likely that the market is betting on a return to that kind of situation. And that shows also obviously in the curve. But even there you can see that a price of around $80 per barrel is also priced in at the end of the year, which is significantly higher, obviously.
Are we going to see shortages in Europe?
That depends very much on how long the Strait of Hormuz will remain closed. And obviously, one of the most severe situations or critical situations we see obviously in the jet fuel market, particularly here in Europe, because 75% of our imports came from the Gulf region. And at the same time, we are already seeing that our stocks are declining significantly at the 6-year low. So if this goes on for a couple more weeks, then sure, you can see some shortages in jet fuel at least.
Okay, looking forward to that. Tulan Nugent, head of FX Commodities Research, joining us from Commerzbank. Tech investors are welcoming Apple's change at the top, it seems.
Well, it's been time for change with AI and so much innovation in software that really Apple has fallen behind on, despite their hardware being so excellent. This is a great move for Apple.
Gerber Kawasaki's Ross Gerber speaking there. We're going to have more on Tim Cook's retirement as CEO at Apple and what to expect from the new boss, John Turnus. We'll talk about that next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back. This is the opening trade. Just under 20 minutes until the start of cash equities trading, and we are expecting a little bit of upside, but we do seem to be, Tom, in a bit of a holding pattern where we focus on tech because we're still waiting for news out of the Iran talks, which look as if they probably, possibly will take place, but we got maybe another day of this.
Yes, probably, possibly. I like the framing around the conversations in Islamabad, expected to take place. But yes, there has, for the markets, been this big focus on AI. NASDAQ 100 has 13 straight days. It was snapped yesterday, but futures are pointing higher today, and you've seen strong momentum in the Korean session again. We're going to be keeping an eye then on European chip stocks as well. That's as easing geopolitical tensions, potentially, and a revival in the AI trade bolstered Asian equities. The Kospi hitting a record over in South Korea. Let's get more from Bloomberg senior strategist Neil Campling. Neil, how's the AI trade looking to you?
Renewed optimism. Again, I think part of it is because if you look at where earnings growth is globally, much of that is driven by the tech sector. Within the regional, you mentioned Kospi. Kospi is very heavily dominated by the memory companies out there, which again, it's all the AI, massive earnings upgrades coming through for this year. We've seen spot prices for memory going through the roof as well. We've seen Amazon's investment, again, talked about overnight in Anthropic. So there's huge appetite in the AI trade right now. We'll have to wait and see what comes out from the earnings season in terms of the growth rates from the hyperscalers. That'll be a key point, as will CapEx, obviously, for the time being. Huge numbers expected there. So there's a lot of optimism in the AI trade, and partly because, of course, it's kind of insulated from oil shocks and insulated from some of the other elements that we're seeing in other markets. But I've got a feeling that your colleague is about to say, is it too good to be true or similar?
Well, I'm going to laugh because traditionally chips have been cyclical, and it seems they're being priced not to be cyclical now. But hold that thought. I'm not sure we've got time to debate that whole thing.
We need to talk about this again tomorrow, so we can save that.
So there's plenty more time to
yeah.
Changing of the guard at Apple. What does it mean?
It's been expected for some time, although the timing is slightly earlier than expected. Internally, apparently, he is known as Tim Jr., coming from an engineering and hardware background, so no real surprise there. Yeah, so it's a fairly seamless kind of transition. When Tim Cook came in at the helm himself, there was lots of challenges that Apple faced. One thing that is quite simple under Tim Cook's leadership, Apple's market cap has grown from $350 billion to $4 trillion, which is pretty impressive.
Not bad work.
There's lots of questions around, obviously, what is going to happen now. We have time to get into that debate, but there is a lot of issues, if you like, potentially facing the new CEO.
Yes, and we were asking at the top of the programme, if the problem has been AI and maybe being a little later than they'd have liked around the AI dynamics, then is that really a hardware solution to solve? And if it isn't, why is John Turnus, with his hardware background, why is he the right guy? But maybe you have answers as to what the challenges are.
I mean, the integration of the Apple platform has always been about hardware and software integrating seamlessly. That's always been Tim Cook's ethos, which comes from Steve Jobs' ethos. Where we are challenging it now, clearly, is that we're going through a massive potential new hardware cycle for Apple, actually, with the foldable iPhones that are expected later this year. With regards to AI opportunities, well, we could ask Siri, but I'm not convinced we're going to get a great answer. That has been a challenge for them. They've not massively invested in AI themselves, but often Apple is a fast follower rather than a leader in technology, which it's quite easy to forget. Challenges are faced in terms of globalization or the risks about the reliance on the Chinese manufacturing footprint. These things have been ongoing for quite some time at Apple, but clearly they do face lots of challenges, whether it's in AI, whether it's in new products, whether it's in new growth drivers for the business. But at least we have a continuity in terms of leadership, I think.
Poor Siri. It's the whipping child, really, of the failures of Apple to embrace AI. It's called by my young children in our house Silly instead of Siri because of its failure to react. Tim Cook's not going anywhere, though, is he? What's next for Tim Cook?
Well, he'll move up into the chair role, so still clearly the oversight on the business, and so I think that probably not much change in terms of on the philosophy of the company, but in terms of the day-to-day management, that's where you'll see some changes.
It sounds like a full-time job, what he's going to move on to, because if you're dealing with the US government and the Chinese government and you're doing all of that's a big part of the role, and if it allows the hardware guy to focus on the hardware, then maybe that's a good idea.
He can focus on technology, and Tim Cook, who's already a brilliant diplomat, comes into the fore as the key diplomat really going forward, as you say, because those relations, especially with these dynamics of tariffs, remember those last year? Yeah, they could come back in focus as well. So, yeah, I don't think Tim's going to be spending the billions just yet.
OK, Neil, thank you very much. Neil Campling joining us there to talk about technology. Let's turn now to today's markets in 3 minutes on the opening trade with Adam Linton from the Markets Live team. Adam, good to have you with us. I mean, should we rerun our conversation of yesterday about whether stocks are too complacent? I mean, they were down a bit yesterday. They're supposedly up a bit today, so maybe there's a different complexion to it. But what are you watching for? We just had a conversation about how some of the specifics, actually, of any deal out of Islamabad might matter to markets.
Yeah, I think that's a fair assessment. It's pretty remarkable. Basically, closed that opening gap from Sunday that we saw in the ES, and I think basically the market is still, as we've been saying, it's looking through a lot of the US-Iran noise, providing there is a direction of travel for a deal. So obviously, we don't know necessarily if Iran will attend talks, and we don't know if the ceasefire necessarily will be extended. The market for now is looking, optimistic and hoping that we will get some sort of extension of a ceasefire. But that can only take you so far. If they keep rolling and rolling this ceasefire and Hormuz remains closed, then that is obviously going to be a sticking point for the market. But it's not really looking to price that at the moment. Instead, what you've got filling the void is you've got this optimism, as Neil was just discussing. Then you've also got a relatively upbeat earnings outlook for Q1. You've seen Morgan Stanley, Goldman Sachs, JP Morgan, all relatively positive. Yes, Q2 may be a slightly different story, maybe a bit more downbeat story, but for now, the market just isn't really pricing that.
GE, RTX, 3M, Northrop, Halliburton, GM all reporting numbers today. I think Boeing's tomorrow. I spoke a little bit earlier. How much of this is to do with the fact that hedge funds are re-leveraging, that you've still got the CTA still kind of pushing pretty hard, the Fed's pushing money into the system as well? Is there a kind of background liquidity story here which I'm missing?
Yeah, I think that definitely could be a factor to some extent. We've seen a lot of the CTA activity. We saw it last week. We've seen it follow through into this week, and that's definitely giving some extra juice to things. But I think also it's a case of attention's market span. We've had all this US-Iran conflict, and we are kind of slowly moving back towards some of the things which have proved supportive in the past. Like I said, this AI optimism, which, if you're in Asia, you're seeing the Kospi hit record highs. You're seeing gains to the TAIEX. There's also, you don't really want to be missing out on that rally because you can, have a bearish view, but it just isn't holding water at the moment.
How challenged is the UK right now? We had jobs data suggesting that there's been a further 11,000 cut to payrolls. Part of the energy story seems to be in the mix there for employers. We've got political risk on the horizon. How's the UK looking?
Yeah, so obviously, the caveats for today's UK jobs data, a lot of it was pre-conflict. And I think for the UK, obviously, that March data you said, that was relatively negative. I think we need to see the totality of this week's data. So we've got inflation on the data slate tomorrow. That'll give us a bit of an indication as to what the immediate energy pass-through was. I think the PMIs might actually be more interesting. So we saw last month, I think it was input inflation for manufacturers. That was the highest since Black Wednesday. So we need to kind of see how that plays out. But that may be something which takes a few months to become slightly more obvious in the data. I still think there's a reticence on the Bank of England to potentially hike rates, so you could see yields come down. And then if you are looking for a steepener candidate, the UK could be one, because as you mentioned, we do have a lot of this UK political uncertainty, which could be on display today, as we do have Ollie Robbins delivering his testimony today.
Adam, thank you very much indeed. Yeah, we'll be across that, certainly the UK politics, with that testimony starting at around 9 a.m. UK time. Adam Linton from our Markets Live team. Remember, you can get up-to-date analysis and insight from Adam and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch this Tuesday with Chloe Melly. Chloe.
Good morning, Tom. Things are getting increasingly tense between UniCredit and Commerzbank. UniCredit came out yesterday criticising Commerzbank's structural weaknesses and story of underperformance. And Commerzbank reacted quite strongly to that, with the CEO saying she was astonished that it took UniCredit more than 18 months to come up with a plan that lacked such a basic understanding of the business. We also had the German Chancellor Friedrich Merz criticising UniCredit's takeover efforts, saying that he rejected hostile and aggressive tactics. So we'll be watching out for any movement there for those two as those tensions grow between the two banks. Moving on to defence, where Thales is in focus today. The French defence company reported a big surge in orders for the first quarter, specifically in the defence segment, and sales also beat estimates kind of across the group. So we'll be watching out for any impact there. It said that the war in the Middle East had really reinforced the relevance of its solutions, its defence products, especially air surveillance and air defence systems. So we've seen the shares kind of zigzag a little bit over the last few months, but we'll see if today's trading update is really enough to sustain that about 4% rise year to date. And finally, AB Foods is going ahead with the separation of Primark from its food operations. This is a demerger process that is set to complete by the end of 2027 and will result in both entities being listed separately on the London Stock Exchange. And so we'll watch out for any market reaction there for the breakup of one of the UK's biggest conglomerates, especially when we've seen a lot of weakness, as we can see here, for the AB Foods share price.
Chloe, thank you. Chloe Melly with some of the stocks in focus. Let's add to the list with a couple of UT companies. In particular, headlines out this morning that suggest the UK is going to apply a higher tax on older renewables, and that tax is going to go up to 55%. And this is an attempt to try and persuade those on a particular renewables tariff to move away from that onto something newer, which will try and reduce the role that gas prices have in people's domestic energy bills, basically. Because at the moment, because of marginal pricing, even if you don't use that much gas, you still end up paying the gas price more than you perhaps should do. So that's part of what's happening here. And it has weighed on those companies in the past, that story.
Sounds complicated.
Yes, anything that involves contracts for difference.
Precisely.
It is complicated. What is not complicated? Well, what will be also complicated is people's trips home today.
I can see there's still a lot of cars out there. Which is maybe going to change. We'll see what happens with the oil price. But for now, we have a tube strike in London. So public transport, bicycles. It's a nice day out there. So I would sort bicycles and walking to the fore. Yes.
You're embracing this.
Well, yes. Walking is going to be a bit of a struggle.
Yeah.
But bicycling, I think, could be the way forward today, if you can get one.
The strikes will see the Piccadilly and Circle lines closed entirely, as well as the Metropolitan line between Baker Street and Aldgate. Central Line services will not run between White City and Liverpool Street. That's your travel update.
Great.
Yeah, keep an eye on.
It's remarkable how relaxed Guy is when he has to head back to the Shires. With no,
anyone would think he's not very exposed to tube travel.
I have been known to take the tube every once in a while, but it's a nice day out there.
It is.
Back on the bike.
Watch out for UK home builders as well. Crest Nicholson cutting its guidance. I was trying to take us on to lighter territory, but that didn't work.
Yeah, I think Looks nice out there. That's lighter territory, isn't it? Anyway, the markets are about to open. We're about 5 minutes away. Looks like futures are pointing a little bit positive this morning. We are really into the thick of the earnings season over in the United States now, which I think is going to be a real kind of touch point for these markets. What are the big names going to be telling us about how they see their businesses developing from here? Q1 earnings, are they going to tell the story, or is it going to be the statements we get from the companies that are going to tell us the real story?
Big tech next week.
Big earnings coming through from the tech sector, and a gauge on what's happening, of course, in terms of that demand. The Asian session has been really strong again. The Kospi at a record level. Taiwan stocks are performing very strongly as well, and across the benchmark over in Asia, gains of 0.8%. So that's a decent handoff for Europe. The opening trade coming up. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Tuesday morning, good morning. A couple of minutes to go until we start equity trading here in Europe, cash equity trading. Yesterday's session for Europe, we gap lower and we basically hold that loss throughout most of the session. Finished down, let's call it circa 1%. That is about here. The US afternoon basically delivers not much upside, so there's not much to price in, just a little bit, and that's what Tom's seeing maybe on his futures this morning.
Yeah, European futures pointing higher by 0.3%, so some modest optimism on expectations that those talks will take place in Islamabad. We haven't had a confirmation yet, but it's pointing in that direction. FTSE 100 futures looking to add at just 11 points, pointing higher by 0.1%. Energy was supportive for the FTSE 100 relatively yesterday. Different dynamics at play today with oil prices and commodities, iron ore, copper and silver all a little weaker in the session. So watch the miners. DAX futures pointing higher by 0.7%, pointing higher by 73 points. Anna.
Let's also keep an eye on some of these individual names and sectors. So AB Foods could be in focus. We've had an update from that business. It's a diverse business, of course, covers retail but also food, as the name suggests. Barclays saying that the stock could fall on weaker sugar and softer Primark. And Primark is where the market often focuses, and they've been quite cautious on their statement there with regards to the Middle East. Watch defence names as well. Thales, organic sales growth coming in ahead of estimates, but we've also seen downgrades from brokers to Safran and Leonardo, so that's going to be a sector to watch. And renewables in focus, watch SSE and watch Centrica. A higher taxation on some parts of their business could be part of a wider narrative of trying to get these power companies to embrace a newer pricing model that delinks power and gas prices in the UK. So that's also part of our focus. So we'll watch those, and we'll watch UK house builders as well, Guy.
Lots to watch. Let's take a look at the numbers. Let's give you an idea of how European equities are opening this morning. We're expecting a small jump at the get-go of trade this morning. Yesterday we were down, as I keep saying, around 1%. So you just factor that into your thinking when you see the numbers that are about to pop up on the screen in front of you. FTSE absolutely flat. Yesterday maybe one of the outperformers as we saw oil trade, the oil trade doing better, names like Shell and BP having a better session. So the FTSE's fairly flat at the moment. We're expecting the stock 600 to be up by 2/3% once we start getting a few more names giving us an indication. CAC 40, DAX, AEX, IBEX not giving us much at the moment. We'll wait and see exactly what they deliver. We've got the full suite. There you go. CAC 40 down a touch. DAX is up by 0.3, AEX up by 0.3, IBEX is up by 0.3%. To be honest, not a lot to see here in terms of the overall headline index number. So, Tom, what have you got at a sector level?
Top of the sectors right now is tech, up 1%. That's a subject we've been working through this morning, of course, and we've been talking about the fact that the Asian session was very strong on the back of the AI trade, a lot more investments, some innovation, some companies listing. That's all providing that momentum. So tech is top of the list in terms of the sectors so far. Interestingly, followed by utilities, but just up by 0.4%. It's a 1% gain so far for the tech sector. On the downside, financials, the biggest loss coming through, but not by much, by 0.3%. You've got 6-7 sectors in negative territory so far. Telecoms, healthcare and financials all down between 2 and 0.3%. So it's pretty modest in terms of the losses coming through for those sectors.
Yeah, it's interesting that technology is doing quite so well here in Europe today. And as you mentioned earlier, Tom, the South Korean market obviously doing really well. And this is a continuation of the don't look here, look there story. Don't look at Iran, look at AI and what that's doing. And that does seem to be something the market is happy to run with. And we haven't mentioned much the Amazon Anthropic story from overnight, which did move the share price in after hours trade. As Amazon said it's going to invest an additional 5 billion, maybe 20 billion in Anthropic, and Anthropic is going to buy more stuff from Amazon. And whilst that might sound a little cyclical, it comes ahead of earnings where people are going to be looking for any demonstration of confidence from these businesses about the prospects for AI ahead. So maybe the market is taking this as an early sign of some of that confidence. Certainly tech is outperforming this morning.
There's a few extras in the market. UBS is one, Airbus is another, Volsi is another. So just kind of bear that in mind when you look at the kind of the right-hand side of the screens. Yeah, it is interesting. In terms of, I'm just trying to kind of see, the SSE trade is interesting. So that's up this morning. And you've got Rolls is up as well this morning. Now, GE is going to report numbers a little bit later, so we'll see exactly how the read-across works from GE Aviation. I'm wondering whether today is a holding pattern for Europe, whether or not we've got the kind of the story coming up with what we're going to get out of Islamabad today, tomorrow. Got a whole raft of US earnings that are going to be delivered over the next sort of 24 hours as well. And I'm looking at the screen in front of me and thinking, is there a tell here on what investors are thinking? And I'm not sure that necessarily there is.
Let's get another perspective then. Let's bring in Madison Fowler, Global Investment Strategist at JP Morgan Private Bank, with us on set this morning. Madison, nice to see you this morning. So help us understand the market's thinking then, with so much at stake, seemingly, with the Strait of Hormuz still closed. The market thinks it can look through that and focus on AI, which might be true, but if the Strait stays closed, there's surely a longer-term problem. So how do we put all of that together this morning?
Sure. So I think what the market is looking at is an environment where sentiment and uncertainty were, I think, certainly a really big component for the valuation contraction that we saw, I think, throughout the course of March and over the last few weeks. I think why markets perhaps feel a little bit off is that you, of course, throughout this conflict have actually seen earnings revisions move higher, not lower, which you would typically see in any given calendar year, but let alone during a conflict. I think that's what's perhaps causing this sense of some confusion or a sense of paralysis among investors. But I do think what's really important to stay rooted in is that while sentiment might still be a bit fragile, the fundamentals have very much remained intact. And so I do think what we're seeing right now is this, refocus from investors on that corporate resiliency story as we're looking into this, start and ramp up of Q1 earnings season.
And so are you able to focus, and do you find conversations with clients are able to focus on the earnings story, on the prospects for AI, rather than be distracted by what is going on in the Middle East?
I think, of course, all of these conversations are really difficult to navigate when you're feeling this really profound sense of uncertainty. And that's, I think, a very understandable place to be. And I think that's why, for instance, when we came into the year, we did have an outlook of both promise and pressure. We are constructive but not complacent to the risks. So it comes back down to, where you focus. And we want to be focused on those, earnings-led segments of the market, and specifically those companies that are more linked to strategic priorities. So technology is one of them, but you also want to be selective. We are seeing this, tech trade certainly fragment. We have a preference for hardware over software, and also looking at more of those strategic elements like security, utilities that are linked to AI, and you can also start to talk about financials, which really pulled back, but we have certainly seen a fair degree of resiliency in this earnings season.
Madison, when does a continuation of the uncertainty in the Middle East start to erode those fundamentals? You don't feel that it has yet, but there's a time frame when that starts to happen, when that starts to challenge the fundamentals that are supporting that corporate earnings picture?
Of course. And so one of the ways that we kind of, I think through what this could potentially mean is to view it from the lens of scenarios. So our base case scenario is rooted in more of a de-escalatory outcome, which could see still a geopolitical risk premium attached to markets, looking at Brent crude around 80 for the next few months. But I think if we were to see this not only persist for longer, but also see oil prices at an even more elevated level than that. So if we were to see, well north of 100 6 months from now, that would be more of a problematic scenario for markets. But if you're, around 100 for the next 3 months, we do think that that's an environment in which earnings, especially in the U.S., can actually manage through.
And you have a target in presumably on the first case, the first scenario, of 7,500 for the S&P 500. Where are you finding the most margin resilience? You named a couple of sectors there.
Yes.
Just underscore for us where you're finding that in that scenario.
Yeah, so when it comes to margins, we do know that the S&P 500, by and large, has demonstrated really tremendous margin resiliency. We're looking at another expected quarter of net profit margins around 13%, which is roughly in line with the last quarter, and again, historically high. In terms of the, largest, I think, degree of margin resilience, again, that's within the technology sector. It's seeing some of the most meaningful increases, but we're also seeing it across a number of those sectors that I already mentioned, particularly financials would be one of them. We're looking at industrials again, and one of the areas where you're not seeing a lot of that margin resilience and where it is, I think, a little bit more at risk would be consumer staples, for instance.
You mentioned a while ago that the earnings estimates have gone higher.
Yes.
If I strip out energy, have earnings estimates gone higher?
Yes. Actually, what's really interesting is that energy has been a little bit more of a wild card when it comes to earnings expectations. So, coming into the quarter, energy was actually expected to, meaningfully move Q1 estimates higher. But in the last few days, given expectations around a number of big companies, those earnings revisions have actually, or earnings expectations for the quarter have actually moved lower. So I think we have to look at the full year because Q1's a little bit of a difficult environment. But still, even if you were to strip out energy for a full year, you are looking at meaningfully, I think, and respectable earnings recovery throughout the course of 2026.
Is now a good entry point after the recent rally?
It's about where you focus and how you focus. So I think for a long-term investor, we do think that, we are mindful that now is still a good time to invest from our perspective. We do still, even on our base case, throughout the course of 2026, see, high single-digit upside for equity markets. And again, when you come back down to those sectors, we would expect to see even more meaningful upside.
And what about the dollar? I mean, so important. It's been so important. It's to the reaction function that we've seen in markets to the war in the Middle East. A little more stable of late. This is going to be a big factor for global investors as to where they want to get exposure. So, are you expecting the volatility in the dollar to have subsided now, or are we in danger of revisiting some of that?
So I think so long as the conflict persists, we are likely to see volatility across asset classes. Volatility has been most pronounced within the oil rates and currency space, which is why there's a little bit more risk premium attached to those segments of the market relative to equities. When it does come to the dollar, we had already, coming into 2026, expected choppy bottoming out process, given some of those factors we called out, like narrowing and relative growth differentials and how much demand there are for U.S. assets. A lot of that, I think, had moderated coming into the year. And now, as we look at this environment that we see, we could actually see some modest further upside for the dollar from here. But again, it could be choppy.
What does all of that mean then for Europe? You're sounding in your notes more cautious on Europe versus EM versus the US, and you've talked about the relative resilience there. But Europe is looking more vulnerable to you?
Yes, and I think that, even heading into this conflict, we had moved our view on European equities more towards, a neutral view. And that was given the fact that it had felt that valuations had caught up with the earnings recovery that was anticipated from Europe throughout the course of this year. So when we then, I think, link that with the energy dependence that the European economy has, it does look more vulnerable to us. So we're more focused on those elements within the European market that we think that can offer value for investors. And again, that comes back to that security theme, the hardware theme when it comes to semiconductors, for instance. And that's about, I think, focusing on those national champions rather than a case for the broad market.
Madison, great to see you. Thanks for stopping by to see us. Madison Feller, global investment strategist, joining us from JP Morgan Private Bank. Let's take a quick look at where we see markets moving this morning, some of the single stocks that we keep an eye on. And as you can see, a fairly mixed picture this morning. Defence stocks ticking up a little bit, but the story continues to be the standout performance we're getting out of technology. ASML up by 1.25%. You've got a little softness in LVMH, in Nestle. The pharma stocks have quietly been doing quite well over the last few days, but that unwinds this morning a tiny bit, with Novo Nordisk down a little bit. But let's go shopping at Primark. Chloe Melly is here with more.
Good morning, guys. We're seeing a lot of weakness in AB Foods this morning, down almost 6%. So there's a couple of things from AB Foods. It flagged a lot of weakness in its Primark and the sugar divisions, but it also announced that it will be going ahead with the demerger of Primark from its food operation. So it's unclear which one of these pieces of news the market is reacting to, but in any case, we are seeing a lot of weakness there. Moving on, but staying within the UK, we have got the UK renewables sector doing quite well. Both Centrica and SSE doing well, being in the green this morning, because the UK is planning to de-link gas and power prices, which would cut down the cost of green electricity. And so this is seen as positive for the sector, and therefore we are in the green there. Another UK sector that is not doing so well is the UK home building sector, and that is after Crest Nicholson. As we can see here, a massive drop for Crest Nicholson, cut its guidance because of economic uncertainty. And so that doesn't bode well for the rest of that sector, and so we are seeing this guidance cut from Crest Nicholson drag down Vistry and Barrett Redrow as well this morning. Moving on to Beiersdorf, which is the German skincare company, also weak this morning after its first quarter sales missed estimates. This is something to keep in mind as we head into the L'Oreal earnings as well later this week. And finally, well, this is the last one, I think. Thank you.
Chloe, thank you very much. Indeed, that was great. That's all we need. Chloe Melly with the stocks on the move so far in the Tuesday session. Chloe, thank you. Let's check in on what's happening in the semiconductor space. Guy mentioned that the outperformance is there again in the chip space and zeroed in on ASML. ASML is certainly performing today with the stock up currently a little over 1%. But you've also got ST Micro gaining 2.4%. So the outperformance is coming through for ST Micro. Infineon over in Germany is gaining 1.3%. Interestingly, on the software side, SAP, which has been beaten beaten up year to date, down about 30% year to date, is gaining in today's session. So on the software side, you're seeing some upside as well, 1.2%. We'll see if that is sustained for SAP. It's been challenged as part of the SaaSpocalypse trade, of course. But again, the semiconductors, the hardware, the ST Micros, the ASMs, the ASMLs, the Nordic semiconductors, all performing and doing well in session.
We get numbers from ASM International, don't we, later
after
today?
close, yeah.
So that'll add another dynamic to the tech story.
Chip sector has been traditionally very cyclical. Are we pricing a chip sector that is no longer cyclical? Is there an expectation that demand will continue to run away from supply for a while longer, and that's all the market needs?
The hyperscalers, they're not cyclical, are they, in terms of what they're building out?
It's very structural, maybe.
I don't know the answer to that
Cars
question.
are cyclical, right? And laptops are cyclical in
Chips
terms of the ups and downsides of the economy. But traditionally
you get you get a demand, then you get supply, then you get oversupply, then you
chips.
Get sure. But are we pricing for the first time, I think, a non-cyclical chip sector? Are they going to be determined not to increase supply? And I've heard talk of this, that they're not going to increase supply. They want to maintain pricing power. So you don't get a pickup in supply that ultimately matches.
Well, if the AI build-out is such a revolution, like the railways, like other big...
Which were quite cyclical, let me just point that out.
Yeah, probably bad parallel. But then maybe this is some big structural build-out that is more structural than cyclical, and then that continues to apply upward pressure to those chip prices, perhaps. Or maybe the cycle just becomes really expensive versus slightly less expensive, and that's where we fluctuate. We will no doubt continue to talk about this. Coming up on the programme, we'll get to the banking conversation as well. Commerzbank fires back at UniCredit after the Italian lender criticised the German bank's strategy. The gloves are off, it would seem. More on that conversation next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
On the opening trade then, a focus on the banking sector right now. UniCredit and Commerzbank. UniCredit, of course, in pursuit of Commerzbank, and this is the share price movement we have for today. Both of them down, essentially. We want to linger on this story because Commerzbank CEO Bettina Orlopp has hit back at her UniCredit counterpart, Andrea Orcel, after he delivered a sharp critique of her strategy. The German lender says UniCredit's actions, quote, undermine the fundamental trust essential to the banking business and are not in the interests of shareholders. For more, we are joined by Tom Metcalf, Bloomberg Managing Editor for EMEA Finance. And UniCredit is, of course, a shareholder of Commerzbank. So we saw UniCredit out with some pretty strong words yesterday. Commerzbank fighting back overnight with some strong words of its own. It seems that the gloves are off. Can they come together? Can they find some common ground and do a deal here?
Yes, I mean, certainly they seem further apart than ever, right? But, of course, the longer this goes on, the sort of more the pressure builds, really on both sides, for some kind of compromise. So that'll be the interesting thing is, you know, right now they're obviously defending their respective strategy, or Shell saying this is a great idea, and Commerzbank going, no, we are way, way better independently. So, yeah, the interesting thing from today's story is, you know, the in-person meetings, perhaps as you'd expect, very cordial, but sort of, though those meetings kind of seem to get progress, then immediately afterwards there would always be some kind of development like these today where, you know, one of the two sides would release a press release which basically annoyed the other. So there doesn't seem to be much sort of pragmatic forward motion, I suppose.
Yes.
But, you know, the reality is, as you say, UniCredit have a 30% or near 30% stake in Commerzbank, so something's got to shift at some point.
OK, so the obvious next question is what happens next? And Andrea Orcel's about to walk into this building. Like, what does he do next? Like, how does he's got on the attack. How does he make this attack stick in a way that previous attacks have not?
Yeah, well, I think it's probably the same strategy he's been using, right? Persistence, sticking around, kind of, he's taken a lot of sort of PR abuse, I suppose, from Commerzbank and even Berlin. But I think what he's shown is if you can kind of ride that out, you get in a pretty strong position. So, look, 30%, he is, my sense is that momentum is starting to shift towards UniCredit. For the longest time, I just thought, there's no way this can happen. Berlin are against it, Commerzbank are against it. But,
more of attrition. Basically.
Exactly. Just by being sort of persistent, he seems to be in a situation where, at least in the market, people are starting to think, hold on a minute, if he sticks this out, just by virtue of having a 30% stake, he will, you know, effectively have control.
So if the market momentum is shifting, maybe, towards UniCredit and Orcel, what about the momentum of the German government, which you mentioned is a part... We've been hearing from the Chancellor just in the last 24 hours or so, talking about this.
Yeah, and to me, that rhetoric seems to be only getting, like, stronger, right? Like, you know, this is unacceptable, we do not like the way sort of Orcel's gone about this. You know, those are just words, right? And I think at some point, you know, obviously Berlin could really block it if it really had to, but then the question is does it really have that sort of political appetite to really get into kind of what would be a painful fight, I think.
We will hear from Andrea Orcel a little bit later, I think. But, you know, is it possible that some of the language that's used that's perhaps not making it any easier? Maybe that's intentional, but he was saying yesterday that this is a story of operating underperformance, talking about Commerzbank. It risks becoming unfit for the market. These are quite bold statements, aren't they?
No, exactly. And I think that's the change recently. Is, you know, you could tell it was pretty contentious, and both sides were, you know, definitely not happy with the other. But I think the wording is kind of really, you know, or the rhetoric at least has got to a whole new height, and it's really interesting because, you know, what about, let's say it does happen, you've then got, what does that mean for people in Commerzbank who, you know, clearly are not big fans of Orcel?
OK. Tom, great stuff. Thanks for the update. Lots more to come on this story this morning. Managing Editor for EMEA Finance, Tom Metcalf, and Andrea Orcel will be here shortly. Alaska Air has suspended its full-year profit guidance due to rising fuel costs as a result of the war that we are seeing in the Middle East. This as airlines around the globe grapple with soaring jet fuel prices. Bloomberg aviation reporter Danny Lee joins us now. Danny, we're seeing pockets of distress. Clearly, weaker airlines are beginning to struggle a little bit. I'm not naming names here, but you're seeing it in various kind of geographies. Does this spread to a wider level of distress, and when does that start to happen?
Well, we're going to see some airline earnings come through. First of all, with Alaska Airlines, they had been previously guiding towards a full-year EPS of $3.50 to $6.50 a share. Now that's been suspended because of the high fuel prices. when you even look at its first quarter numbers, it hit on the revenue and on the adjusted loss. But it's that second quarter where they're seeing a loss of as much as $1 a share. That's more than what the 11 cents a loss that the street are looking for. So clearly there is pain that they are still yet to feel, because that first quarter only reflects a month of the war so far, and it's the cost of the fuel. Alaska Air is going to be paying $4.50 a gallon. That's around a $600 million increase in its fuel bill than it's expecting. And with it not hedged, you see just how that could impact other larger airlines in the months to come, because this fuel price more than doubled, has been elevated. And we are going to see United Airlines actually releasing its earnings later on today. So it'll be interesting to see just what it says, because it had been warning potentially of an $11 billion increase to its own fuel bill. But I'm sure with the war impact and also the consolidation impact that Scott Kirby, the CEO, has been stirring with his alma mater, American Airlines, I'm sure the street and analysts will be looking both at those kind of topics.
Yeah. And Danny, when we hear from airline execs, is it the case that they're still very concerned about prices, obviously, but not really about jet fuel availability? Or are they increasingly worried about jet fuel availability, and maybe this is a regional story?
Well, I think for the US, there is less concern about supply and just more about pricing, given the fact that the US airline industry is unhedged from the cost of fuel, so they're eating up the cost in full. And when you look at some airlines which are in real distress right now, the likes of Spirit Airlines, they have said, Bloomberg has reported that the airline has been approaching the government to see what it can do for them to help them out, potentially take a stake, some kind of bailout. It remains to be seen whether this would be the right approach, because this could set a bad precedent for the industry and how rivals would see that, and particularly for Spirit Airlines, which has been in distress for a number of years now. And of course, it had its failed merger attempt with JetBlue not that long ago.
Danny, thank you very much. Danny Lee joining us there on the aviation beat, a little bit on the global aviation story, a bit on the US aviation story. Should we talk about the house builders in the UK? Because there's a lot of headlines crossing, well, there have been headlines earlier around Crest Nicholson. And once again, we're sitting here with some guidance that's coming weaker and an incredible share price move.
The stock is down. Well, it's just been suspended. I think it's jumped from on my screen from being down 42% to being suspended as a result of breach of tolerance level, which basically means it's been halted because the drop is so big. It's nearly lost 40% of its share price this morning. The UK housing market's in a really difficult place right now. House builders are in a really difficult place right now. It is a struggle on many levels, and you just start at the kind of the top of the level. Getting visibility on what is happening with mortgage rates right now is just incredibly difficult.
We're not understanding where the BOE goes next, whether they stay on hold, whether they indeed hike. Market expectations around that feeding into the house builders, and this is Crest Nicholson then cutting its guidance, and the market impact is there.
We'll move back to geopolitics in a moment. President Trump raises the stakes ahead of potential negotiations in Pakistan this week. We will speak to Rob McCare, former UK ambassador to Iran. That's next. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade. We are 30 minutes into the Tuesday session. You look at the benchmark stock 600 and there seems to be a lack of conviction, or at least waiting for more answers. The focus is partly on AI. The focus is also, of course, on what happens in terms of the talks in Islamabad, if indeed they come to pass. Currently, then, the markets are up just 0.1% on the benchmark. It's a stronger session. If you look under the hood at the DAX, up 0.6%. The auto sector is helping with that lift. The FTSE 100, meanwhile, is up just 0.1%. The home builders are under a bit of pressure here in the UK. The CAC count over in France, largely unchanged. Guy, what are you seeing?
I'm seeing a market that is, in terms of the number of stocks higher, definitely kind of giving us a positive story. 412 up, 170 down, 2 to 1. Let's call it that. I'm obviously averaging. Talking of averages, this is the volume versus the 20-day average. Volume hasn't been great for a while. And obviously that number has been declining, but today it looks particularly weak. There's a lack. We're kind of waiting, I think, for the next catalyst, the next obvious catalyst to come through. So the market kind of feels like it's kind of waiting and watching and not doing very much, which kind of, I think you need to see the next moves in the context of this. What you're getting this morning is a bid back into some of the tech stocks. ASML is doing relatively well. The software story is looking okay. SAP is bouncing a little bit after being so badly beaten up. ASML's up by 0.8%. SAP is up by 1.3%. You're seeing changes in the regulatory structure around the UK energy market. That appears to be benefiting Scottish and Southern this morning, which is up by 3.7%. Let's call it 4%. So that's the story. So tech's doing okay. Tech's kind of keeping us in there. Downside, I think Astra's got some phase 3 trials, which maybe are weighing a little bit. It's down by 0.9%. Roche, though, is down by 0.9%. Safran in the aerospace arena, it does lots of different things. It makes the nacelles, it makes all kinds of stuff for civil, and it obviously has work elsewhere. The defence names are going to be in focus today. Keep an eye on Thales, but you've also got names like RTX, which are going to be producing numbers a little bit later. I think Northrop's out with numbers a little bit later over in the United States. So a market, I think, that is lacking a sense of direction, I think, this morning, or just doesn't have one. Anyway, it's a Tuesday morning. Who needs a sense of direction? Anna, what else do we need to know?
Let's get up to date on some of the other corporate news flow and other news flow we're covering here this morning at Bloomberg. After 15 years at the helm, Tim Cook is stepping down as Apple's CEO, handing the reins to John Ternus, the current head of hardware engineering. Ternus will become CEO on September 1st, and Cook will transition to the role of executive chairman. The future of Keir Starmer as UK Prime Minister appears to rest with a bureaucrat he fired over the vetting of former UK Ambassador Peter Mandelson. Ollie Robbins is due to appear before Parliament today and is expected to say he felt pressure to approve Mandelson, despite opposition from vetting officials. President Trump has told Bloomberg he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire on Wednesday evening, Washington time. Meanwhile, Iran has yet to confirm it will participate in talks to end a war which has engulfed the Middle East and upended global trade. Guy.
Let's find out more about this. How much do we actually know about these talks? Let's go to Dubai. Jumana is there for us with the latest. Jumana, we think talks are happening. Do we know talks are happening? Do we know what's happening around these talks? Who's going? And what does it all mean for the ceasefire potentially?
Well, I was just reading about Islamabad itself being prepared, fully prepared for these talks to take place. Parts of the city are in lockdown. There are thousands of security personnel being mobilized in anticipation of the talks. And yet, we have yet to see the delegations arrive. And we know from the U.S. standpoint that J.D. Vance is going to be leading up the U.S. delegation once again alongside, it is expected, Jared Kushner and Steve Witkoff. But they have not yet departed the U.S., which means if the talks do happen, they will likely take place tomorrow, which also coincides with the timeline that President Trump laid out yesterday. He spoke to one of our Bloomberg colleagues overnight, and he said that the ceasefire expiry has now moved to Wednesday evening Eastern time, which is Thursday over here in the region. But that also he has no inclination to extend the ceasefire, which sort of suggests that he thinks he can wrap things up in the next 24 hours. But we have not yet heard from the Iranian side. There hasn't been an official confirmation of who is attending from Iran. And indeed, a lot of, once more, belligerent messages coming through overnight. We heard from the Speaker of the Parliament, Mohammed Ghalibaf, who was the lead negotiator in the last round of talks. And he was saying that they will not negotiate under threat. Similar messaging coming through from Iran's ambassador to Pakistan, saying that they will not tolerate the ongoing naval blockade that the U.S. is imposing. And so we're in a situation now where it appears to be the case that the Iranian stance is, so long as the U.S. continues implementing their naval blockade on the Strait of Hormuz, that could impede the possibility of actually proceeding on to the next round of those discussions. So I guess a couple of things to watch out for as we think about, how the day is going to evolve. Number one, does the president change his mind? Does he temporarily lift the U.S. blockade in the interest of pushing forward those discussions? And number two, when does J.D. Vance actually leave the U.S.? Because that is going to be a signal that the talks are actually on in the next 24 hours.
OK, Bloomberg's Jumana Pasechi on the ground for us in Dubai with that update. Jumana, thank you. For more analysis, let's bring in Rob McCare, former UK ambassador to Iran from 2018 to 2021 and Chatham House Council member. Rob, thank you for taking the time for joining us in the studio. With your deep understanding of Iran and how the government there operates, what is your assumption right now as to whether or not there is willingness from the Iranian side to strike a deal? It seems Trump wants to get a deal. Do you think the Iranians are close to giving up some of their red lines to get something across the line in the next couple of days?
I think it's likely that they go to talks in the end. I mean, it's not guaranteed. There's lots of potential for miscalculation, but it doesn't seem to be in Iran's interest to push President Trump into a corner where he has to make good on his threats to launch massive attacks on their civilian infrastructure. So it's likely that after brinksmanship, they will go to talks. But, they're very, very crafty and experienced negotiators, and what they consistently do, and what you're seeing right now, is the ability to reframe the negotiation, where President Trump wants a very simple discussion, massive military threat versus, complete nuclear capitulation, all the material comes out, no enrichment, and so on. Better deal than the President Obama got. But that simple equation, has now been muddied by who goes to talks, who wants the talks more, and then, of course, freedom of navigation in the Straits of Hormuz. So it makes it harder to achieve what the US want.
And it's the Straits of Hormuz that comes up consistently with our guests when the focus is on what investors are looking at. And are the Iranians prepared? It's a point of leverage that many people didn't think they would use. They've used it. Are they prepared to give that up? Will they give that up? That is what is so essential for the global economy.
I can't see how they are going to end up with their maximalist position, which is to extend what they would call sovereignty, to extend Iranian control fully over the Straits of Hormuz, which they've never really had in the past, or they might have made noises about it and never seriously claimed to do that. So But I think they are going to be very reluctant in this situation to give up their ability to use it as a threat unless they get what they want in these talks, which is some sort of a guarantee that they're not going to be subject to another attack imminently and some sort of economic relief.
So if they don't want to give up the control of the Strait of Hormuz, and that's something that they've said, and they want to maintain the ability to at least go back to enrichment, they were proposing, I think, last time, five years. So that they could still be the sticking points we're talking about here. But if we end up going back to war, Rob, I mean, what is the Iranian regime as it exists now? What is its tolerance for war? How long could they tolerate that?
I don't think any of us know the answer to that, and I think that's a key question. I do think that the risk in all this is the risk of the two sides not understanding each other. So Iran not understanding the US because of the contradictory messages coming out of the White House, which obviously is partly deliberate. And on the other side, the US consistently underestimating the ability that Iran has to absorb the pain that the US delivers to them. I don't think anyone knows how long that can go on or how resilient they are, but this is about the existence, the survival of the regime. Their backs are against the wall, and for them, capitulating to the US would be the end of the regime. So there is this misunderstanding about what this conflict looks like and how it's resolved, and that's the most worrying thing.
So in that context, is it possible, can you foresee an agreement that means that Iran steps away from enrichment for, I don't know, 10 years, but that kind of number gets agreed to? Because I think the Americans went in asking for 20 and the Iranians said, OK, 5. I mean, do we meet in the middle somewhere?
Yeah, it's perfectly possible to find a face-saving compromise on the nuclear program. I mean, Iran would be willing to compromise. It's not enriching anything at the moment. Doesn't really, I mean, obviously has these stocks of highly enriched uranium. Is unlikely to be able to do anything with them for the moment. So there was clearly a compromise available that where Iran can say it's preserved its right to enrich, but isn't actually enriching. And as I say, there's a lot of negotiation around timescales and timelines for that. But I think it's key for President Trump, as you can see from his comments, is that it has to be better than the JCPOA, the deal that President Obama got, and that seems to be his priority.
There's a number of kind of points let's pull them out a little bit that you made. If we do go back to kinetic action, how would the Iranians react? There's talk that they would target Gulf energy infrastructure again. How big an escalation would that be? And what would be the effect of that?
Well, of course, they've got an incredibly weak hand, haven't they? So, yeah. I mean, the US has total military dominance. They can attack anything at will. Iran clearly has some capacity to continue firing ballistic missiles and drones. What they will try to do is to calibrate the response so that if they get massive attacks on power stations and bridges, as has been threatened, then their response will be proportionately higher against those sorts of targets in the Gulf.
At the other end, is Iran prepared to, assuming you don't get a deal, but we get kind of ongoing talks, how long can Iran sustain where we are now in terms of the kind of the restrictions that the US is placing on its shipping? How long could this kind of scenario that we're currently in last for from an Iranian point of view? It has land borders, it has all kinds of other things, but it needs to get its oil out, I'm assuming.
I think that is the question that everyone wants to know the answer to. They are in a very... they're hunkered down. They are obviously controlling the situation on the streets absolutely tightly to prevent popular uprising. The economy was already in a disastrous state before the war. It's now be significantly worse, and with the blockade facing real challenges. But how long they can hold out, I think, is the key question. And consistently, they've shown the determination to outlast
Are they waiting for shortages to show up around the world? Is there a point at which their leverage becomes really becomes better, and the card they have to play is better because actually you're seeing shortages in Europe and Asia, etc.? Is that the point at which they'd like to, that the current scenario points them towards?
I think it's their only choice, other than capitulation to US demands, isn't it? I mean, they are working out that the longer this goes on, the worse it is for the world economy. And the more difficult it is, therefore, for the US. Iran's in a much worse position, but they're hoping that pressure leads the US to compromise.
Israel were not involved in the last talks, and I don't think that they are attending these talks if they happen. And clearly that widens the conversation about the region and some of the proxies that Iran supports. Do you think that they would be prepared to give any ground in terms of supporting those proxies if it were to deliver a better result for Iran with the United States?
I think in the long run they'd be open to talking about it. What they've consistently said is these are organisations that have their own volition. They're not controlled by Iran. They might make some. In a far-reaching agreement, they might make some commitments about not supplying military goods to the Houthis or Hezbollah, but disbanding or effectively disarming those organisations is not in Iran's gift, and they would say that's not something we can do.
Rob, thank you very much. Thanks for joining us. Rob McCare, former UK ambassador to Iran and Chatham House Council member. Coming up on the programme, President Trump's pick to be the next Fed chair will testify later today before the Senate Banking Committee. We will have more next on what to expect. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts April 30th at noon on Bloomberg. Context changes everything.
47 minutes past the hour. Welcome back. You're watching the opening trade. The DAX is the only one that really stands out in terms of some action today here in Europe. You're seeing names like SAP having a fairly good session, which is lifting that market, outperforming the rest of Europe, which is kind of sitting on its hands, trying to figure out what happens next. And at the moment, we don't know, but we're going to get a lot of answers over the next 24 hours, potentially.
Talking of what happens next, let's look ahead at what else we are focusing in on throughout this Tuesday, 9 a.m. UK time. Ollie Robbins will be giving his testimony, of course, the former most senior civil servant at the top of the Foreign Office, embroiled in a dispute with the Prime Minister. So we'll listen into that, potentially significant ramifications for Keir Starmer. We'll be across that for you, starting at 9 a.m. UK time. 10 a.m. UK, we're going to be getting the German ZEW survey, 1:30 p.m. UK time, US retail sales, and at 3 p.m. UK time, another significant one for your calendar for today. Kevin Walsh, Fed Chair, hearing, of course, will be in focus, and we'll also bring that live to you. And at 5 p.m. UK time on the earnings front, ASM International earnings on a day where I'm seeing some upside for the tech space.
Let's kick off in our look ahead to the rest of the day with the UK angles first. A big day for British politics, another one. Keir Starmer facing another gruelling day, perhaps, as a little-known official, although if you followed Brexit, you'd have heard of him. He fired, Keir Starmer fired. He is due to speak at the top of the hour in Parliament about the UK Prime Minister's controversial decision to appoint Peter Mandelson as US ambassador. Let's bring in Bloomberg Markets today. Editor Sam Unstead with us. Let's start. There's so many UK themes to dig into today, Sam, but let's start with that. What will markets be watching for in Ollie Robbins? Because there's a lot of kind of court drama, but what are markets going to be focused on?
Yeah, so I think what you're going to need to see to have a really substantive effect on the gilt market in particular, global bonds, but in the gilt market in particular, all being driven by the war in Iran, energy shock. That is the dominant narrative. To change that, you'll have to see Ollie Robbins say something that has a very clear cut-through that indicates that Keir Starmer's position is in genuine danger, and enough to convince investors of that too, because that narrative over the top of everything, in terms of the war in the Middle East, is enormous. You know, it's covering almost every part of the market. So it will take a very significant but very clear cut-through to really have an impact on gilt markets.
Before the war started, the data, which we've now started to get, pointed to an economy that was looking OK. The GDP data looked good. Now we get employment data that looks pretty good as well.
Yeah. I mean, so the employment data today, you know, even before it arrives, most of certainly the wage data, which is the bit the Bank of England will look at most closely, only goes up to February. So, like all data that only goes up to February, it's pretty much been blown out of the water by everything that's happened since. The data itself, again, is pretty messy as well. You know, there was quite a significant drop in the unemployment rate. That's kind of a technical change. It doesn't really tell you an enormous amount. So I think all the jobs data really does today is moves focus to inflation tomorrow, because that is the report that is going to have the most impact for the Bank of England and probably for UK markets as well.
How much of this windfall tax that was announced today on some of the utilities, some of the energy providers, how much of that is about addressing longer-term higher energy costs for consumers and businesses in the UK? What are the details of that?
I mean, most of it. So I mean, what you're effectively seeing is this delinking of gas and electricity prices, because if gas is the last pricing mechanism that's used, it means energy prices end up being higher. Had a little bit of this over the course of the last couple of weeks. It impacted the companies because any kind of intervention in the market without clarity kind of impacts those shares. You're seeing a lot of those companies move up a little bit today because what they're doing looks broadly pretty sensible, but it's not just for the longer term, but this is something that's been in the works for a very long time as well, as renewable energy generation in the UK has increased. And effectively, if you delink those two things, it should give the UK a much better control over their energy prices, and so energy shocks, like you see with the war in Iran, won't have as much of an impact as they do at the moment.
Let's complete our tour of UK news flow with a trip to the UK High Street and AB Foods. Numbers out today. There's the Primark story that always dominates. What did you take away?
Yeah. Well, I mean, probably as long as I've been a reporter, people have been talking about Primark being spun off from AB Foods. I think, so that in and of itself will probably be received relatively well. It's kind of expected. It allows investors to be able to value the two bits of the business, because the rest of it is sugar, grocery, you know, so the two things have never quite sat particularly well together. However, underneath that, Primark sales not particularly good, softening a little bit. And we've seen actually over the course of the last couple of weeks, little hints that over the course of March and April, there's been a little bit of a pullback from consumers. So adds to that picture. It's still only bubbling under the surface at the moment, but not enormously positive on the underlying
Sam,
picture.
excellent stuff. Thank you very much indeed. Bloomberg Markets Today editor Sam Unstead. If you have a terminal, you can watch the testimony from Ollie Robbins as Sam was discussing the potential implications there using the function LIVE GO on the terminal, likely to start around 9 a.m. UK time.
The other big event, which will be taking live a little bit later on today, will be the confirmation hearing for Fed Chair pick Kevin Walsh. Joining us now to discuss this and all the other things we're going to be talking about today, Skylar Montgomery Koenig. How much are we paying attention to Walsh? Is he going to be market moving today? Or with Tom Tillis blocking votes, do I just park it and think about something else?
I mean, we've seen historically that his commentary has had an impact on the market. And I think particularly now, if it confirms market biases, then it can be market moving. In terms of, if you get some dovish commentary, equities can be joyed by that with the backup story of tech doing well. Maybe the dollar can be under some more pressure, but it's unlikely to be a big shift in the bond market as a result, is what I'd say.
I mean, we've had a bit of an early look at what he's going to say, and a lot of it sounds like a kind of, this is before he gets questions, and then who knows, but a lot of it sounds in a kind of stay in your lane. You know, the Fed works best, the FOMC works best when it sticks to monetary policy, doesn't try to do social policy or fiscal policy. That might, those might be fairly uncontroversial from the Republican side, at least in the Senate.
Yeah, I mean, I think part of it is there's not a reason to change his tone very much, right? Like, part of the reason he got appointed was because he has a more dovish tone. Right now, it's very hard to be dovish because the starting point for inflation before the Iran war was something like 3% on core PCE. We know that there's going to be a big inflationary impact from the war. And so there's not anyone on the FOMC, I think, maybe other than Moran, that's saying we should cut next time or we should cut immediately. So it's hard to push against that economic backdrop, which is why I think the bond market's not going to change that much, right? You have a higher term premium needed. You have that expectation that rates are going to stay that way. And you're actually pretty dovishly priced anyway with that regards, with cuts still in the outlook. And I think further out, too, even if you do get cuts eventually, the risk is if inflation is higher, those cuts feed into inflation persistence. So, you know, the risk is very much higher yields from here, and I don't think there's a reason that he would kind of diverge anywhere from that, and maybe the risk for him more would be commentary on the balance sheet for the market.
So from Kevin Walsh to Ollie Robbins and the focus on the UK, we discussed some of that with Sam Unstead. How sensitive are the gilt markets to political risk and today's events, ultimately?
Yeah, I think there's more of a sensitivity to what happens in the U.S. because there's more of a feed-through to policy from that. We've seen that there's been a lot of kind of political issues in the U.K. in the past year. At the beginning of 2025, it did have a feed-through to the gilt market, but Starmer's gotten through a lot of these issues without losing his job. And so that means that there's a lower bar, or a higher bar rather, for the market to react to those issues. The worry is that if you have a different leader for the UK, it'll be more fiscal easing. Post Liz Truss crisis, there's a very low bar from the market to withstand deficit deterioration. And so it would certainly be negative for gilts, but I'm not sure today is really the day that impulse is from the UK.
Skylar, thank you very much. Skylar Montgomery Koenig of the Bloomberg Markets Live team. And I should just say we're getting a line from Iran saying it has not yet sent a delegation to Pakistan. This is to Islamabad for the talks with the United States. Yesterday we were here looking for clues as to whether Iran would be going, and we had seen some reporting suggesting that they would be, but now we hear this. Of course, the timescale has shifted a little. These talks, I think, not expected to take place until either late Tuesday or into Wednesday, was the latest guidance from the president in the US.
Yeah. And Jaman has been reminding us that the US delegation hasn't left either, so we continue to...
Does one need to go before the other one goes, and which one goes first?
I guess the one that's furthest away.
Well, that would seem like a logical thing, but maybe not.
Yeah, maybe not.
Before that happens, we are going to hear from a key player within the European banking space, because Andrea Orchel will be joining the Pulse with Francine Lacroix at 9 a.m. UK time, a really central conversation to tune in for then. Don't go away. The opening trade is next. That's it for the opening trade. The Pulse is next with Andrea Orchel. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
President Trump signals he's unlikely to extend a two-week ceasefire with Iran that's set to expire in 2 days, with negotiations to resume in Pakistan. Apple reveals that John Termes is replacing Tim Cook as chief executive after 15 years in the role, which saw the company become a $4 trillion business. Plus, the German chancellor slams hostile tactics in the banking sector. We discuss the pursuit of Commerzbank with Andrea Orcel, the UniCredit chief executive, shortly. Now, first thing is first, let's check in on what the markets are doing. Stocks seem to be rising pretty modestly. Again, traders seem to be a little bit more encouraged, certainly, than they were 24 hours ago, that Iran will join talks that could extend the Middle East truce and restore oil flows. Now, futures for the S&P 500 are rising some 0.2%. All eyes, of course, on the Middle East after Trump seems to have signaled he's unlikely to extend a two-week ceasefire with Iran in a war that's upended global oil markets. So Brent crude 94.7 and European markets pretty much the same. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the German chancellor says his government is against hostile and aggressive tactics in the country's banking sector. Friedrich Merz was speaking to industry executives after Commerzbank formally rejected UniCredit's takeover bid, saying it lacks value and undermines trust. Now, with us now for an exclusive conversation is the chief executive of UniCredit, Andrea Orcel. Andrea, thank you so much for joining us. Bettina Orlop, the chief executive of Commerzbank, dismissed this as a speculative attempt to dismantle Commerzbank's successful business model. How do you respond to that? And does it definitely close any room for negotiation?
Thank you, Francine. Well, from our standpoint, we have been consistently trying to engage in a meaningful dialogue to review facts as opposed to statements, but we do not believe are backed by facts. As a shareholder, we feel very strongly that we need to be ambitious. We have demonstrated at UniCredit, and we think Commerzbank can express a lot more value than it does at the moment. both for its shareholders, but also for its employees and the clients it serves. Furthermore, we do think that the current plan puts Commerzbank at risk in the medium term to face a competitive environment, to face risks that would require yet another restructuring plan, and a difficult one, or put the entire bank at risk. For that genuine concern, we have put our views forward yesterday after failing to have any meaningful engagement. And as you know, on April 7th, Commerzbank was very clear that they remained on their position that the bank needed to remain independent and that there was no value, and refused any further engagement with us.
So where does that leave you? I mean, cross-border bank deals often proceed without management support, but rarely do they proceed without government support, or at least the government saying, actually, this doesn't work for them. Are you prepared to move forward without political support in Germany?
So I hear a lot about this is a cross-border deal, but this is effectively mostly a merger between the second and third largest bank in Germany. And if you look at the views we provided yesterday, most, if not all, of the value comes from the merger of two separate second and third banks in Germany. So it is an in-market deal. It is not a cross-border deal. Obviously, the group is pan-European, and the group would incorporate that bank into the broader group, but it is an in-market merger. With respect to the situation and the position of everybody, we believe we've been very respectful for 18 months. We bought the stake in an auction transparently. We reached 30%. We tried to engage for 18 months. We launched an offer. We tried to engage within the offer to land a joint plan in the best interest of everybody. We were dismissed after 2 weeks with a refusal to engage on any detail. And therefore, we have no other option but to present our views publicly, given that we have an offer document and we need to explain what is in that offer document. Commerzbank was well aware that if we did not present a joint plan, we would have had to come back with a plan from our side. And we restricted that just to our views to provide a basis for further engagement. If that further engagement occurs, we would welcome it. If it doesn't, it is now up to the 70% shareholders beyond us to take a view whether they want to remain in Commerzbank with the current premises or whether they want to do something else. For UniCredit as a shareholder, we have a win-win. If we land below control, this is the scenario that will provide us with the absolute best returns, and in our opinion, will provide an opportunity to do a deal further down the line at much better terms. If instead we get a landslide and we reach control, then we will implement the views that we have put forward, views that we have already successfully implemented at HVB and across 13 banks in UniCredit Group, and we will create value above the cost of equity. So from our standpoint, we've done everything we needed to do in order to be in a position to let shareholders and indeed the other stakeholder of Commerzbank make a decision.
We reported last week that the ECB is considering to require you to consolidate Commerzbank. So how likely is that to happen if your stake rises above 30% but stays below 50%? Would that impact your capital buffer?
Look, the control is a topic that is interpreted differently in Europe, as many other things. In some jurisdiction, you need to be above 50+1. This is, for example, the case of Poland. In other jurisdiction, you need to demonstrate structural control of a shareholder meeting. This, in fact, is the case in Germany. So for us to reach control, we would need to demonstrate structural control of the AGM of Commerzbank, something that we can manage very easily not to do. So we will have really two scenarios, one where we don't have control and we go back to status quo, launch our share buyback, and go back to full focus on implementing our unlimited plan. You will see results of that already in our May 5th results, and wait to see what maps up in Commerzbank. With respect to the impacts on capital, we have been very clear. A 100% deal impacts about 200 basis points. A 50% deal impacts about 280 basis points, excluding the pull to par. So it's 80 basis points more that affects our returns. But in terms of capital position, we have enough capital to absorb both. Our step to bridge the gap that exists between us and Commerzbank, i.e. launching an offer. If we do not reach control, we will take a pause and we will focus on other topics that we have internally.
I mean, at this point, with what you know now, how many investors from Commerzbank do you think will accept the offer? What's your base case or your baseline?
I normally don't speculate and I use facts. Probably that's why I am cautious when I say some things. In my opinion, it is up to that 70% to take a view. We have shown very clearly what is the financial case to tender. We have put forward our views, the value we can create, and there is now no doubt that we can create substantial more value than what is in momentum, and even more if we reach a combination. The numbers are not challengeable because they emerge directly from what we have already done at HVB and across UniCredit in the last 4 years. So it's our blueprint. We know how to implement it. We will implement it. We will extract those value. We know what we're talking about. So it's only about that. The shareholders will need to decide whether they believe waiting is better for them or tendering is better for them. And I guess we will not know that until the very end of the offer. But as I said, for us, we have reached 30. We've tried to engage for 18 months. We launched an offer in order to have an opportunity for a meaningful, transparent engagement to address a lot of the topics that are now being thrown at us. That so far has failed. Commerzbank has remained on the position of day one and refuses to look at any other alternatives. So shareholders are now aware of our views, of the risks, of the possibilities, and they're in a position to take a view. And for the time being, we're here. We would be very glad to engage constructively, but if that is not possible, the offer will run its course and we will see where we are at the end of the offer.
Andrea Rochelle, your proposals to boost Commerzbank's standalone profitability are, around strong cuts to the bank's international operations. But Commerzbank is also an important source of trade finance for a lot of the German exporting countries. So do you think that could be a problem for those clients?
No, I don't. This is another piece of misinformation. UniCredit has a trade finance business that is about 1.6 billion. This is double the trade finance business of Commerzbank. We support that trade finance business with 20 offices around the world. Our service is fully automated. We use AI, and we have a level of service that gets recognized broadly. Commerzbank has half the business with more than 100 offices, which are a mix and match between trade finance and other activities, such as trading hubs, local lending to local companies that have nothing to do with the core business of a German and indeed the Polish bank. So for us, trade finance is a core business. It is a core business from which we are recognized, and we keep on winning prizes every year for best service in that business. So the last thing we would want to do is affect in any way the Mittelstand access to our trade finance and correspondent banking services across the globe. Indeed, those services are much more efficient, much more effective, and better services than the one of banks that use the old model that we believe Commerzbank uses.
You're predicting 7,000 job cuts at Commerzbank if those plans come to fruition. I mean, is that why unions and also the government are worried about this deal?
Well, on the job cuts, I would say that the numbers that were, again, flying around talked about 15,000. So number one is less than half. Number two, Commerzbank itself has already committed to cut 4,000 jobs, all in Germany, hiring internationally and redeploying headcount outside of Germany. So put that in context with our 7,000, which would be done mostly the first 5,000 or so over a period of 3 to 4 years. The remaining, just in the combination, you're talking 4, 5, 6 years out. There is significant attrition given the pyramid of age, and there is significant reinvestment, and a number of those reductions are done in areas that are very bureaucratic and overpaid, in our opinion, and that need addressing at the center of function that Commerzbank has. So are there job cuts? Yes, they are. I don't think they're meaningfully different from what Commerzbank has proposed. And those job cuts are not done to go and expand internationally and lend in other countries, but they are done to strengthen the business in Germany by investing more in technology, in AI, and redesigning the entire operating machine. The very big difference between Momentum and Unlocked is that Momentum, at the end of the plan, delivers a bank that after they have done those cuts, is still lagging the other peers in Germany and in Europe. Unlocked, at the end of the plan, delivers a bank that is a leader versus the other German competitors and Europe. So Unlock is viable. Momentum will just require yet another restructuring plan to address the gap that would be accumulated again in the next 3 years to vis-a-vis the sector.
Andrea, do you think there's a chance actually that the government, the German government comes out and just blocks it like Italy's government did with Banco BPM?
I cannot speculate on what the government will or will not do. I respect their position. I would have hoped we could have had engagement to explain every topic and every step in detail and argue our case, something that we have unable to do, but it is their decision to make.
What's your thinking about acquisitions in Italy? Are you still evaluating something, for example, with Monte Paschi?
Look, I think our name comes very often in acquisition, probably for two reasons. One, because of my past job, and two, because UniCredit being present in 13 countries and having turned around in the way we have turned around, there is a lot of speculation that we may do a lot of things. So, as I said, and I continue to say, we are very committed, and we have demonstrated it again and again and again, to our organic growth. Initially, we've Unlocked, now we've Unlimited. Those two plans have delivered a lot more value, and the Unlimited will deliver a lot more value than any acquisition. Yep. That said, I think it is the duty of the leadership of UniCredit to look at option. In Italy, we have a 9.9% market share of the market. The market is fragmented. So there is basis to look at option to strengthen our market share. There is basis. But we need to find opportunities that work, and we need to find opportunities that fulfill our financial metrics. We're very, very disciplined on the returns to be had. And given the success of Unlocked And what I will demonstrate the success of unlimited in the next 20 quarters, we do not need to make acquisition. We will do them only if they add incremental value.
Andrea Urchel, thank you so much, as ever, for giving us a little bit of time in your very busy schedule. That was the UniCredit Chief Executive speaking, of course, to us. We'll have plenty more throughout the day on this story. The other big story is President Trump has told Bloomberg that he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire Wednesday evening, Washington time. Details about the next negotiation session remain unclear. The Bloomberg understands that Tehran is also preparing to send a delegation to Islamabad after earlier casting doubt on its participation. Now, for more, we're joined by Bloomberg's Jumana Bersecci in Dubai. So, Jumana, just bring us up to date with how likely these talks are and what does it mean for the ceasefire?
Well, I will tell you, Francine, that there are plenty of preparations underway in Islamabad, the city. We're hearing of thousands of security personnel being mobilized, parts of the city in lockdown in anticipation of these talks. But no official arrival yet of either one of the delegations. Now, over the weekend, President Trump himself suggested that the U.S. would be participating, and later emerged that J.D. Vance will be leading those discussions once again. He has not left yet, so that is a key consideration as we think about the coming hours. On the Iranian side, they are still being non-committal. And just in the last hour, the state TV said they have not yet sent a team to Pakistan for these U.S. talks. And what is emerging is a narrative over the course of the evening. We've heard from the likes of the president, Masoud Pezeshkian, who says that they will not negotiate under threat. A similar language coming through from the Speaker of the Parliament, Mohammad Ghalibaf, as well, who led the prior round of discussions, also suggesting that as long as the U.S. naval blockade persists, they will be less inclined to participate in those discussions. So I guess where we go from here is going to be a function of what the U.S. and what President Trump decides to do with that U.S. naval blockade, whether perhaps he lifts it temporarily in order to induce the Iranians to come to the negotiating table. But at the same time, we know that the clock is ticking. He had a phone call with one of our colleagues from Bloomberg yesterday, and he suggested that the ceasefire deadline had moved back by 24 hours to Wednesday evening, which gives a very small window to get a deal across the line. But at the same time, President Trump has also warned that the military is locked and loaded and ready to go again. And equally, the Iranian Speaker of the Parliament has said that they are also preparing to return back to the battlefield. So again, another crucial 48 hours coming up. What we should be watching from here is whether Iran obviously commit to sending a delegation, and also whether J.D. Vance actually leaves the U.S., because that will be a sign that the talks are going to happen.
Jumana, thanks so much. Jumana Bersecci there in Dubai. Now, plenty of focus, of course, on that U.S. delegation led by Vice President J.D. Vance, heading to Pakistan in a bid to resume negotiations with Iran. We're joined now by Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Anna, always so great to speak to you. I mean, there are two main sticking points. It's the nuclear and Strait of Hormuz. So can we muddle through a deal if there's even a deal to be had?
I think as long as you put the nuclear issue back into this deal, I don't think we're going to get a deal, because this issue is so contentious. We've been negotiating this, the US has been negotiating this for years, and it hasn't been solved. So if there is a deal, and it's a narrow deal, it's going to be no more aerial strikes against Iran by the US in exchange for opening the Strait of Hormuz. That's as possible of a deal as you're going to get. That is. And it is likely that we're going to get this deal, because ultimately you need to look at what constrains both sides. And the fact is that neither the US nor Iran have an interest in more escalation. No. So I think we're going to get a muddy deal that, as I said, is just no more bombs in exchange for opening of Hormuz. The more Trump insists on solving the nuclear issue as part of this, the more difficult it's going to get towards a deal, which then increases the escalation risk.
But Anna, does this effectively give the regime an upper hand? I mean, they're stronger than they were 6 months ago. Of course, there's a new Ayatollah, but because it gives them almost control of Hormuz.
So I'm not sure that they're actually stronger. We don't know how strong they really are. I mean, they've been bombed for several weeks. Don't forget that over the past couple of years, the Israelis have been trying to decimate the militias in the region. They've lost military capabilities. They've reduced their nuclear capabilities. So I'm not sure they are really stronger. I don't think we know enough about that. But the issue around Hormuz is critical for the US, because this is about who controls freedom of navigation. That's a core US foreign policy principle since the end of the Second World War. They can't allow Iran to control Hormuz. They can't allow Iran to implement tolls. So if the Iranians don't back off on this issue, I think the US will have to escalate and will have to send in boots on the ground. That's why this issue is really important, because it would challenge the US on a global level, not just in Hormuz, but also in other areas.
I mean, the rumors that, frankly, have never been confirmed about, for example, the Iranians asking for yuan for the safe passage. I mean, this is not confirmed, but there's always China in the background, right? China kind of supporting quietly, not supporting. They don't like it messy, but they're also not calling Iran and saying, this is it. So what's China's role in all of this?
So firstly, China obviously has an interest in seeing the US being weakened and in trust in the US being undermined. But that's a far cry away from supporting Iran outright. Because ultimately, when you look at what is in China's interest, it is that we see ongoing global trade and we see as least economic friction as possible. Because in China, you have a social contract between Xi and the population, which is, I give you economic growth. In exchange, you give me political control. That has to work based on global exports and free trade flowing. So China doesn't have an interest in seeing the Strait of Hormuz closed for longer. On the contrary, Asia is one of the most affected regions. So I think what we're seeing with Russia and Iran is similar. China has supported Russia and Iran in a kind of lukewarm way. Yes, companies are sending and selling dual-use technology because they're taking advantage. They have an interest in seeing a multipolar world order, but it's not an alliance. And there are real limits for China to go in deeper and support Iran. So ultimately, I think China has been trying to put diplomatic pressure on Iran too. But I think we shouldn't make this bigger than what it is. And
so I don't know what the chance is, you think, of getting some kind of deal. And again, it's a small deal, right? It'd be just for the safe passage of Hormuz. And again, does it flare up until there's a bigger agreement? And how long can that take?
So this is a muddy deal. This is not going to be a clean deal. We have to be clear. It's quite unlikely that we're going to go back to the status quo ante, how it was before the war. Because ultimately, you still have an Iranian regime in place, and the Israelis are not happy with that. They're going to continue to undermine that regime. There are also a lot of opposition forces within Iran, Kurdish militias in Iraq that are not happy with the regime. So we're likely going to see more covert operations in Iran, which means that even if there's a detente between the US and Iran, other forces will seek to destabilize that regime, which means the regime will continue to flex its muscles, threatening the Strait of Hormuz occasionally, threatening the Gulf occasionally. That's the new normal that we all have to accept. It's quite likely that we're going to be in this environment, because a real diplomatic solution to all the issues on the table, the nuclear issues, is very, very hard to achieve.
And I mean, if you're a Gulf state right now, do you have to also deal with Iran, because it's a huge, huge problem for your economy, given what's happened in terms of strikes over the last 6 weeks, or are you actually more anti-US than you were before?
Well, clearly, the Gulf states are looking at this and seeing their business model threatened. There's going to be a persistent risk premium until you actually have regime change. So, and I think, and they tried to improve their relations with Iran before. We've seen this a couple of years ago, after the Trump administration failed to protect them. So they are asking themselves some hard questions right now, and that's why also the risk of escalation is not gone, because as long as this regime stays in place, this business model is threatened. So I think as it's clear, there's still a lot more uncertainty, even though the hot phase of the war, the aerial bombardments, is more likely over than not. But as I said, the more the nuclear issues gets muddled into these negotiations, the higher the escalation risk.
Anna, thank you so much. As always, Anna Rosenberg there, head of geopolitics at the Amundi Investment Institute. Coming up, the dangers to the global economy from both inflation and deflation. We'll discuss that with Dambisa Moyo from Versaka Investments. That's coming up next, and this is Bloomberg.
this particular instance, vis-a-vis the war in Iran, we know that there's a 20%, for example, disruption to the supply of energy because of the Straits of Hormuz are disrupted. And that's really quite material because in the past disruptions, the disruption to supply has only been as much as 7%. So this is a really big impact. And we do expect to see that flow through. On the other hand, with the AI aspects, even if you think of energy and fertilizer costs and costs of helium, etc., really eating into margin in the short term, there are longer term questions around what AI will do to business models, what will it do in terms of even deflationary effects and how that might impact debt and the path of interest rates. So I really think about the interest rate being a very important proxy for how we should be thinking about the longer-term effects, both of sort of short-term effects of inflation, but longer-term effects of deflation.
Do you think about debt at all? I mean, again, 2020, COVID, 2022, it's the Russian war against Ukraine, energies all over the place. And we have, the Liberation Day with all the trade concerns last year. And this year is the war in the Middle East. And then you have these underlying kind of like AI issues.
Yes. So I do think about debt a lot, and I think many people do. Obviously, the interesting piece is that it's moved from our concerns in the financial crisis of it being on household balance sheets to now government balance sheets. And there's no doubt about it that the debt problem is not only big, it's also growing. I mean, we just saw in the last week or so that the UK government, or certainly Bank of England, was struggling to, struggling might be too strong a word, but certainly was had to pay up to issue debt. And I think we're going to see a lot more of that. And there are deeper concerns, the shortening of bond maturities for governments, thinking about what AI might do, and deflation could really increase on a discounted basis, increases the amount of the liabilities. And most of all, I would say, without a prospect of a growth, the question is, how do you get out of this debt burden? And I think that's really where the issues lie.
I mean, do you really see a difference between the countries that have energy access and the ones that don't? If you're energy dependent, broadly, you'll be okay, and the ones that don't will be, I think, have structural issues.
We're kind of seeing that now at a very, very, very early stage, because in many respects, I feel like the United States has not yet felt the full throttle of even the disruption, the oil prices. I mean, oil trading as much as over $100. Today it's a little bit off because of the prospect for some resolution. But if you think about it, the concerns around demand destruction, or even policies that will put on a windfall tax or will ration access to food and energy, those types of implications have already started to come to in Asia. There are concerns about that coming into Europe. So I do think longer term we are going to see this become an issue, broadly speaking. But for now, I think there are some countries that are more energy independent, such as the United States, that are somewhat ring-fenced from these concerns.
Dambisa, I mean, going back to AI, does the U.S. have a natural advantage? I mean, they have all the AI companies, right? It also means that their banks can actually test the models much better than maybe European banks. It means that they understand how it impacts their economy, maybe more than Europe. Is that true and fair?
So I think superficially, yes. I think there are many things, a confluence of factors that make the United States very attractive. It's got the innovation. It's got the energy dependency. I mean, there are some issues around that, but it will continue to evolve. It has talent, and it has deep capital markets. I mean, I think a lot of that is very sort of bitty in the European context, and which is quite funny to watch your earlier segment around Europe and the reaction towards a long-standing debate about whether Europe can be more integrated in terms of capital markets. But I think that handful of things, public policy that's much more interested in investment rather than risk mitigation. There's a lot of things that come together in the U.S. versus European context that make the U.S. a standout winner. And we see it not just in GDP numbers in terms of the U.S. doubling, or certainly being double the size, roughly double the size of Europe today, having been the same size of GDP in 2008. But we also see it in terms of valuations, in terms of liquidity in the markets, IPOs. I mean, it goes on and on. So I think it makes it a standout.
Yeah, a standout, definitely, on more than one metric, as you say. Dambisa, thank you so much for joining us. Dambisa Moyo, principal at Versaka Investments. Now, Mistral AI's chief revenue officer says the company has evolved to become a full-stack platform, I'm losing my voice, there's so much news out there, whose advantage lies in customizing AI for enterprise workflows. Now, she says revenue is being driven by large global clients deploying tailored models across industries like finance and manufacturing. Well, I spoke to Marjorie Janowitz about the French firm's global ambitions.
Over the past couple of years, the company has evolved quite a bit to be a full stack AI company that provides frontier AI models, but also developer tools all the way to apps and compute. So we are offering a vertical stack between model, intelligence and applications, whereby what we offer to enterprises is the ability to customize the models to their IP, to their tooling, to their knowledge. So we believe that, of course, being frontier AI is important, but what's even more important in order to really drive return on investment in the enterprise is the ability to customize the models to the enterprise context. And that's really how Mistral has become very, very known over the past couple of years, driving value in the large enterprise globally.
So, Marjorie, what's your biggest source of revenue right now, and how are you planning to grow it?
Yeah, our biggest source of revenue right now is very much enabling the large, I would say, enterprise transformation with very big accounts globally. We sell our AI Studio together with AI Forge, which is a tool we launched a couple of weeks ago to enable customization, as I mentioned. All those tools are really able to be deployed everywhere, on the edge, on-prem, in public clouds. And most of our revenue comes with really all those toolings combined with our forward deployment engineering services to really enable multiple use cases in very, very large enterprises in financial services, manufacturing and public sector. Our revenue comes from all those components combined. And we expect that to continue to grow globally.
And so, you know, you've given us there some of the top use cases. What else could you look at, given also Anthropic's traction has really been driven by these coding agents?
Yeah, so coding is, of course, very important. We also see multiple use cases that are really enabling the transformation in the large enterprise. One of those use cases is very much all around the complex workflow transformation. For the past couple of years, a lot of companies have been struggling to see the value of AI. And it's very much because the models were not adaptable enough to the complex environment of those enterprises. So complex workflow transformation is definitely for us a big winner in the sense of larger enterprises in financial services, for example, trying to transform their KYC process. In manufacturing, we see a lot of enterprises that are really trying to improve defect detection as a complex process. So beyond coding, being able to really adapt the model with the data of those enterprises and enabling them to transform their back office process is very important. Another use case that's top of mind for many organizations as well is a revenue generating use case, being able to really adapt the models to really build opportunities with things that were not possible to do in the past. We custom develop models to language, domain and culture. You may have seen some exciting announcements, for example, in Asia, where we customized models for healthcare data, knowing also to speak fluently Southeast Asian languages, and that enables really use cases that were not possible to achieve in the past.
Would Mistral offer cloud services to other companies, for example, from its data center?
Yeah, so right now we really go wherever the data of the customer is. It means a lot of our deployments are on virtual private cloud, on premise and also on the edge. But our willingness is very much to deploy customers in our own cloud as well with Mistral Compute that we released a few months back. That's also linked to an acquisition we made recently with a company called Koyab, which purpose is going to better enable cloud deployment on our own compute services.
I was going to ask whether you had access to Anthropic Mythos and what you made about the cybersecurity concerns.
Yeah, we're starting to see quite a bit of cybersecurity use cases at Mistral as well. A lot of companies are asking us to really custom develop model and helping them with use cases that are specifically targeted at cybersecurity overall. I have 7 years of cybersecurity myself, so I'm very glad to see Mistral getting into the cybersecurity side of things, customizing models to better enable really safety in the context of AI.
And have you been able to play around with Mythos?
So, being a chief revenue officer, I haven't, but we see a lot of our customers that are playing around with it a little bit.
Well, that was Marjorie Janowitz, Mistral AI's Chief Revenue Officer. Now, coming up, Jimmy Muchachetre, the Senior Equity Analyst at Investec. We discuss UK and global equities. That's coming up next, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
UK unemployment has dropped unexpectedly in February. It comes as the Prime Minister, Keir Starmer, faces more scrutiny over his controversial appointment of Peter Mandelson as U.S. ambassador, with fired civil servant Ollie Robbins given public testimony in the Commons. Well, let's discuss the UK and the macro outlook with Jimmy Muchachetre, a senior equity analyst at Investec, and John Stepek, author of Bloomberg's Money Distilled. So thank you both for joining us. John, let's just start with the UK, because it feels like we've been saying it's crunch time for a little bit for Keir Starmer. Yeah. But, I mean, in how much trouble or hot water is he now? Whether he knew or not, he should have known about, you know, what his ambassador to the U.S. was up to.
Yeah, no, absolutely. And I think that's the plainest fact about this. I mean, the conversation with Ollie Robbins today, I was watching some of the select committee hearing before we came in, and it's ongoing just now. And I would say, to be fair, I don't think there's not an obvious smoking gun there in terms of the processes, and be able to turn around and say that, oh, this definitely happened or this definitely didn't happen. But that kind of doesn't matter. It really is just another straw in the camel's back. Now, I think what will probably happen, the question now is not so much, you know, do people want Keir Starmer to stay or go? I think it's fairly clear they would like him to go. The question is, can the Labour Party actually get itself in shape to do that? And I suspect that we're still looking at the May local elections as being a trigger for that, because at the end of the day, we're 3 weeks away from them. So why would you make a move now? You know, the people who might want to line up to replace him will be getting their, you know, their soldiers in order. and then they'll make their move after May the 7th if they make a move at all. And I think that's the kind of big question.
No.
Whether that matters for markets is a slightly different issue, I must say.
I guess it depends who comes next if he does go,
Yeah.
right? Jimmy, overall, I mean, there's a lot of, geopolitics is dominating everything. But the markets are quite optimistic. I mean, they seem to just want to look through these tensions.
Yeah. That's a good thing. The markets are forward discounting mechanism. And so they priced in the war before it started, when there was the posturing in the Gulf of Oman. And they're doing the same thing now. But part of it is also that the shock factor lessens over time, the sting lessens over time. We keep getting the same headlines, the same, is this happening, is this not happening? And over time, it's got less impact. And so the market moves on.
I'm surprised because no one's telling me that we're going to go back to normal. So, we talk about ceasefire, better position, we're going to be in a better place, but no one's saying, well, we'll go back to what was going on in January in terms of the Strait of Hormuz.
I think that is true. That is true. The Strait, as it's showing now, there are so many stakeholders at place that something needs to happen. We probably won't go back to, because if you're Iran, you've suddenly discovered this power that you didn't know you had. But it's interesting. It's also happening in AI, where there's big change, but it's never going to go back to where it was before.
Yeah, which is why when we're speaking to Dumbies about these two opposing forces, right, it's AI and geopolitics, and they're not cancelling each other out, but one is deflationary, the other one is inflationary. How much trouble is that for the UK, especially on the energy front, and with this layer of political crisis?
Oh, I mean, as far as the UK goes, I mean, I guess we're a sideshow with this. I mean, I think it's really interesting what you say about the market having priced in Iran, and I'm sort of thinking, but they're not discounting anything. It's like those stocks in the US are at record highs. And I think what is perhaps at work slightly is both AI, but also the fact that the bears have been wrong for so long on everything. And now we're at the point where the market needs to see proof. So the market needs a show-me moment from the bears for the bear case. And that really won't happen unless earnings start to show some deterioration as a result of the rising energy price. And I guess the other issue is that we are less oil intensive than we were in the 1970s. So at the end of the day, $100 oil price, and I realise the oil price is very different depending on what you're actually talking about. But at these levels, it's not as catastrophic as it kind of needs to be. So as far as the UK goes, I mean, the UK's real problem is that we don't have governance, and we kind of need governance because all of the problems we've got boil down to things like planning rules, energy usage rules, which are all things that are kind of set by government and need to be somewhat unwound by it. And instead, we've just got our politicians having these ongoing psychodramas, as has been the case, I guess, for about 10 years now. And the problem is, in 2024, people thought that was over, and in fact, it's just been exactly the same. So we're going to get one bad Prime Minister replaced by another one, or not. And I guess maybe markets will just get slightly used to ignoring us.
Yeah, Jimmy Savvy, the fear of missing out is strong. The power is strong in the markets, and that kind of also is defining it. What happens to dollar and gold?
So our view is that the de-dollarization is more of a structural trend, partly related to the fiscal situation in the US, which keeps getting worse, by the way. And this war does not help the situation. But also it's also the uncertainty around the political side of things. In fact, what's the policy impact that we're going to have? Today, we're going to have a testimony from Kevin Walsh. And one of the questions you have to answer is, does he work for the Trump administration or is he independent, right? So all this uncertainty means that the market participants like us who are long-term investors, we're looking to diversify. We want to bet on a sure thing over the long term, and this uncertainty means that gold will continue to do well because the de-dollarization trade is more of a structural one.
Jimmy, I keep on getting reminded. Walsh is just one vote, right?
100%, out of 12.
So it matters in terms of psychology, but again, the market is kind of anything that the president of the U.S. does that would suggest he's hurting at the central bank independence is ignored by the markets.
Yeah, 100%. I think the key for the markets, from our perspective, is the independence of the Fed, of which the Fed chair is one person, but one of the most important. He gives the casting vote. He can help align some of the other Fed members, in a certain direction. And apparently Kevin Walsh is not one for forward guidance. Yeah. So if there's less forward guidance, then he can work more in the background, if you see what I mean. But for us, it's more about certainty. And I think that's what the market is all about, is what can we get certainty for? And I think that's the part of the conundrum which you mentioned, John, which is the market all-time highs with all this uncertainty. How does that work? Well, if you look at some of the biggest companies in the world, they've got certain in terms of pricing power. So give me $150 oil, will pass through that cost. The ones that haven't got the pricing power will suffer.
Okay, in 20 seconds, I live in the UK. Is my margin going up or down?
Oh, God.
I know, in 20 seconds. There's nothing like a curveball.
Depends on the Iran war, basically. To be fair, I think interest rates in the UK are pretty high, and the Bank of England would rather cut them. I don't think they're going up, basically.
Okay, I love this. John and Jimmy, thank you so much for joining us. Jimmy Muchachatere, a senior equity analyst at Investec, and Bloomberg's John Stepping. Coming up, an interview with Ukraine's Deputy Prime Minister. That's at 10:15 a.m. London time. Again, a lot of the markets are looking at two things. So the market is pretty much ignoring what's happening in the UK, although there is a big story with the top UK official saying he felt pressure to approve Peter Mandelson. But they're looking at Iran. And again, we're a little bit in a wait-and-see situation. S&P futures gaining 0.2%. Up next, it's Bloomberg Brief, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Peace talks hanging in the balance. Oil drops as markets await the fate of the ceasefire with Iran. Apple appoints a new CEO, hardware chief John Timus, set to replace Tim Cook in September. And President Trump's Fed chair nominee Kevin Walsh heads to Capitol Hill for a confirmation hearing. So let's take a look at these markets. Oil just off its highs of yesterday. We're still waiting to see what actually happens with these Pakistan talks and if they go ahead with delegations from both sides, right? But Brent crude is around the $95 a barrel mark still. New York crude at 88 and change. Not too different from where we were 24 hours ago. Interestingly, Ed Yardeni out with a new call today saying that we should overweight energy in the S&P 500 after last week's sell-off. He's recommending a 5 to 10% portion of your portfolio should be now in energy. The two-year yield just up a basis point at 373.50. If we look at futures this morning, remember we had a massive run-up. It looks set to continue, but maybe not as enthusiastically as the last few days. The dollar index continuing to strengthen, though, which is a major sign. Nikkei pointing out today as well that the Bank of Japan may hold off on an April rate hike. That had been widely anticipated by the market, and that they may delay making a decision now until June. So lots of things percolating in the background, but obviously the main stories today are the AI investment, the Kevin Walsh testimony, and of course whether these peace talks take place. So let's dig into the belly of this market, if you like, and see what's moving pre-market. We'll go over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Apple is a little weaker this morning after announcing its new CEO. So the head of hardware, John Ternus, will be replacing Tim Cook, who will move on to the role of executive chairman. And some analysts have flagged that the timing of this transition may be raising some questions for investors about the strategy going forward for Apple. And therefore, that might explain that slight weakness in the shares in pre-market that we're seeing today. Moving on to another tech giant which is doing much better, and that is Amazon, which has said that it will invest another $5 billion into Anthropic and may inject $20 billion more as well over time. So this is an expanded partnership that's seen as a really positive development for the company and really showing this growing demand for enterprise products. We're up about 2.7%. And finally, Alaska Air is down in pre-market this morning after suspending its guidance because of higher fuel costs. So this really echoes what we've heard from other airlines, including EasyJet just a few days ago, and shows just how much pressure this airline industry is facing because of the war in Iran.
Absolutely. We'll be watching for earnings from United later. Chloe, thank you so much. Chloe Melly there. And coming up in this hour, an exclusive conversation with Ukraine's Deputy Prime Minister. We'll also have more on markets with Kevin Mann of Hennion and Walsh. But first, President Trump says he will unlikely extend that ceasefire that is set to expire Wednesday, telling Bloomberg News, quote, "I am not going to be rushed into making a bad deal. We've got all the time in the world. I'm not opening the Strait of Hormuz until a deal is signed." According to people familiar, Iran is sending a team to Pakistan. However, its parliament speaker writes on X, "We do not accept negotiations under the shadow of threats, and over the past 2 weeks we have prepared to reveal new cards on the battlefield." Let's get to our team coverage now with Jumana Brzezinski in Dubai and Laura Davison in Hong Kong. So, again, the rhetoric is a little bit confusing. We have black and white rhetoric on both sides, right? But, Jumana, let me ask you, the ceasefire has held for the last 2 weeks. There is room for hope and maybe some signals from Iran potentially that they might actually send a delegation?
Well, that's the big question. And so far, there has been no official confirmation that the Iranian delegation has arrived or is planning on even attending these Islamabad talks. And we know from Islamabad and the messaging that's coming through from Pakistani media that preparations are underway. There are thousands of security officials who are ready to host these talks. There are parts of the city that are in lockdown as well. So the expectation is that the talks are going to go ahead, but yet we are awaiting final confirmation from Iran that they will attend. Now, I will say, in the last 24 hours, the language that has come through from some of the key players, especially on the negotiation side, suggests that they are hesitant to participate, and namely because the U.S. naval blockade is still in place. You had the likes of the Iranian Speaker of the Parliament, Mohammad Ghalibaf, who led the last round of negotiations, saying that Trump seeks to turn the negotiating table into surrender. We do not accept negotiations under the shadow of threats and have prepared new cards for the battlefield. This has also been echoed by the Iranian ambassador to Iran, who was saying that Iranian ambassador to India, I should say, who said that they will not surrender and they will not participate in discussions under the threat. And here they're particularly referencing this U.S. naval blockade and the fact that it is still being implemented. And so the thinking from here on, perhaps in the coming hours, is the U.S. has to make a decision as to whether they go ahead and continue with this naval blockade at the risk of torpedoing another round of discussions, or they temporarily lift it to give diplomacy a chance. And I should say, to come back to your comment, the ceasefire does expire tomorrow evening. It was supposed to expire tonight, but President Trump told our colleague Jeff Mason yesterday in a phone call that he was pushing it back by 24 hours, perhaps to give this window of diplomacy a chance.
So, Laura, Jumana mentioned what President Trump said. Can you give us any more detail on what we might know might be going on behind the scenes?
Yeah, this has really sort of been a very confusing period. The White House has said that J.D. Vance, the vice president, will go over to lead the U.S. delegation in these talks, along with Steve Witkoff and Jared Kushner, who have also been involved. But they have not yet left the U.S. It'll take them, 12 plus hours to get over there. So there's a lot that can happen, in terms of something coming together quickly, or perhaps falling apart together quickly if the two sides aren't seeing eye to eye. Trump has continued to express optimism that a deal could come through, but we're working with a very tight deadline. Even with Trump extending that deadline essentially by a day, that doesn't really give a lot of time for the two sides to both get on site, get in a room, and hash out some sort of deal. Trump has continued to project that, that all the points that he wants of Iran giving up its nuclear program, opening up the Strait of Hormuz, are part of this deal, and Iran has continued to insist that they have not agreed to any of those key points. Meanwhile, Trump has continued to say that if a deal is not agreed to, that bombs will go off on Iran and he will pursue a military attack. So this is a very, very tense moment on all sides.
Jumana, 3 ships did attempt to cross the strait. Do we have any update? Did they make it through?
Yeah, so one of them is of particular interest because one of them is an Iranian-linked vessel that has been carrying cargo, so it's actually laden. And from what we can tell this morning, and again, it's difficult because what these boats do is they turn off their signaling after a while. But from what we understand, this Iranian vessel did actually make it through the Strait of Hormuz into the Gulf of Oman, and then it switched off its signaling unit. So Iranian state media are portraying this as a win, in that the Iranian-linked vessel has managed to navigate through the U.S. naval blockade. And then there were 2 others that we were monitoring as well, not linked to Iran, that seemed to have traversed the strait too. But the bottom line is there are 2 blockades essentially still in place. And while last week we started to see perhaps a higher number of vessels trying to transit through, anything from a dozen to 15 a day, now the last couple of days we are down to about 2 or 3 that have gone through, really not that many. And especially after CENTCOM seized that Iranian-linked vessel on Monday morning, I think that sent a lot of alarm bells through the industry, because the concern is not just whether they get the green light to pass through, but whether actually it is dangerous for the vessels to do so. So yes, the strait is still a major point of contention as we head into these potential Islamabad talks in coming days.
Laura, I do want to ask you about something else that's happening in Washington today as well, and that is the Senate Banking Committee speaking with the potential Fed chair, if he is confirmed, Kevin Walsh. What should we expect questioning to be like?
Yes, this will be a very dramatic hearing. Walsh will have 2 audiences, essentially the senators who are in the room, who will need to vote on his confirmation, but also at the White House and Donald Trump. So he'll need to show both enough, distance from the White House, show that he believes in Fed independence and sort of the academic rigor behind his case for interest rates cuts, while appealing to senators, but while also not making Trump angry. And so this is going to be a very, very difficult thing for him to navigate here. But really, the big thing that's going to be hanging over this hearing is this ongoing Justice Department investigation into Jerome Powell, the current Fed chair. This is essentially the thing that is keeping Walsh from becoming Fed chair. There's a key senator, Tom Tillis of North Carolina, who says he will not advance Walsh's nomination until this probe is resolved. Trump has said he wants to continue this. This really sets up a standoff that even if the confirmation hearing today goes swimmingly, Walsh could be waiting for weeks, if not months, before he's able to advance and actually take over at the Fed.
Well, the bond market's certainly looking out for that testimony, Laura. Thank you so much. That is Laura Davison there. And also thank you to Jumana Bercecci. In Cupertino, meanwhile, Apple announcing a new CEO. Head of hardware engineering John Timus slated to take the helm in September as Tim Cook stays on as executive chairman, stepping down, though, after a 15-year reign at the head of the tech giant. Matt Knoxam of Bloomberg Intelligence joining us now. What will the new CEO's priorities be, Matt?
Yeah, I think this is kind of very much perceived as the kind of continuity candidate. So I think clearly hardware is the core of Apple. It accounts for over 70% of revenues. He's coming from the hardware engineering group. So I think there'll be a huge focus on product excellence. I think obviously there's a couple of big launches coming. Firstly, the foldable iPhone. But I think there's going to be a whole bunch of wearables, including kind of vision, like a bit like the kind of the Meta glasses that's coming out. So I think there's going to be a focus on product excellence, but perhaps also some more focus. We've seen some big hits from Apple in recent years, particularly things like the iPods. But there's also been a few misses, like the vision glasses. So I think there's going to need to be quite a bit of focus on what the right product options are. And then on top of that, there is the AI integration. Obviously, there's been a kind of a mixed review about how successfully Apple has been integrating AI into its products and the overall AI software platforms. I think that's something he's going to have to get really right, because clearly going forward, AI is going to become an increasingly integrated part of every product they have to put onto the market.
Yeah, absolutely. Meantime, we're also hearing that Amazon is investing $5 billion in Anthropic. Amazon already one of Anthropic's biggest backers. It might even move that to $20 billion over time. How much is too much of this, Matt?
Yeah, well, I think clearly Amazon is, kind of hedging its bets to a degree here on the AI trade. They early this year made a much bigger investment in Anthropic's rival OpenAI, $50 billion. So I think they kind of want to make sure that they're kind of covering all bases. Obviously, they've got a huge cloud services business, so having strong partnerships with these AI businesses is an incredibly important way to kind of bring volume onto that cloud platform.
And then we're also hearing that Project Prometheus is nearing another round of funding, $10 billion. It was valued at almost $40 billion, Matt.
Yeah, so Prometheus is an interesting project because it's essentially trying to bring AI into the physical world, and particularly in terms of physical engineering. I think there's already a lot of automation and technology involved in engineering and manufacturing, but there's clearly still a huge amount that AI can do to boost that. So I think this is a strategic bet that it's going to be a big market over the mid to long term, and they're trying to get a leading position in that. So it's an interesting thing to watch for sure.
Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. President Trump's super PAC raised almost $36 million in March, part of the $1 billion war chest he and his party are building ahead of the midterms. Billionaire Diane Hendricks, who owns the biggest distributor of roofing materials in the U.S., is the top donor, giving $25 million. In comparison, Democrats have $261 million in their war chest. UniCredit CEO Andrea Orcel says he'll put the pursuit of Commerzbank on hold if his takeover bid fails to get him control. He spoke with Bloomberg's Francine Lacroix.
For the time being, I signaled clearly yesterday that after trying this other step to bridge the gap that exists between us and Commerzbank, i.e. launching an offer, if we do not reach control, we will take a pause and we will focus on other topics that we have internally.
Estée Lauder is seeking $5.9 billion to fund its tie-up with Spain's Puig. JP Morgan has been hired to structure the package, which would fund a cash-and-stock takeover for Puig, which owns Carolina Herrera and Charlotte Tilbury. JP Morgan and Estée Lauder declined to comment on the reports. Coming up, an exclusive interview with Ukraine's Deputy Prime Minister on the country's plan to get to peace. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's get straight over to Brussels now, where Bloomberg's Oliver Crook is standing by with an exclusive interview. Ollie.
Yeah, that's right, Vani. I'm here with Taras Kachka. He is the Deputy Prime Minister of Ukraine with a number of responsibilities, including the main responsibility of integration within the European Union, which is obviously a very sort of present topic right now in Brussels and, of course, in Kyiv. So, Deputy Prime Minister, thank you so much for joining. Before we get into the enlargement conversation, I'd like to have a conversation with you about this oil pipeline, whether or not the oil is flowing currently from Russia through Ukraine to Hungary, which is the precondition Orban has sent to release that 90 billion euros. What can you tell us this morning?
So that I'm here in Brussels, so I'm not actually, my hands are not with oil, so that's why I didn't check it personally. But the letter of our president was very clear, so that in reply to letter of Presidents von der Leyen and President Costa, that the pipeline will be fixed in by estimation last decade of April. So that's why we hope that our company will do it literally today, and we all expected this to be done as soon as possible, because it was also our promise to fix it by this time period. Yeah, so that's why let's look for an announcement from company, from our Minister of Energy. But this is our very primary task, as was indicated in the letter of our president.
Yeah, and of course, and we've heard from President Zelensky when we spoke to him back in November. He said that this EU loan is a matter of survival for Ukraine. So what is your timeline in trying to get that money, that first tranche of money, and when is it necessary by, just so we can impress very clearly on your partners when Ukraine needs that money by?
Our plan was to have these monies in April, so starting from Q2. So that's why we're already beyond the deadline. So we have some kind of financing under current instruments. We speed, make it faster, the payments, and we thank European Commission on considering these more flexibilities for our current Ukraine facility instruments. But we need this money as soon as possible, because this is a first credit that has essential part of it is for war needs. So that's why our military spending, especially on armaments, on drones, are literally matter of life and death. So that's why we need this money as soon as possible. The more or less realistic scenario was June. We do all our best, and we hope that member states support us, that we will get this money sooner.
And of course, that is very critical, not just in financing the war in Ukraine, but also sending a strong signal to Russia, saying that we're in here for the long haul, we're in here for the long fight. Part of that strategy as well is your main portfolio, which is joining the European Union. We've seen some sort of proposals that have been circulating over the last couple of days and weeks and indeed months. We've heard most recently from the French and the Germans, who are proposing a sort of associate membership of Ukraine into the European Union, which seems to sort of give a sort of titular status without any of the benefits. Is that something that is at all appealing to Ukraine?
it's, you know, that when you discuss this here in Brussels, but to the global audience, it resonates in different ways. So something that is like delicate, prepared for discussion within council can resonate in the messages that we got yesterday in the article about these documents. So our goal is to join the European Union as soon as possible, because it's like our dream as Ukrainian society, but as well, this is also a part of geopolitics about security guarantees in their virtue, in their essence. So that's why for us it is important to say that we are ready to comply with all requirements of the European Union as fast as possible. So we got the benchmarks from the EU, now we need to open the cluster, so that's why by the end of this year we can really comply with majority of requirements.
And so give me your most optimistic timeline in joining the EU, and how does the absence of Viktor Orban now bear on that?
Yeah, so that's why I continue in this topic about clusters, is that if we have an ambition to comply with all the benchmarks presented to us by member states, then we believe that it is possible to sign the Treaty of Accession next year. That's why we are talking about joining the next year, signing Treaty of Accession next year, and then everything will depend on ratifications that can also last for several years. So that's why our debate between member states, so that French proposal or French ideas, not proposal, because it was like general suggestions leaked to media, or German ideas, or our ideas. We also prepared our non-paper, which is more ambitious. They all about the same, how to bring Ukraine as fast as possible to the European Union. But for us, it is important that this scenario is based on speeding up, on absolutely serious classical accession, not creating any alternatives as it was perceived from yesterday coverage of this topic.
Yeah, and there's been some research done in how much of these sort of steps taken that have to be taken have been taken by Ukraine. I've seen a report that says basically only about 10% has been put forward.
Thank you, but I will correct you from the jump. So that it was a paper about like 10 points we agreed between me and Commissioner Kos.
Yes.
It is not about overall assessment. Overall is more expensive.
So what percent would you give to it?
Now it jumped already from last week to the 40, I think, because we adopted 2 laws from this list, and also we are going to submit anti-corruption strategy. So that's why we are moving very fast.
Right. And you say that your priority is to be a full member of the European Union. That may not come with all of the privileges on day one. That is something that will be negotiated as well. Where are you willing to negotiate? For example, the agriculture has been a very sort of big focus for many nations within the European Union. Could you see a delay to sort of cap funding, for example, in order to gain accession?
It was from the very beginning very clear. We stated even in our paper that the interest of joining the European Union, as like for Iceland, for example, they believe that they need to join the European Union now because of geopolitical circumstances. And our interest to join the European Union lead to the consciousness on our side that we cannot wait for years to agree all modalities of joining the CAP. We propose from this start that we may join CAP later, maybe eventually in like next generation, not the generation that is discussed now.
So the next budget, you're saying,
yeah,
34.
So this kind of approach is possible, but let's start discuss modalities.
And just to have the sort of a limit, we have a little bit of limit on time. I'd like to get your appraisal of the war in Iran, the impact that it's having on the battlefield within Ukraine. There have been sort of reports about delays to delivery of hardware through the Pearl program. What can you say about that? Does that war need to end before we can really talk about serious peace negotiations that involve the United States?
So I want to highlight one thing, and it was highlighted by our president during his visit to the Gulf, so that to share our lesson that you can save the precious missiles for Patriot by using more efficient drones that we have. So that's why for us it is important to ensure that we are not artificially create the deficit of missiles, and so anti-missile systems that are essential to counteract ballistic missiles, because Russia is now using a lot of ballistic missiles that can be intercepted only by Patriot or only by the systems that are still being developed here in Europe. So that's the message. I think that if we are coordinated, then we can be efficient in deterring all our enemies.
And just we have about 1 minute left, so just very quickly, how do you appraise peace talks with Russia? Would you say that we're any closer today than we were a year ago?
A year ago, yes, but months ago, no. I think that intensity is definitely lower, but the problem remains the same. It is Russia that doesn't want to be part of negotiations, and that's why we need to increase pressure on Russia in order to force it to be part of negotiations.
Well, Taras Kachka, thank you so much for your time. That's the Deputy Prime Minister of Ukraine, giving us generously of his time this morning, getting a lot in that short period of time. Thanks very much, Vani.
Oliver, thank you so much. That is Oliver Crook there with Ukraine's Deputy Prime Minister. Coming up, we're going to be speaking with Kevin Mann of Henyon and Walsh. Retail sales out in 3 hours. Also, the dramatic whiplash in these markets. Brent crude just off its highs. New York crude down 1 3/4% right now, still around $88 a barrel. And gold also just off the $4,800 a barrel mark. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Peace talks hanging in the balance. Oil falling as markets await the fates of the ceasefire with Iran. Apple appoints a new CEO. Hardware chief John Ternus set to replace Tim Cook in September. And President Trump's Fed chair nominee Kevin Walsh heading to Capitol Hill for a confirmation hearing. So oil off its highs of yesterday then, but we are still around $88 a barrel for New York crude. Brent crude around 95, roughly where we were at this time yesterday morning. All eyes on whether those peace talks will actually take place and if there will be an extension to the ceasefire or any kind of a deal, as President Trump says he is waiting out for. We're also going to be watching the Walsh testimony on the Hill. We may see a Treasury reaction to that. 373.71 is where we're trading on the 2-year yield now, about a 50% chance of a rate cut this year. But if Walsh leans any more dovish, we may see a move there. And we are seeing futures higher today. Once again, a little bit of enthusiasm, an AI deal also in these markets. The US dollar index up about 0.2%. Worth noting as well that the Bank of Japan is now leaning towards keeping its policy rate unchanged next week, according to people familiar with the matter. Let's get to some individual movers now for some stocks to watch. Here's Chloe Melly. Chloe.
Good morning, Bonnie. We're seeing slight weakness in Apple this morning after the appointment of a new CEO. So the hardware chief, John Ternus, will be replacing Tim Cook, who just joins as an executive chairman instead. And so we are seeing a little bit of weakness there, with some analysts mentioning that there are maybe some questions around the timing of the transition. But this really emphasizes the identity of Apple as a hardware company. So we'll be watching out for any further movements there throughout the day. Moving on to Amazon, which is up this morning in pre-market after saying that it will invest $5 billion into the AI startup Anthropic and may inject $20 billion more as well. And so this expanded partnership is seen as quite a positive development there and really underscoring the demand for enterprise products, and therefore we are up. And finally, Alaska Air is the latest airline to be flagging the impact of those higher fuel costs on operations. So we had EasyJet a few days ago warning of losses, and Alaska Air last night suspended its guidance for the same reason. So this really shows the growing pressure facing that airline industry, with really no let-up in sight at the moment.
All right, Chloe, thank you so much. We are in the thick of earnings season, that's for sure. Stock futures back in the green as investors await for any update on those US-Iran peace talks. Joining us now is Kevin Mann, CIO and President of Henyon & Walsh Asset Management. Kevin, it's not just the Iran story, there's also the AI story in this market. And of course, we're getting more data today. Retail sales. Talk to us about the consumer. Is the consumer going to hold up in this environment?
Well, what we've learned from the big banks during this retail earnings season is that the health of the consumer is generally good. They continue to spend, and the banks aren't necessarily concerned that there's going to be a large amount of delinquencies with respect to their credit card balances. So that sounds good. Does that trickle through, though, into retail sales? Why are retail sales so important? Well, 70% of the economic growth in our country comes from consumer spending. And we all understand and appreciate the K-shaped economy that's developing. The upper end continues to spend. Institutions continue to spend on things like AI infrastructure and defense, and also, as we know, healthcare. But how is the lower end consumer doing right now? Are they continuing to spend? So I'm very interested and keen to see how that trickles into the retailers and retail sales overall.
Yeah, because it's basically tax refunds versus the higher cost of energy and so on due to this war, right? The president needs to get some kind of a deal. There needs to be an extension to the ceasefire. Would you agree?
Yes, 100%. And I think that most investors have already looked past the war, if that's even possible at this point in time. Why would futures still be up this morning? They believe that the situation in Iran is going to ultimately be resolved, and now they're focused back on earnings again. They're looking back at AI and technology companies, and what a historic recovery we've seen for the stock market in recent weeks.
Well, speaking of which, I mean, we've had this massive rally, as you said, but it's global tech. Is there any reason for investors to be looking outside the United States, or are the issues facing tech right now and the AI trade, are they global issues?
I think investors should always consider adding international stocks to build a globally diversified portfolio. Certainly over the last 18 months, that would have benefited a lot of investors, as international stocks have outperformed U.S. stocks. Emerging market stocks have outperformed developed market stocks. But when you look at the AI trade in particular, everyone focuses on semiconductors and chips and software companies. Where I see greater value is in the infrastructure side, the power side, the memory side of the AI ecosystem. I think investors look to those areas. They're going to find a lot more attractive targets than they necessarily would if they just stuck to software, because software focuses on spending. I'm more interested in who's receiving the spending, not who's making the spend.
Give us a few names, Kevin. I know
Sure.
you have your eye on some.
I'll start with Sterling Infrastructure. They're known for e-commerce, construction, warehouses, distribution centers. Now they're involved in data centers. In terms of cooling companies, how about a company like Vertiv or a company like Modine Manufacturing? These data centers run hot and they need cooling. Then I think about power. Big old boring utility companies, right? These data centers today can't manufacture their own power, so they have to turn to the utilities of the states they operate within. NextEra Energy, which owns Florida Power and Light, which itself has 2 nuclear sites down in Florida itself. Memory. The AI revolution starts and stops without memory. When I think of memory, who do I think of? Micron Technology. Boy, do they have a strong
More room to run there?
More room to run there. You look at their forward PE right now, it's 8. That's how much we believe their earnings are going to grow from here because of the insatiable demand for memory.
You know, a statistic that came out this morning, or Dan Curtis sent it to us, 25% of the tech index is basically overbought. Does that concern you at all?
It does if I was buying that portion of the tech index, but I still see great opportunities there. Take Taiwan Semiconductor, the leading chip foundry in the world with over a 60% market share. Look at their forward P right now. It's still relatively attractive. I think somewhere between 23 and 25. Now, that's not cheap, but it's not too rich either. So you have to look for the right opportunities that exist within the ecosystem and don't overpay here.
If you've decided, okay, I have some money in tech, I'm not going to put any more in because I just don't trust that part of the market and I want to look for other opportunities.
Yes.
Ed Yardeni out today saying overweight energy. Are there other parts of this market that you would be interested in?
One area that I'm very interested in right now, and I remain interested, and I was last year and I will be for the balance of this decade, is aerospace and defense. And certainly the conflict in Iran, the recent expedition of Artemis around the room reminds us of the need for aerospace and the need to replenish, upgrade, and modernize defense capabilities across the globe. If you follow the money, Bonnie, you'll see where those opportunities exist. NATO countries committed to spend up to 5% of their GDP to bolster their own defense by 2035. The European Union's committed to spend around $840 billion to upgrade their defense capabilities by the end of this decade. Who's going to get all that money? Likely the largest defense contractors in the world, and most of them reside here in the United States.
What would you do about the Treasury portion of your portfolios, Kevin?
I think why you have the treasuries in your portfolio in a lot of cases is for the income that they provide and the risk mitigation that they could offset to an overall stock-based portfolio. So you have to look at what your income objections are. Right now, I would look to extend maturity, extend duration in those portfolios, because if there's any movement that's going to take place in the yield curve this year, as of now, it's going to be on the short end of the curve. Of course, once Kevin Walsh gets confirmed as the new Fed chair, will we only get 1 rate cut this year, as the Fed told us? Will we get 2? Will we get none? I don't think we should expect that much from the Federal Reserve this year, and we may not need to.
You think there might be none?
There could be none, at most 1. I'm going to take the Fed at their word, but I'm most interested to see their new dot plot chart once the new chair takes position.
All right, well, we've got a little time before all
Yes,
that
we
happens.
do.
Kevin, thank you so much. Much appreciate
Bonnie.
you coming in this morning. That is Kevin Mann of Henyon & Walsh Asset Management. Now, to other top stories trending on the terminal this morning. Ukraine's richest man has bought a luxury apartment in Monaco for a record $550 million. It's the biggest known home sale in history, surpassing Nick Candy's Chelsea mansion purchase in London a few weeks ago. Billionaire Rinat Akhmetov used his holding company System Capital Management to acquire the 21-bedroom waterfront property. Alaska Air suspended its full-year profit guidance and forecast a deeper loss than Wall Street estimates for the second quarter. The fuel prices contributed to a volatile quarter marked by disruptions from rainstorms in Hawaii and civil unrest in Puerto Vallarta ahead of the peak spring break travel season. New York's Penn Station is getting more funding. The U.S. Department of Transportation is allocating $4.7 billion to renovate Penn and Washington's Union Station. The money will go towards streamlining passenger rail service, rebuilding bridge infrastructure, and other renovations. Coming up, President Trump readies VP Vance to leave for Pakistan for peace talks. More on that next. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The Iran war ceasefire set to expire in fewer than 2 days. President Trump says an extension is unlikely, while readying VP Vance to head to Pakistan for another round of negotiations. The president told Bloomberg, quote, "I'm not going to be rushed into making a bad deal. We've got all the time in the world. I'm not opening the Strait of Hormuz until a deal is signed." Bloomberg chief Washington correspondent Tyler Kendall joins us now. Tyler, what do we know about the vice president going to Pakistan and who might meet him there?
Hey, Vonnie, well, at this point, the White House is saying that Vice President J.D. Vance, alongside Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are set to depart for Pakistan later today for potential talks, either later in the evening or tomorrow, as President Trump appears to have maybe given a little bit more time, saying that the ceasefire extends tomorrow, Wednesday evening, Washington time. But as you mentioned, he's also indicating that at this point, he is unlikely to extend that deadline any further. In fact, the White House has also ramped up the stakes, threatening to hit Iranian civilian infrastructure if a deal is not reached, though a White House official has outlined to us that the president's various comments on what could potentially happen if that deadline lapses is contributing to what the White House feels is strategic ambiguity heading into these talks. Now, our reporting indicates that the leader of the IRGC is pushing for a tougher negotiating stance compared to some of the political figures and leaders like Iran's foreign minister or the parliament speaker that seem to be more amenable to getting and reaching an accord with Washington. So still at this point, though, unclear exactly who the U.S. delegation is going to be meeting with amid uncertainty on whether or not Iran is going to send those diplomats. Though at this point, Vonnie, they haven't ruled out completely that they would refrain from the talks. So according to the preparations on the ground in Pakistan, it does appear that they are preparing for some sort of negotiations to go forward.
Yeah, absolutely, Tyler. But then also in Washington, a big day. Kevin Walsh has his confirmation hearing. What are we expecting that senators will be concentrating on?
Well, Vonnie, at this point, this is going to be the first time that we hear from the Fed nominee since his nomination. So I'm sure that the senators are going to want to ask him about what a Federal Reserve under his leadership will look like in terms of what he needs to see in order to chart the path for monetary policy. We also know Democrats have previewed that they are going to look a little deeper into Walsh's financial disclosures. But beyond that, we are expecting politics to really take center stage later today if if you will, because we know that looming large over this is the political backdrop of President Trump's pressure against the central bank. And at this point, Senator Thom Tillis is still maintaining that he will not vote to advance the nomination until the legal matter against Fed Chair Jerome Powell is resolved. And I can say I touched base with a senior aide to Thom Tillis yesterday who told me at this point that the senator's position has not changed. And Vonnie, at this point, we know the administration is doubling down. In fact, a person familiar with the matter tells us that the White House has no intentions to let that DOJ investigation up, even after a federal judge last month handed the White House a potential off-ramp, ruling that the subpoenas in the case did not pass muster to be issued. But still, at this point, officials say that they're going to appeal that decision.
Tyler, bring us up to speed with what's happening at the Labour Department. Lori Chavez de Remer has now left amid this investigation that's been ongoing.
Right. So this was an inspector's general investigation into the labor secretary. We're now going to see the deputy labor secretary elevated to the top position in an acting capacity. But it's our understanding that this probe was following a flurry of allegations into that the secretary had an inappropriate relationship with a staffer, committed travel fraud, and was drinking in the workplace. Now, the White House initially defended Chavez de Remer, and she herself has denied these allegations, though we did see a number of disciplinary actions taken, including administration officials placed on temporary leave. But, Vonnie, this follows a recent slew of departures as we head into the midterms, including Pam Bondi and Kristi Noem.
Tyler, thank you so much. A lot going on. As always in Washington, D.C., that's Tyler Kendall there. Turning to technology now, Apple has appointed head of hardware engineering John Ternus to succeed Tim Cook in September. Cook is going to stay on as executive chairman. He spent 15 years as CEO of Apple. Let's get more with Matt Bloxham of Bloomberg Intelligence. So what will Ternus's priorities be when he gets into the role, Matt?
Yeah, hi, Bonnie. So I think there's going to be two aspects to this. First, obviously, is to move Apple forward with the next generation of a range of hardware products. Hardware accounts for over 70% of Apple's revenue, so kind of really key to the future of the business. But the second part of it is how they better integrate AI both into those products and the overall proposition. And, you know, we've spoken a lot in the last year or two about, you know, the friction that Apple's been facing with their AI strategy. So I think those two things are going to be really critical for them. And obviously, as AI pervades across the kind of broader economy, I think there really is a big question about what the kind of future of devices are going to look like. And kind of Apple, I think for some, needs to definitely step up its game, be a bit more decisive and nimble with how it deploys those technologies to kind of make sure that they are kind of continue to be perceived as the kind of market leader in consumer technology.
And a tough act to follow in some ways, given the size of Apple now. Amazon investing more in Anthropic. Is there any amount that's too much, Matt?
I don't think so. I mean, we've seen Amazon and others, you know, investing huge amounts of money into AI businesses. You know, actually, when you look at Amazon, spent $50 billion not so long ago upping its investment in OpenAI. So they, you know, are making sure they have a big stake in the game in terms of the future of large language models and hedging their bets across different platforms. It's been a really successful partnership so far with Anthropic, with the Claude platform being served to over 100,000 customers on Amazon Web Services, and Amazon is committing to spend something like $100 billion Anthropic got $100 billion on Amazon capability over the next few years. So it's a kind of really important partnership.
Matt, as always, thank you so much. Matt Bloxham of Bloomberg Intelligence bringing us up to speed. Now to earnings. RTX set to report before the bell this morning with eyes on how the war in Iran is impacting results. We also, of course, get United later today. Bloomberg's Benedict Kamel joins us now. Let's begin with the defence portion of things. Benny, what will the defence companies tell us?
So we have a whole range of defense companies reporting this week. You mentioned RTX, they're first out of the gate, but we will also hear from Northrop Grumman, maker of the B-2 bomber. We will hear from Lockheed Martin later in the week. We will hear from GE and others. Boeing also reports. So a whole range of these companies. On the defense side, a big focus will be on what are they doing to replenish their stock? What are they doing to lift production? That's been one of the great themes of the Iran war, that the US is really going through its stockpile of advanced weapons like missiles very quickly. And can the production keep up? Can they ramp up production? This is nothing where you can simply flip a switch and sort of raise output. So this is a longer term initiative. They have sort of been at the receiving end of some angry tweets from the president, who said they need to do more. They should focus less on reinvesting in the business in terms of dividends and buybacks and so on. They should invest in R&D and in production and in new factories. So we'll probably get some commentary around that. But really, as I said, it's a longer-term game, but it'll be interesting to see where some of the capital allocation might be shifting away from areas like dividends and stock buybacks that reward the investor, and more towards sort of the production side.
Yeah, an update 2 months into this war, and we'll also get an update from some airlines starting today with United earnings after the market close. You know, it's a different segment. Obviously, it's a consumer population that uses United, but what will the airlines tell us, Benny?
So again, the airlines are affected by the war in Iran in a very different way than the defense companies, but it's the price of kerosene, of jet fuel principally, that is affecting the airlines. We got a bit of a taste last night from Alaska Airways, who reported. We've already heard from Delta, and both of those companies issuing a rather sort of cautious forecast into the year. Alaska saying that they are essentially suspending their forecast into the year, and they want to sort of see how the next couple of weeks shake out. The big issue affecting all these companies is, as I said, the price of kerosene. That is really weighing on the cost structure of these companies. And the thinking is that those who've gone into this crisis, shall we call it, that have been strong, like United, like Delta, can probably weather this better than those who are already a little bit on the wobbly side. And we've seen some commentary out of the weaker companies saying that they might need to cut some routes, they need to reconsider their cost base. So there will be probably a shakeout in some ways in the industry, but it all depends a little bit on how long this crisis continues and how long the war continues.
Yeah, you said it, Benny. Spirit actually floating a government stake to avoid liquidation potentially. We'll see what happens with that story. Bloomberg News' Benedict Camel, thank you so much. Coming up, more earnings and retail sales. Your day ahead is next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead in your trading day today. We get RTX earnings before the market open, the first of the major defense companies. Then United Airlines will give us an update after the market close. March retail sales coming out at 8:30 a.m. New York time. Expect the advance number to be pretty strong, but if you take out the gas sales out of that, the control group expected to be pretty weak for the month. And President Trump's Fed Chair pick, Kevin Walsh, testifying before the Senate Banking Committee at 10 a.m. Eastern. Let's take a look at your market then as we approach the U.S. Open in just a few hours' time. We are seeing futures pointed higher. They're at their highs or their session, but nevertheless not as much as in the enthusiasm that we saw last week. The dollar index also stronger, and you have the 10-year yield now unchanged. We'll be watching for any Treasury movement during the Kevin Walsh testimony. Will he appear to be a little more dovish than perhaps the Treasury market is pricing in for this year? About a 50% chance of just one interest rate cut this year. Let's take a look at Brent and WTI as well, because we're off the levels that we were at overnight, but we're pretty much where we were yesterday morning. So it really is all eyes on this peace process, if you can call it a peace process. Is it even going to happen? Are there going to be two delegations meeting in Pakistan? That is it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting.
Hey guys, Indian market almost going to close. अच्छा दिन था. निफ्टी में मॉर्निंग में जैसा मैंने बताया था आप लोगों को, स्पेसिफिकली दो कॉल सॉर्ट करने के लिए बोला था. मॉर्निंग पे मार्केट आएगा तो एक तो नहीं आई, दूसरी ज़रूर आई थी और वहीं क्लोज हुई. 24,400 का कॉल ऑप्शन 160 से 170 के बीच में, वहां से 3-4 बार सेलिंग मिली है 120 तक। अभी क्लोजिंग भी वहीं पर आ रही है 176 के आसपास। बाकी एक दूसरा और था 24,450 का कॉल, वो आया नहीं 150 टू 160। मॉर्निंग पे सपोर्ट पे जरूर आया था 45 के आसपास, वहां से एक बाइंग जरूर बनी है, बट रेजिस्टेंस पे नहीं आया कह सकते हैं। कमोडिटी मार्केट ऑलमोस्ट साइडवेज ही चल रहा है कंप्लीटली। अडानी स्टॉक्स आज पूरे दिन भर लाइमलाइट में थे। कोई न्यूज़ नहीं है फिलहाल के लिए, वी नीड टू सी कोई न्यूज़ अगर आती है तो। आज डेटा काफ़ी है तो मोस्टली मुझे लग रहा है शायद उसी पर मार्केट रिएक्शन देगा। 3:30 हो चुका है अभी, 5:30 न्यूयॉर्क सेशन ओपन होगा। 6 PM पे इंपॉर्टेंट डेटा है, प्रेसिडेंट ट्रम्प की स्पीच भी है, वो भी सुनेंगे। एंड देन 7 PM यूएस मार्केट ओपन, फेड चेयरमैन की आज टेस्टिमनी है तो वो भी आज इंपॉर्टेंट रहेगी। क्रूड ऑयल देखोगे मॉर्निंग से वहीं का वहीं पड़ा हुआ है, कुछ भी नहीं हो रहा है। कल रेजिस्टेंस पे आया था, सेलिंग अच्छी आई, क्लोजिंग होते होते उसके बाद ये साइडवेज चला गया। मैं लग रहा है मॉर्निंग पे आपको कहा था यहाँ से थोड़ा बहुत पुल बैक आ सकता है, चांसेस आर वेरी हाई। लेट्स सी ये नीचे आता है, क्योंकि अब अगर ये ऊपर गया तो वेरी हाई चांसेस प्राइस विल गो टुवर्ड्स 8,450 टू 8,500, वहाँ जाने की कोशिश कर सकता है अगर ये नीचे नहीं आता इस एरिया से। पास एक सपोर्ट जोन है यहाँ पे 8,650 से 8,700, 7,650 से 7,700 के बीच में। कि अगर सक्सेसफुली ब्रेकडाउन हो गया 7,650 के नीचे क्रूड का, तो फिर हम वापस 7,200 की ओर चले जाएंगे। दैट इज ऑल्सो प्रोबेबिलिटी। नेचुरल केस भी देखोगे कल सेलिंग अच्छी आई थी, अभी ये साइडवेज है इंट्राडे में, थोड़ा नीचे भी नहीं आ रहा है, नीचे आता है तो एक पॉसिबिलिटी सेलिंग की वापस बन सकती है। बुलिश था इंडियन मार्केट, मुझे लग रहा है शायद कल अगर यूएस ईरान के बीच में कोई सीज फायर होता है तो कल हमें गैप अप भी देखने के लिए मिल सकता है। 25,000 फ्यूचर में लग रहा है मुझे, वहां पर एक रेजिस्टेंस बना हुआ है मार्केट के पास, वहां तक जाने की कोशिश जरूर करेगा 15 मिनट में अगर एक गुड न्यूज़ कल देखने के लिए मिलती है। फर्स्ट हाफ बुलिश था, सेकंड हाफ साइडवेज इंडियन मार्केट, निफ्टी स्पेसिफिकली ओवरऑल बुलिश क्लोजिंग है। कल एक्सपायरी होगी थी फ्यूचर की, कॉन्ट्रैक्ट याद रखना चेंज हुआ है, नेक्स्ट मंथ का फ्यूचर चार्ट है। अब ये वापस आया कल के लेवल पे क्रूड ऑयल, तो फिर यहाँ से सेल करेंगे नहीं, थोड़ा सा प्राइस मुझे लग रहा है और ऊपर जाने की कोशिश करेगा उस केस में। इस पर्टिकुलर जोन पे कोई रेजिस्टेंस तो है नहीं, एक पॉइंट ऑफ इंटरेस्ट कह सकते हो, फिर भी प्राइस इज होल्डिंग। प्राइस इज आई थिंक वेटिंग फॉर एनी न्यूज़, अदरवाइज मार्केट से शायद ना मूव ही ना करें। ओके, नेचुरल गैस थोड़ा सा वापस रिटर्न कर रहा है। नेचुरल गैस आया नहीं सपोर्ट पे एग्जैक्टली। वैसे देखो तो इंट्राडे में वैसे सब एक रेंज के अंदर ही है, कोई बहुत बड़ा मूव नहीं किया है। अब जाके पहली 15 मिनट की कैंडल के बाहर निकलने की कोशिश कर रहा है। मॉर्निंग पे ब्रेकडाउन करने की कोशिश करी थी, वापस ऊपर निकलने की कोशिश कर रहा है। स्टिल विद इन द 2 पॉइंट रेंज, सिर्फ 2 पॉइंट की रेंज के अंदर ही ट्रेड हो रहा है। एक पॉसिबिलिटी इसकी भी हो सकती है नेचुरल गैस की वापस रेजिस्टेंस से चला जाए। पॉइंट ऑफ इंटरेस्ट पे रुक गया है, इवन तो कोई सपोर्ट नहीं है। मैंने बताया था यहाँ पर एमसीएक्स में कोई सपोर्ट नहीं है। सॉरी, फॉरेक्स में यहाँ पर कोई सपोर्ट नहीं था, एमसीएक्स में था। तो मैंने कल बताया था हम नहीं जाएंगे यहाँ से बाइंग के लिए। एंड मार्केट अगेन कोई होल्ड किया नहीं कुछ खास। तो लोगों को भी देखोगे आज थोड़ा सा डाउन है। इंट्राडे में मोस्ट प्रॉब्ली एंटिसिपेट हो रहा है लाइक ईरान और यूएस के बीच में ट्रेड डील तो कह रहा हूँ मैं, एक डील हो जाएगी शायद में एक्सटेंड। देखते हैं, अब शायद मे भी 5:30 के बाद कुछ मूव करे। नेचुरल गैस भी निकल रहा है, पॉइंट ऑफ इंटरेस्ट को रिमूव कर सकते हैं वैसे, यहाँ पर जरूरत नहीं है इसकी। वापस फर्स्ट 15 मिनट की कैंडल के अंदर ही चला गया नेचुरल गैस। इसको रिमूव कर देते हैं, इसकी जरूरत नहीं है। पॉइंट ऑफ इंटरेस्ट की प्राइस के नीचे निकल चुका ऑलरेडी। नेक्स्ट में देखोगे तो एक बिल्कुल बेरिश चैनल जैसा लग रहा है इन क्रूड ऑयल। वापस अगर आता है तो क्रूड ऑयल ऊपर ही, नीचे तो आ नहीं रहा है बिल्कुल भी। मोस्टली यही रेंज लग रही है फिलहाल के लिए, इस रेंज के बाहर जाता हुआ लगता नहीं है अनटिल अनलेस कोई मेजर न्यूज़ नहीं आती। वॉल्यूम भी थोड़ा डाउन ही है, अननेसेसरी पोजीशन ओपन मत करना क्रूड ऑयल में जब तक कोई पर्टिकुलर डायरेक्शन नहीं पकड़ता है।
בכל דור ודור קמים עלינו לכלותנו, גם בדור הזה. משטר האייתולות באיראן תכנן שואה נוספת. הוא זמם להשמיד אותנו בפצצות גרעין ובאלפי טילים בליסטיים. אם לא היינו פועלים נגד האיום הקיומי, אם לא היינו פועלים בנחישות ובתעוזה, השמות של אתרי המוות, נתנז, פורדו, איספהאן, היו עלולים להצטרף לשמות של מחנות המוות
थोड़ी देर पहले यूएस प्रेसिडेंट का एक स्टेटमेंट आया है. He says Trump stated Iran has broken the ceasefire many times. क्रूड ऑयल में देख रहे होगे लास्ट कैंडल सडनली ओपन इक्वल टू लो बना के ऊपर गया है. This is a statement by the US President Donald Trump. Tasmin news agency Iran is ready for the possibility of a renewal of the war, setting excessive demands, and the US naval blockade as preventing negotiation. And 12 News. कुछ देर पहले एक और न्यूज़ आई है, यूएस की जो इंडो पैसिफिक कमांड है उसने एक टैंकर पर टू विजिट किया है, दैट इज बोत्सवाना फ्लैग्ड क्रूड ऑयल टैंकर एंड इट इज सैंक्शन बाय द यूएस ट्रेजरी डिपार्टमेंट। तो सिंगापुर के आसपास इस पे यूएस फोर्सेस ने, जो यूएस की इंडो पैसिफिक कमांड है, उसने विजिट किया है, मीन्स इन द सेंस ऑफ आप कह सकते हो रेड की है। कि देखो क्रूड ऑयल के पास यही रेजिस्टेंस है, मार्केट अब तो साइडवेज हो गया है, जब तक ये होल्ड कर रहा है तब तक ठीक ही है, अब या तो साइडवेज जाए या फिर गिरे नीचे, ब्रेकआउट होगा तो विल सी दैट। यूएस नेवल फोर्सेस बोर्डेड द बोत्सवाना फ्लैग्ड ऑयल टैंकर overnight in the Indo-Pacific. थोड़ा बहुत मोमेंटम अब आ रहा है शायद क्रूड ऑयल और नेचुरल गैस में, क्रूड में तो खैर अभी भी कुछ नहीं है। 5:30 होने वाला है, लंदन सेशन इज गोइंग टू ओपन एट 5:30, एक्सपेक्टेड है मोमेंटम।
time. Anthropic, the maker of the Claude chatbot, is planning to spend more than $100 billion over the next 10 years on Amazon cloud services and AI chips. Those shares up 3%. And Labor Secretary Lori Chavez DeRemer is leaving the Trump administration. She has been the subject of an inspector general probe following claims she engaged in an inappropriate relationship with a staffer. committed travel fraud, and was drinking in the workplace. That's your Bloomberg Brief. John.
Yahira, thank you. Appreciate the update. Up next on the program, Kevin Walsh in the hot seat.
I really do think Walsh is a great nominee, but I'm not going to have an investigation out there. We have to have an independent Fed, and we can't finesse this.
Up next, we'll catch up with Tony Rodriguez of Nuveen from New York City. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Session highs up by 0.4% on the S&P, and the Nasdaq up by 0.5%. In the bond market, 2s, 10s and 30s shaping up as follows. 2s right now up 2 basis points, 3.74. Under surveillance this morning, Kevin Walsh in the hot seat.
I really do think Walsh is a great nominee. In fact, the short list was great. I told the president that. But I'm not going to have an investigation out there. We have to have an independent Fed. And we can't finesse this. They either need to move forward with a compelling investigation that convinces me I was wrong, or resolve the current investigation and move on.
Right now, we're struggling to move on. Fed Chair nominee Kevin Walsh preparing for a grilling on Capitol Hill today, vowing to protect the central bank's independence while pushing for major reforms. Bloomberg's Mike McKee has the latest from Washington. Mike, you've gone through that prepared testimony. What are you focused on?
Well, Kevin Walsh addresses the elephant in the room right away by talking about independence. Remember, the president said he wouldn't appoint anybody who didn't want to cut interest rates. So the question for many Democrats is how beholden to Trump is Kevin Walsh going to be? He says in his testimony that I do not believe the operational independence of monetary policy is particularly threatened when elected officials, presidents, senators, or members of the House state their views on interest rates. Simply stated, Fed independence is largely up to the Fed. What does he mean by that? He goes on to explain the Fed has to take responsibility for inflation. It is the Fed's lodestar. It is the most important thing they do, and Walsh pledges he will keep inflation low and steady. But he also goes on to say that independence does not extend to other areas of Fed responsibility, including public monies. Think buying QE or maybe remodeling a building. Doesn't extend to bank regulation or international finance, which could be interesting because we've seen these reports about the UAE asking the U.S. for a swap line. Fed probably wouldn't want to grant it, but would he do it because the Treasury Department wants it? There'll be a lot of questions about the relationship between Treasury and the Fed. You mentioned the delay, of course, with Tom Tillis. The calendar for what happens next with Kevin Walsh is kind of compressed. It's up to Jeanine Pirro when they get a vote because Tom Tillis isn't going to change his mind and do any kind of vote, allow any kind of vote until she drops the issue, and he can't get confirmed until he gets a floor vote, which he can't get until he gets out of the committee. Jay Powell's last meeting is April 29th. That'll be next Wednesday, and it'll be very interesting to hear what he has to say. His chair term ends May 15th. He says he'll stay on if Walsh is not confirmed. The next Fed meeting after next Wednesday is June 17th. So a worst-case scenario might be that Walsh is confirmed by at least that time. I suppose you could do a double worst and say he stays on the sidelines for some time if the U.S. Attorney for Washington does not yield in her investigation.
They haven't taken the off-ramp so far. Let's see if it changes. Mike, thank you. The senator from North Carolina is not backing down, and not backing down anytime soon.
No, he's not. And he's heard it there. We've been hearing this for months from Senator Tillis. He talked about this with us in Davos. He's basically saying there's no gray area for him. You can't fudge this. The investigation needs to be dropped for him to move forward.
Tony Rodriguez of Nuveen writing the following. We've incorporated Walsh's likely eventual confirmation into our forecast, which currently calls for 1/4 point rate cut later this year. Tony joins us now for more. Tony, good morning.
Good morning.
Timeline and policy and substance. Let's kind of play with timeline for a moment. Middle of May, Chairman Powell's term ends. Best guess, what happens next?
Well, I think Tillis is going to hold firm, as you mentioned, and I think that you're lucky if you'll see something by the end of the summer. We do think you'll see something by the end of the year because we think this investigation really doesn't, as you've seen with some of the court decisions, have significant merit to it. So I do think it'll eventually be dismissed, but you are going to have to wait well into the second half in our minds.
What will leave the door open for further rate reductions in your mind?
So in our minds, what leaves room is that right now we think they're above the neutral rate by, call it, 50 basis points. We think that as you get to the end of the year, you'll begin to see some of the negative economic impact on growth from higher energy prices. But you will also begin to see some of the pass-through of tariffs begin to anniversary itself. So inflation will end up, we'll call it closer to 2.5%, maybe 2.7 by the end of the year, but with an outlook in 27 for a decline into the low twos. That'll allow one cut to still be above the neutral rate, but kind of reflecting the path of inflation and some of the negative impact on the consumer from higher energy prices.
Inflation is a choice, and the Fed must take responsibility for it. Does that sound like a man who wants to cut rates?
No, but he also sounds like someone who's speaking to a market that is assuming his independence and his credibility is a bit tarnished by what happened through, we'll call it the interview process of all of this. So I think he's leaning into that hawkish history that he's had, but I think the market's really going to still be believing that he will be more dovish than what the rhetoric is and what his history shows.
Yesterday, Michael Kontopoulos of Janus came on, and he said that he could see actually a rate hike by the end of this year, just based on the fact that financial conditions are incredibly loose. It doesn't seem like people are particularly concerned about the Fed being overly tight right now, and inflation is still running significantly above that 2% target for more than a fifth straight year. So how do you sort of game out that likelihood or not in your fixed income outlook?
Yeah, and again, I think the main thing for us is that we do think you'll see inflation begin to recede as we get to the second half. We think that as long as energy prices remain kind of below $100 a barrel, and that still is our forecast, that will be below $100 a barrel, inflation won't be the dynamic that is continuing to accelerate and requiring a hike, while at the same time, we do think growth will be negatively impacted by a couple of percentage points of GDP. Unemployment maybe stays steady to rise a bit, primarily because of the supply side element of that. So that stress on the consumer, we think, begins to show through in the economy, and that's where the Fed will begin to say, we don't need to be 50 basis points above our neutral rate. We can calibrate a bit. So it's not an aggressive cutting cycle by any means. It's just the end of the cutting cycle getting down to neutral that we think kicks in by the end of the year.
Tony, this is going to be a very high-profile hearing, and the political theater is going to be max level. But as a market participant, do you think there's anything market-worthy that will come out of this?
Quite honestly, we don't. I mean, I think there would be potential for that if he were to say, begin to talk a little bit more clearly to the markets about maybe his views on, say, balance sheet reduction, which he's talked about, on his views about where inflation is heading and why there could either be further cuts or not. You know, Mirren has been quite clear in his discussion of why he thinks there's going to be many cuts, whether you agree or disagree with it. If he's clear, then there could be some news. But from what we've seen historically in a lot of these confirmation hearings, they are more about political theater.
The questions
now,
are bad.
So unlikely.
Brutal, but true. They often are. A great question for the chairman of the Federal Reserve next week. Is above target inflation a choice at the Federal Reserve? I'd actually like to hear Chairman Powell's answer to that, because in the last news conference he was talking about being surprised by supply-side shocks that were kind of out of their control. I'd like his response to that next week.
Yeah, especially if ultimately a lot of people say it is a choice, and people have said that they have not wanted to torpedo the growth in the employment market really deliberately because they saw the scarring that happened after 2008 and 2009. They want to avoid that. So clearly they've prioritized this. Question is, how do you codify it and remain credible as an agency that's still trying to target 2%?
You might not like the medicine. Let's put it that way.
Correct.
The chairman talked about that pain. Remember the pain speech? We'll remember that. We were in Jackson Hole at the time when he was going through it. Then we didn't see much pain, did we? Subsequently in the years after.
Which, again, goes to the point of, is any Fed in the future willing to exert pain in terms of torpedoing the labor market? And is it worth it? Or should there be an escalation of the range of potential inflation targets to maybe between 2% and 3% rather than just have a 2% fixed target?
Tony, enjoyed this. It's always good to catch up with you, sir. Thank you. Tony Rodriguez there of Newfine. Ahead of that testimony from Kevin Walsh, the Fed chair nominee, later on this morning in front of the Senate Banking Committee at 10 a.m. Eastern Time. We've got a lot of questions about policy, but our hopes are pretty low going into this when it comes to the answers we might get and the questions that will be asked.
Even if he gives answers, even if he gets to ask good questions, will people regard what he says with any credibility, given the fact that his comments were actually noteworthy and people are just like, yeah, that's what he has to say?
I agree. I think some of that in the opening testimony was fairly hawkish.
I agree.
But when you start to think about who it might be for and what purpose that is, and then people are willing to park it like so many other things right now in financial markets.
The less you know.
Up next, Katie Kaminsky of Alpha Simplex Group, Walter Piecyk of Lightshed Partners, Dana Peterson of the Conference Board, Troy Gajewski of Future Standard. The third hour of Bloomberg Surveillance, next.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form. but is going to be a platform that runs in parallel to our more traditional exchanges.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Markets are becoming a lot less responsive to these headlines.
There is still a lot of hope and optimism in this market.
It was time for a bounce.
There's a broadening happening across markets.
The market is over exuberant in terms of a fast fix to all of this.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The opening bell, 90 minutes away. Your prices, your scores look like this. Equity futures on the S&P 500 firmer by 0.4% on the Nasdaq, up by 0.5. In the commodity market, Brent and WTI slightly lower, down by, let's call it, 1/4 to 1/3 of 1%, going into potential talks between the US and Iran. The day ahead shaping up as follows. Later this morning at 8:30 Eastern Time, US retail sales.
न्यूयॉर्क सेशन ओपन क्रूड थोड़ा बहुत अपसाइड जाता हुआ वापस
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The writing was on the wall with Tim Cook at some point to have stepped down. It did come sooner than we anticipated. But that being said, you kind of look at, where Apple is today and what they're pivoting into. And this is a critical year in terms of the shift to AI. I think it's the right move to hire a product guy. I think it's also the right move to, finally pivot away from Tim Cook.
Angelo Zeno of CFRA joining us a little bit earlier on as Tim Cook steps aside. Equity futures, okay, firmer by about 1/3 of 1% on the S&P. On the Nasdaq 100 up by 0.4. The one stock in focus in our morning calls, it's Apple. First up is Evercore, reiterating its outperform rating following the CEO shakeup, feeling encouraged by the potential for new AI features. Your second call from Morgan Stanley maintaining its overweight view on the stock, the firm noting near-term changes are unlikely. And finally, Wedbush reiterating its outperform rating on the iPhone maker, highlighting growing pressure for a successful AI strategy. Sticking with Apple, Walt Piecyk of Lightshed Partners has been calling for a change at the top of the iPhone maker for nearly a year.
The suggestion that only Tim Cook is the CEO to run this company is crazy. You clearly need someone that can move forward on a lot of the product development. If they don't have a succession in place today, a CEO internal at the company that can take over this company today, that in and itself is a failure of the CEO of the company as well as the board.
Well, reacting to Cook's resignation, writing, Apple has stumbled embarrassingly on AI. This is clearly just a different skill set, and credit Cook for recognizing that and stepping aside. Walt joins us now for more. Well, welcome back. And I messaged you yesterday, credit for making a call 12 months ago. Can we just reflect on that briefly? Well, how much heat did you take when you published that almost a year ago?
I mean, I took a lot of heat, I think, even from some of the experts on Bloomberg calling the call blasphemous. And how can you dare suggest that Tim Cook could step aside, even though we were going through this monumental change in AI? But that's fine. I mean, that's part of the job. And the issue was never look, we've recommended this stock in the past. Tim Cook obviously did an excellent job, and what they needed was someone that could crank out volumes and make those tweaks. They missed out on some product cycles, and there's some growth issues. You have more cyclical growth now at the company when people need to upgrade iPhones. So the whole point of the call, last year was okay, you needed it. And by the way, at the time, they're who's going to replace him? Who's going to replace him? Thanks for playing those clips. It's obvious. You generate someone internally. And if you weren't, that shows a massive failure at a company. So obviously the company didn't fail. They have Turnus here. The stock set, has done exceptionally well, even since last year. But you're facing existential risks to the company, as many companies are, as we head into this AI era.
Well, let's just piece that together. You use the word existential risk, and yet what I hear from a lot of your peers this morning is continuity and no near-term changes. Do you think this is the right person?
I mean, I hope there's going to be some near-term changes in the what's going on at the company, because they're clearly not on the right path in terms of an AI strategy. I mean, I think a couple of weeks ago or maybe a month ago, when they opened up who Siri can reference, and can we all agree that Siri just is still not good? I mean, we've been promised Siri is going to get better, and it's still terrible relative to what you use in any of the AI LLMs today in terms of an audio interface. But a couple of months ago, they added, they opened it up because they only had OpenAI before, right? Where Siri would theoretically forward you to OpenAI, to chat in order to get answers. That implementation, anyone that tried it, they realized that was not good. All they're doing is adding additional LLMs. That's not 4D chess. Like people are calling that 4D chess. That's not 4D chess. That's just adding another LLM to a Siri. That's just not good. So I think just because Turnus is taking over doesn't change things overnight, but hopefully with a new CEO, he can change the culture of the company and move in a path that prepares them for what's about to happen with AI.
Walt, has a ship already sailed? Is there a competitor in the smartphone industry that already has gotten an upper hand in deploying AI in a better way than, say, Siri?
I mean, it's hard to know. We'll know in a year or two whether the ship has sailed. But I mean, and I said this back, a year ago, every day that they don't make a change is a day it's going to be harder for them to catch up or potentially get leapfrogged by someone. Obviously, Google is the major competitor in the space. This is 50% of their revenue is still iPhone. Services is still relying on iPhones. Android is obviously the major competitor. On the opposite side, their share has only gone up over the past year. However, we have this new thing. You have OpenClaw that has shown us what agentic can do. This is like kind of a nerdy thing that people do, but it shows you how close we're getting to agentic. Anthropic and others will start integrating this in. How we interface with our phones is likely to change. When you go through major technological transitions like that, that's when industry leaders tend to potentially lose share, right? Now, it doesn't mean Apple can. Apple's in a tremendous position to maintain that share if they can execute an AI, but everything that they've done up to this point has just not delivered on any promises or shown you some belief that they can continue to succeed in this area.
Well, they also have funneled a lot of their free cash flow into share buybacks and dividends. Going forward, as an investor, would you rather see a continuation of that type of deployment of cash, or would you like to see capital invested in, say, an acquisition or a new initiative?
I mean, look, Apple's done a great job without having to acquire a company. That the major acquisition they made was Beats, which was nothing in today's dollar terms, and really didn't change much at the company. The other thing that I think you're referencing is spending the tens of billions of dollars to build their own models, which again, that was the 4D chess everyone was talking about. So they have avoided that. That's part of the reason the stock has done so well, right? All these companies that have invested money relative to Apple, who seems like, okay, they've escaped having to invest that money. The question is there going to be repercussions for that in terms of, them not having a product that consumers want or be positioned, where none of it may matter, right? It just might not matter at all, whether they spend the money or not in that, if you're not using your phone because your agent, wherever that agent lives, is ordering your Uber, is ordering your DoorDash, is doing all these things for you, the way you interact with these phone, or maybe it ends up being glasses or pendants or whatever, it just is going to change. So whether they invest the dollars in an LLM or not, it might not matter in terms of what the important product is to Apple, which is the iPhone, which represents half of sales.
Walt, hearing you speak and looking through your research where you say, are there core cultural issues that need to be drastically changed in the company? Are people showing up to the office 5 days a week? It sounds like you're saying Apple's gone a bit soft.
I mean, look, the product development over the past 15 years, the last big product categories that were successful, at least, were, the watch and AirPods. And these are a product of Johnny Ives, who's no longer at the company. And I think there's been plenty of books written about, this tenure and the need to look for innovation, but just look at the lack of new product categories. You've had categories that they've attempted to develop. I mean, autonomous cars are obviously going to be a huge thing. There was a lot of dollars spent at Apple. They went nowhere. Vision Pro was kind of an effort in, I guess you would call it the immersive metaverse, and that was effectively a flop. So I think, at the end of the day, that's the cultural change that I think you need, meaning a CEO that's getting more involved with the product and the software teams to get products into the market, and maybe an overall culture at the company to drive to innovation as opposed to optimizing, chips, in their existing phones, or, moving the manufacturing to China in order to get better margins, or tweaking up the price of an iPhone, just to generate some revenue growth in a particular quarter.
Can Turnus do that with, of course, Tim Cook sticking around?
I mean, look, so one of the knocks that people will say is like, oh, he's a hardware person and AI is a software. I don't think that's really the issue. I mean, you have to be, I think, product focused. I think he kind of checks that box. Willing to work with the team. I think he checks that boxes. I mean, he's termed, I think, a nice guy. But I think, perhaps more involved with, putting pressure on teams to get things done. So sure, he can be the person, but there's obviously risk. Like, this is a mega company. We've lived with Tim Cook for 15 years, who's done an exceptional job at the skill set that was needed. So there's obviously risk. No one really knows, until you're seen. You have the NFL draft coming up on Thursday. You can pick what you think is the top player, the top quarterback, and it could be a complete flop, or the guy can take you to the Super Bowl. So, we'll just have to see how that plays out.
Well, I just wanted to finish on something that I know is important to you and to the team over at Lightshed. I've known you a long time. I've never gotten the impression that you are willing to massage the message out of fear of losing access to a management team. I think that's really what Lightshed is born out of, together with Rich Greenfield, your partner, who on countless occasions upset Bob Iger over at Disney by putting a sell on the stock and communicating quite clearly what he thought about the strategy and why he thought it was failing. Well, what do you think we can all do better? Not just on this particular occasion, but just for the whole industry. And I don't just mean on the south side, by the way. I mean the media industry as well, because I think many people in journalism are guilty of the same thing. Whoa. What do you think we can do better?
I mean, I get it. Like, there's definitely pressure for access, whether you're a reporter or for an analyst, and there's value in being able to actually talk to these people directly. But at the end of the day, truth is what matters. Whether you're getting leaked some information or not, to have a great story, you still have to kind of call out what the issues are in terms of AI and whether there's change that's needed. And I don't know, like, it's just the way you approach things. Earlier this week, last week, you saw someone interview Jensen from NVIDIA, and I thought it was very telling. And the interviewer did a great job. Now, maybe that person, Dvorak, I think his name is, will never get another interview again with NVIDIA. But like, the value of that interview and seeing what Jensen's views were on, how they dealt with China, what competition was like, I think was incredible. And it helps us all to have more of that. But look, there's a cost. There's clearly a cost that we see every day in dealing with this. But always truth, John, always truth.
Well, appreciate it, and credit to you and the team. Walter Piecyk there of Lightshed Partners. We've seen that a few times, and we all get uncomfortable when we feel like someone's massaging the message to maintain access.
You mean that everyone has a buy rating on absolutely everything and nobody has to sell? Look, this is a difficult moment, especially because there's a fear of groupthink. And how much are we all thinking in the same way that AI is going to revolutionize everything in a sort of unilateral way that will lift most boats? Given how much money is going into the space, that is one fear that people keep highlighting. How do we pick the winners and losers? And are we suffering a little bit from groupthink?
I just sense we're dancing around that tension a little bit this morning as well, because at the same time everyone is calling this a continuity candidate and saying there will be no near-term change, we're also talking about massive change in this sector and breaking into a new era of innovation. Isn't that a failure to sit here and say we're talking about continuity and no near-term changes when we're going into that?
It's incredibly uncomfortable because ultimately he cannot be a continuity candidate, because ultimately continuity isn't going to meet the moment, which is going to be revolutionary change. Nonetheless, he has been at the company for 25 years and understands the culture and was sort of focused on the hardware. So to the degree that he has just been at the company a long time, yes. Whether he can actually revolutionize and bring the company into the new era, that's really what people are waiting to see.
Stock is down by a few tenths of 1% so far this morning. Equity futures on the S&P 500 just pulling back from session highs, now up by only a third of 1%. A report from Axios just moments ago with the chairman of Joint Chiefs of Staff's General Dan Kane saying we are ready to resume major combat operations against Iran in a moment's notice. That coming from Axios just moments ago. Setting the stage for potentially some tense talks. Retail sales data up next. We'll have a reaction for you in just a moment.
क्रूड ऑयल में देखो मुझे लग रहा है शायद प्राइस एक बार और ऊपर जाने की कोशिश करना चाहिए लॉजिकली। इस लेवल पे है, कल भी साइडवेज था, इसी रेंज के आसपास लग रहा है। एक पॉसिबिलिटी लग रही है शायद ऊपर जा सकता है वापस 8600 to 800 के बीच में। दैट एरिया विल बिकम रेजिस्टेंस काइंड ऑफ। नीचे आता है तो मुझे लगता है शायद फिर 6800 to 900 की ओर भी जा सकता है। पहले ऊपर मुझे लग रहा है पहले जाना चाहिए मार्केट को बाय एनी हाउ। साइडवेज था, आज भी थोड़ा साइडवेज ही है। एक अपसाइड मोमेंटम होना चाहिए इसमें। डाउन आने से पहले एक बार अपसाइड जरूर जाना चाहिए। अब देखना पड़ेगा ये अपसाइड सपोर्ट लेके जाता है या फिर डायरेक्टली या फिर कोई नया सपोर्ट ही क्रिएट कर देता है। सिक्स पी एम पे एक डेटा है, उसका वेट करते हैं अब। और कोई अभी डेटा तो है नहीं। 6 PM को रिटेल सेल्स का डेटा है। यूएस प्रेसिडेंट ट्रम्प की स्पीच है शायद, देखना पड़ेगा। ये भी टेंटेटिव ही लग रही है मुझे तो। को रिटेल सेल्स और रिटेल सेल्स का डेटा इंपॉर्टेंट, काफ़ी इंपॉर्टेंट। सी द डेटा फर्स्ट। Six second data is almost releasing.
Solomon, Goldman Sachs, I think this will resonate with many of you. Recession risk could change, only one tweet away. Kind of relevant to this morning and how things are set up as well, going into talks a little bit later with the US and Iran. Equity futures on the S&P 500.
Wow, data is very good data. दोनों data काफी अच्छा है. Retail sales और core retail sales positive, both are positive.
On twos with your data. Let's cross over to Bloomberg's Ender Curran. Hey, Ender.
Good morning, John. Just waiting for the retail sales numbers here. The headline number is up 1.7% to 1.4%. That, of course, likely reflects a big increase in gas prices. If you look at the sales, ex-autos rising 1.9 to 1.4%, and the control group is up 0.7% to 0.2. So just going through the numbers, John, the control group is the one that we look at because the headline number is impacted by higher gas prices. And of course, we know car sales have been stronger. So it's getting a sort of skewed effect because of what happened in the month of March. But that control group, which strips out gas prices and cars and the like, that increasing there 0.7% above expectations, hinting perhaps at some of residual strength from the tax refunds. And of course, higher income consumers also keeping things ticking over there. So better than estimated for sure, but also likely reflecting some one-off impacts due to the tax refunds. So kind of a mixed story, I would say, in the retail sales number so far.
So far, so good, though. If you put it all together, the totality of the data is surprise to the upside. Resilience, I'd go one step further than that. That's a decent upside.
तो डेटा पॉजिटिव है यूएस इकोनॉमी के लिए. रिटेल सेल्स भी इंक्रीज हुई है, कोर रिटेल सेल्स भी इंक्रीज हुई है. 7 PM US market फिर 7:30 में फेड चेयरमैन की टेस्ट मनी. दैट इज द मेजर डे फॉर टुडे.
Two's at 375.81, up 2 now. So an additional basis point higher on a 10-year to 427.27. That, together with other data points as well, Lisa, over the last several weeks, the data has been better than expected stateside.
Yeah, we've seen incredible amounts of surprises to the upside in terms of economic data. And it wasn't just that the actual headline numbers came in higher than expected. The actual previous months were revised upwards. So you're getting not only a sense that this past month, as we did see gasoline prices increase, you saw retail sales increase, but it actually was off of an even warmer retail sales the previous month. Look, all of this just points to the idea that you're getting upside surprises in an economy that is supposedly being slowed down by higher oil prices. Those messages are uncomfortable to put together and just highlight how difficult it's going to be for the Federal Reserve to justify cutting rates at a moment with inflation and, frankly, evidence of strength in the economy.
Enda, I hope you're still there. I want to come back to you. Just got a quick follow-up. The story that Kevin Walsh has got to tell in front of the Senate Banking Committee later on this morning, has he got a good story to tell about the US economy?
I mean, it's complicated, like you're both just outlining, John. On the one hand, we know his kind of backdrop to getting the Fed chair job, if he's confirmed, has been he sees a path to lower interest rates. But how is he going to map out that path, given, as you said, economic data is holding up okay, the employment market is holding up, and of course now we have the Iran energy shock complication as well. So on the one hand, he has to get across the signal to the senators and the audience listening today that he can maintain credibility, he will do what's right for the economy first. But also, of course, he's playing to the political audience, the White House, President Trump, of course, pressuring the Fed to bring down lower interest rates, and he'll have to give a signal that he's open to doing that as well. So it's clearly going to be a very tricky balancing act for him to pull that off.
Enda, appreciate your time. As always, sir, thank you. Enda Curran there of Bloomberg down in Washington, breaking down the economic data. Headline, month over month, coming in at 1.7%. The estimate was 1.4.
Gold 15 मिनट देख लेते हैं एक बार gold forex chart MCX chart फॉरेक्स की बात कर रहे हो क्या आया था उसका इम्पैक्ट हुआ है गोल्ड में थोड़ा सा ठीक है, इम्पैक्ट हुआ गोल्ड का. टेक द सपोर्ट. डेटा पॉजिटिव था डॉलर के लिए, नेगेटिव था गोल्ड और सिल्वर के लिए. एक जंप किया डाउन साइड पे, बट लोअर एंड पे लिक्विडिटी है शायद, इसलिए वापस चला गया. नीचे सपोर्ट है अभी भी. 15 मिनट टाइम फ्रेम पे यूएस गोल्ड फॉरेक्स चार्ट में अगर देखोगे, स्टिल देयर इज अ सपोर्ट. जब तक प्राइस 4755 के नीचे प्रॉपर्ली ब्रेकडाउन नहीं करता, ब्रेकडाउन मतलब 15 मिनट में कंटिन्यूसली क्लोजिंग नहीं देता, तब तक इट इज सपोर्ट. तो 4750 टू 760 इज अ सपोर्ट जोन इन गोल्ड. डेटा नेगेटिव जरूर आया था डॉलर के लिए, रिकवर कर गया वापस. कि अपर साइड पे देखोगे तो मार्केट परसों से सेलिंग में चल रहा है गोल्ड में. फ्रॉम 4890 टू 4900, वहां से ऑलरेडी रेजिस्टेंस लेके आया है इंट्राडे के लिए. 18 ऑफ मार्च को सेल ऑफ हुआ था, उसके बाद अभी रिसेंटली जब आया था प्राइस लेवल पे 17 ऑफ अप्रैल के आसपास, वहां से सेलिंग चल रही है. तो अभी के लिए यही है लेवल आपका 4750 टू 760. 750 के नीचे अगर कंटिन्यूएशन में चला गया क्लोजिंग बेसिस पे, लाइक एक दो कैंडल और तीन कैंडल क्लोज हो गई एक के नीचे एक, तभी ब्रेकडाउन होगा, नहीं तो यहाँ पर होल्ड होना चाहिए. ब्रेकडाउन होता है 4750 के नीचे तो फिर हो सकता है थोड़ा सा और डाउन साइड पे जाए, बिकॉज सपोर्ट थोड़ा स्ट्रॉन्ग ही है अनटिल लेस ब्रेकडाउन नहीं होता. ठीक है, बाकी अगर नीचे आया तो वी कैन एक्सपेक्ट प्राइस गो टुवर्ड 4600. उस एरिया के आसपास प्राइस फिर से होल्ड कर सकता है. वो भी सपोर्ट है, मल्टीपल टाइम टेस्ट हो गया, तो देखना पड़ेगा अब टेस्ट होगा नहीं होगा. तीन चार बार टेस्ट हो चुका है, ब्रेकडाउन नहीं किया है, बट या 4750 के नीचे सस्टेन करता है ब्रेकडाउन लेवल पे, तो 4600 विल बी नेक्स्ट सपोर्ट. अपसाइड पे वही आपका 4900 का रेजिस्टेंस है. 15 मिनट टाइम फ्रेम. ठीक है, बाकी दोनों ही देखोगे नेचुरल गैस क्रूड ऑयल अपसाइड की और थोड़ा मोमेंटम कर रहे हैं. रेजिस्टेंस है, कल वाली रेजिस्टेंस है, कुछ और खास नया रेजिस्टेंस अभी बना नहीं है इसमें, दोनों में ही. अब सीधा यूएस मार्केट ही ओपन होगा, मुझे लग रहा है शायद उसके बाद कुछ और मूव हो। फिलहाल गैप डाउन के बाद रिकवर किया है दोनों ही जगह पे। लेट्स सी वापस रेजिस्टेंस पे आके रिजेक्शन मिलता है तो।
The whole game plan for the Fed, the way we saw it last August and September, was for them to cut maybe more aggressively than they had intended, caused in part by political pressure from the president. The Besant would issue like crazy in the front end and starve the back end of supply. And if you could move that front end down to 2% more rapidly, then a 4.25 back end made sense from a yield curve steepness standpoint. Our concern now is the longer the Fed hangs out at 3.5, the longer it takes them to cut, the more likely you can have a nasty bear steepener, which clearly isn't good for equity multiples, for commercial real estate equity, for mortgage refinancings, all those things that are part of the affordability agenda. So when you want to run an economy hot, one of the ramifications can be a materially steeper yield curve.
This doesn't seem like somebody who wants to run the economy hot, just based on the testimony that was released, or at least that Political reported on, talking about how inflation is a choice, the Fed must take responsibility for it. Why is the market ignoring the fact that Kevin Walsh was a hawk and still kind of sounds like a hawk?
Yeah, well, look, if you think of the price of what was cut in, or priced in this year for cuts, right? Clearly, there was around 100 at one point. That's backed off substantially. It wasn't too long ago, you guys were running headlines about implied market probabilities of the Fed hiking. So I think it's hard to argue that the market's saying Walsh is going to get in there and boom, we're going by 100 right now. That being said, if you assume that productivity growth stays as strong as it is, and you assume that there's continued disinflationary pressure from technology, which is most of the last 20 years, we know the labor market's weakened substantially. It's still relatively strong. The consumer is relatively strong. There is scope to cut further. The debate, and no one knows the answer, is what is the new neutral rate? Is it 2 or is it 3? Economically, there isn't that big of a difference between 2 or 3. From an inflation standpoint, there isn't that big of a difference. But there's a heck of a difference in servicing debt when you're issuing $2 trillion per year. So, comments come and comments go. It's going to be really key to watch the action that takes place the first 3 months in terms of building consensus. Should we go by how fast, to what degree, and how markets react to that?
Why do people still think that this is relatively tight monetary policy, given the fact that that financial conditions have eased dramatically? The capital markets are wide open, that the economy seems to be chugging along, and that there are no signs of constraint except for small pockets that are affected by other exogenous factors. Yeah, and to take it even one further,
obviously private credit's been in the headlines quite a bit these days. Courtesy of your esteemed institution. And, if you think of floating rate borrowers, they were one of the few that actually suffered from tighter policy, right? And what's happened, the last 18 months, 16 months, is interest expense has gone down by about 15%. So that's one pocket that actually benefits from that. Additionally, if you look at, maybe subprime borrowers or those that are more rate sensitive at the low-end consumer, they benefit from lower rates. But your central point is true. Financial conditions are not overly tight. That being said, it still has substantial savings for the go-forward budget deficit situation if we can issue very aggressively in the front end and starve the back end of supply.
I don't think you can underestimate the importance of financial conditions. Mm-hmm. We talked about this when the shock first hit. The financial markets can shape the events they anticipate, not my line. We've talked about that a million times. The fact that financial conditions have eased will support this economy in a way that you want it and need it to at a moment like this one, because this is a real economic shock and you will see ripples in months to come.
Yet markets are doing the Fed's work for it. The Fed doesn't have to cut rates because essentially the market is wide open and companies can still issue debt. Question is just how much it's a bifurcated open market in terms of welcoming any kind of high quality, well-heeled company, not necessarily individuals that fall on the other end.
Troy, Bramo's right. Is this market just open for massive hyperscalers issuing a lot of debt? Is it just open for big open AIs, Anthropic type companies to come to market and IPO in a few months, or is it open to more than just that?
Yeah, it's a great point. So one of the things that you've written about, we've discussed, is the IPO market has been relatively shut for companies that aren't go-go growth or hyperscaler. And, that's one of the reasons why it's been tougher for large and mega cap PE firms to exit their positions, that are growing at 3 to 8%. Fortunately, we'd say, in the middle market, most of the exits are to larger sponsors or to strategic acquirers. If you look over on the private credit side, issuance was very, very robust late last year. That's certainly slowed down with the change in flows and the change in insurance company appetite. Wider spreads, right? Wider spreads, you tend to have sponsors that sit back and wait for conditions to ease to some extent. I wouldn't say it's bifurcated, but I think the market is getting more discerning in terms of what it'll finance in private credit and private equity. And exits for large and mid-cap sponsors, you really need to see the IPO market broaden, which could happen if financial conditions ease further. But to your broader point, they've been easy for quite some time. I mean, 22 was really the last period of significant financial condition tightening. For most of the time period, other than Liberation Day and obviously the war, it's been wide open for anything that's high quality.
There was a massive worry we'd see a repeat of 22. Central banks hiking, simultaneous sell-off in stocks and bonds. You saw it for like a heartbeat. People started to price in hikes. Stocks and bonds sold off. it's good news we haven't seen that continue.
Yeah, people point to the labor market and the fact that it just isn't as tight as it was back then. The fact that also we're not getting the same degree of fiscal stimulus, even though that we are getting some fiscal stimulus. Ultimately, though, we're going to have to wait for the data. The data so far, pretty good, at least according to, yeah, I mean, honestly, people are buying a lot of things going out.
Yeah, and John, if I could jump in there one second. Yeah, so I think, there's confusion from time to time, right? In that, 2022 was really a result of three and a few other necessary conditions for an inflation surge. One was we printed 42% of money supply out of thin air. Two was we had 2 job openings for an unemployed person, and 3 we had 2.2 trillion of excess savings that was being spent.
Things have changed a lot.
Things have changed a lot, right?
Troy, it's good to see you.
Great
Thank
to
you,
see
buddy.
you too.
Troy Gaske, a Future Standard. That testimony from Kevin Walsh about an hour away from New York City this morning. Good morning. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Futures higher, 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Tim Cook is ending his 15-year run at Apple, handing the reins to hardware chief John Ternus in September.
President Trump keeps up the pressure on Iran, saying he does not want to extend a ceasefire that's set to expire tomorrow.
And Fed Chair nominee Kevin Walsh heads to Capitol Hill for what could be one of the most contentious confirmation hearings in decades.
In the meantime, we've had a lot of earnings this morning, Matt, and that's what I'm looking at pre-market. If you are to follow me over this way, defense stocks reporting, I guess, mixed earnings. Iran has been fueling demand for munitions. RTX, they raised its outlook. Northrop Grumman maintained its outlook with plans to expand production. And GE Aerospace was able to avoid major war disruptions. They also see strong demand for their jet engines because people are still flying. But I guess expectations were high because both those stocks are down.
Yeah, we'll talk through those stories. Very important to the pro-sec economy. Apple CEO Tim Cook will be replaced by the head of devices, John Ternus, in September, who's just 50 years old. Ternus will be tasked with ushering Apple into the AI era as the company struggles to break out from its incremental growth hinging on the iPhone. You can see shares in Apple down 0.6% in the pre-market.
Let's get deeper into that story. Joining us now is Bloomberg Tech co-host Ed Ludlow. Ed, first off, I was reading Dan Ives' note this morning basically saying it could make sense because he's always a bull, has to find silver lining, but saying that the timing might raise questions. What should we make of the timing?
Yeah, look, that John Ternus was the heir apparent and is the new CEO of Apple effective September 1st is not a surprise. And I was on Bloomberg television when Romain or Katie read out that Dan Ives subject line, and I think everyone was saying, come on, really? The timing is interesting. Apple has just celebrated its 50-year anniversary, and Tim Cook did a number of interviews which would have indicated at that time he wasn't going anywhere. Additionally, you know, again, this does not happen until September 1st, but remember what happened at the beginning of the year. There were a number of executive departures from Apple that prompted Tim Cook to explain it to staff. And Tim Cook said when people get to 65 years of age, they want to move on and do something different. Well, Tim Cook is 65. And the reality is that as the executive chairman, he is this kind of even expanded role where he continues to be sort of a vital piece of strategy and the company's relationship with governments around the world.
So first of all, does that mean John Ternus is younger or older than Apple? Well, if he's 50 and the company just celebrated its 50th anniversary, there must be pretty close in terms of birth dates.
This is why, like, the history is actually quite important. Everyone's going Tim Cook since 2011. Tim Cook joined Apple in 1998, and he became COO in 2005. John Ternus joined Apple in 2001. He spent 25 years working at that company and gone up the ladder, right? But for most people, that's a career. You know, he's been there through the evolution of the company anyway. Yeah. So people talk about it being new blood. It's new blood, but it's internal, you know.
So how would you grade them, you know, or how does Mark Gurman grade them on their AI performance? Because I think a lot of people thought they made a mistake in not building their own multi-billion-dollar LLM. Right. And now it looks like maybe it was a smart move using someone else's multi-billion-dollar LLM or everyone else's multi-billion-dollar LLM.
One of the frustrations of the street has been the cash pile that Apple sits on and doesn't use. Right, so whatever they don't do aggressively. They don't do big pieces of M&A. They have used third-party models in different ways, as well as developing their own. But they haven't arrived at a point where Siri, which is the voice-based AI assistant on the iPhone, iOS, and the other OSs, does something tangible and useful as an AI tool. That's why, going back to your question on timing, it's interesting. WWDC is in June, right? That was the expectation, that this year we would finally hear from Apple, here is our AI story. And so the fact that Tim Cook is staying through June into September for that is kind of interesting.
Isn't Ternus more aggressive in his leadership style anyway? So maybe that helps push things forward?
So what you need to know about John Ternus is that he was a very big voice for the projects that were not working. Vision Pro didn't want them to go so deep on that. The car project being killed, which is so interesting. He was also a big voice for pushing MacBook Neo, going into that lower price point market, departing from Apple's position as the premium luxury product. Very different part of strategy. Internally, what you need to know, Danny, and part of Bloomberg's reporting is that he's very pro-AI, using it as part of the product development cycle, but we don't know how he feels about putting it into a product. The read here is he's a hardware guy, he's an engineering guy, and so that's the focus that he will have on the product, on the hardware.
All right, we'll have a lot more time to talk about this, obviously. And of course, you'll cover it as well, I'm sure, in depth today on Bloomberg Tech. Co-host Ed Ludlow coming up in just a couple of hours. Let's get to Capitol Hill now. Fed Chair nominee Kevin Walsh testifies in the next hour, vowing to safeguard the Federal Reserve's independence if confirmed. Michael McKee, Bloomberg's international economics economics and policy correspondent, joins us now from Capitol Hill. And it's that independence that's in question, right, Mike? Because you wouldn't think that President Trump necessarily wants a terribly independent Fed.
You would not. And the president is not doing Kevin Walsh any favors. Speaking on another network now, he said that he would be extremely disappointed if the new chairman doesn't cut interest rates right away. He also said he's in no hurry to end the investigation into Jay Powell. So Kevin comes in with maybe 2 strikes against him here. Walsh, in his opening remarks, is going to address that elephant in the room, saying that it's up to the Fed to prove its independence by not listening to presidents or senators or members of the House who tell them what they think the Fed should do. He said we have to do what is important for the economy, and that is price stability. So he's pushing back a little bit on Trump, but there will be questions certainly about whether or not he's going to push for any kind of interest rates anytime soon. There are also going to be questions about the Treasury and the Fed. Walsh has said that he would like to see maybe a new Treasury-Fed accord where they would work together on debt issuance because the Fed has been buying so much in terms of QE that it affects the overall bond market. And he says he wants to go back to scarce reserves. That would be a big blow to Wall Street and all the repo desks out there, all the repo business. So that should draw some questions as well. And then, of course, he's talked about not talking, that members of the Fed should speak less, offer fewer opinions about what's going to happen in the future, and he might like to have them more coordinated. So a lot for Walsh to talk about today. And of course, then the secondary elephant in the room is when does this Powell investigation wrap up, and when can they get around to voting on Kevin Walsh as the new chair?
Yeah, I mean, Mike, first of all, the cool kids obviously are going to care most about what he says on the balance sheet. But to that point, I mean, how much does this matter? How much does it even matter for markets if that is hanging in the background? A Tom Tillis who's unwilling to vote and confirm Kevin Walsh as Fed chair as long as this investigation is ongoing.
It matters only to people who might trade in December Fed futures or something far out the curve at this point, because everything's going to change on a day-to-day basis. Even if Walsh were chair now, he probably couldn't tell you what he would do at the moment because of the war and the inflation outlook. It's all very, very uncertain. So it isn't that big a deal. And if Walsh is not confirmed on time, Powell's term as chair ends May 15th, then Jay Powell just continues in the job, particularly on the Open Market Committee, which the president has no influence over, and they're not going to be cutting rates. And that's also a very important point. There are 19 members of the committee, 12 of them vote, so the new chair will be only 1 vote. And if he wants to lower interest rates immediately and nobody else does, it isn't going to happen.
All right, Mike, thank you very much. Bloomberg's Michael McKee on Capitol Hill, and he's going to be back with us at 10 a.m. as we walk up to Walsh's confirmation hearing when it gets underway. Again, that's expected in about an hour's time. Elsewhere, the U.S. is waiting on Iran to join a second round of talks ahead of a ceasefire deadline, with tensions rising on both sides as they remain deadlocked. President Trump spoke on CNBC moments ago.
What I think is that we're going to end up with a great deal. I think they have no choice. And the blockade has been a tremendous success. They said 2 days ago, we will open the strait. I said, no, we're not going to open the strait until we have a final deal. No, we want to open the strait. They said, we're not opening. We totally control the strait.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, with a ceasefire deadline expiring late tomorrow, do we have any clarity whether both sides will be in Pakistan and Islamabad to continue conversations?
Hey, Danny. Well, President Trump went on in this interview to indicate that he believes Iran will be sending a delegation to Pakistan for another round of talks amid what has been uncertainty about whether or not the country will participate. From the U.S.'s end, it is our understanding and expectation that Vice President J.D. Vance, alongside Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are expected to depart later this evening. The president did reiterate that he doesn't want to have to extend the ceasefire deadline beyond tomorrow amid new escalation from this White House, reiterating threats to hit Iranian civilian infrastructure if a deal is not made in time. In fact, in this interview, President Trump said that he, quote, expects to be bombing, appearing to cast doubt on a deal, though we are getting some new insight into the perhaps negotiating tactics that are going on, as a White House official outlines to Bloomberg News news that the president's varying statements are to indicate strategic ambiguity that the U.S. could use in any negotiations. Now, our reporting has also indicated in recent days that the leadership of the IRGC is taking a much harder and harsher stance when it comes to negotiations with the U.S. compared to, say, less ideological figures like the foreign minister or Iran's parliament speaker, who seem to be more amenable to a potential deal with Washington. But Matt and Danny, one thing that's been consistent from nearly all Iranian officials is that they say that they don't want to negotiate until the U.S. lifts its naval blockade. But President Trump has said now multiple times in the last 24 hours that he's not going to do that until they put pen to paper on a potential agreement.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there in Washington. We're going to check the markets quickly here as we head towards the opening bell. We're looking at gains after slight losses yesterday, around the same size. In fact, S&P futures right now up about 0.2%. The NASDAQ futures up 0.25%. We're always following Brent crude throughout this war. It's not doing a lot today, but still holding at $95 a barrel and change. And the U.S. 10-year yield right now at 4.2678, holding firmly in the range.
Some of the more interesting things might be the single names this morning. We had a lot of earnings. United Health earnings topped all analyst estimates. It lifted its earnings outlook as higher medical costs helped profits. It's a stock that's been beat up over the past 12 months.
Scotch tape and Post-it note maker 3M posted sales growth that missed expectations and reaffirmed guidance as it works to exit its non-core sides of the business. A huge business, so I don't know what's non-core. Maybe the Post-it notes and the Scotch tape.
No, those are so core.
Down 3.5%.
Some airline moves too. Alaska Air earnings topped estimates. It suspended profit guidance for the year due to Iran's war impact on fuel costs. Separately, in that same CNBC interview we were just talking about, President Trump said that he does not support a merger between United and American Airlines, both those stocks turning negative on that. He did, though, say, wink, wink, nudge, nudge, he hopes someone will buy Spirit Airways soon, and the government may step in to help, confirming a Bloomberg scoop yesterday.
I'm sure that company will be one he never forgets, and probably won't join the tariff suit either. Coming up, defense stocks report strong earnings as the war boosts demand, but fuel prices pose a risk.
And happening right now, SEC Chairman Paul Adkins is speaking with David Rubenstein at the Economic Club of Washington, currently discussing SEC efforts to strengthen U.S. capital markets. You can watch that conversation live go on your terminal.
And secondly, just last year, they made illegal mandatory arbitration.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest. Look what's making headlines around the world. U.S. retail sales jumped 1.7% in March. It's the biggest gain in a year, fueled by a surge in gas spending during the Iran war. Demand held up broadly with gains across furniture, electronics, and more. Economists say strong tax refunds are cushioning consumers for now, but that boost may fade as gas prices, or if gas prices, stay high. Top oil traders are warning the Iran war is crushing global demand, which is already down about 4 million barrels a day and could hit 5 million barrels soon. With Hormuz disruption slashing supply, industries from airlines to plastics are cutting back. If the strait stays closed for 3 months, traders say a global recession could follow. And RTX is raising its profit and sales forecast, citing resilient air travel and growing demand for military hardware. The aerospace and defense manufacturer makes critical hardware for the U.S. government, including Tomahawk cruise missiles and engines that power F-35 fighter jets. Danny?
Let's get more on the defense sector. And Bloomberg's Boston Bureau Chief Brooke Sutherland writes the Bloomberg Industrial Strength newsletter and joins us now. Brooke, I was looking at these earnings. They seem strong, and that seems to be no surprise. But the stock reaction isn't as big, and in some case lower in some of these defense companies. What do you make of what we heard and the reaction to them?
Sure. And I think in the case of GE, I don't think the stock reaction is one that's defense driven. That's more, I mean, this is predominantly a commercial aerospace company. And so I think, what you're looking at here is they did maintain their guidance for the year. They said based on their first quarter results, they are on track to hit the higher end of that. But CEO Larry Culp was very acknowledging of all of the uncertainty out there and the impact of higher fuel prices on their airline customers. And so you did see GE taking down its departure outlook for the year, in part incorporating a double-digit decline in Middle East traffic in particular. And why that's important is that is where aerospace suppliers make the most of their money, is in maintenance and spare parts. And this market has just been absolutely booming the past couple of years because we've seen such log jams in terms of aircraft deliveries. And so you've seen, a huge rise in pricing power, just, a really supply-demand mismatch here that aerospace suppliers have been able to take advantage of. And I think, if you do see those departures continue to trend down, that is going to hit those higher margin spare part sales. And I think, GE is not seeing that impact now, but you worry about how that plays out down the road.
Brooke, I don't know if you're able to watch President Trump's conversation with Joe Kernan on CNBC in the last hour, but he did praise Raytheon and said that the U.S. has essentially resupplied. We've got much more ammo and other things, he said, than we maybe had before or would otherwise have had. That wasn't entirely clear. But how is Raytheon doing in terms of making more missiles as we use them?
I think they're working on it as hard as they can. It is not the easiest thing in the world to ramp up production of these things very quickly. But, in the case of Raytheon, I do think you're seeing the benefit there of having that diversification. They are also a major commercial aerospace supplier, but they have a very, very large defense business, and they're certainly seeing the demand there. And, I think one of the things that's interesting for these defense companies is you talk about increasing production. That is going to require capital spending. And you did see Northrop Grumman today taking up its CapEx forecast for the year. And what we haven't really seen from investors is sort of a verdict on if they're okay with that, because that does ultimately mean, a hit to cash flow. But on the other hand, more orders, hopefully more stability. I know the Defense Department has really been preaching about the value of having that visibility for these defense suppliers so that they can make the investments that they need to ramp up production. And, I think that's in process, but time will tell sort of how investors feel about that trade-off between capital spending and cash flow.
What about their ability to issue raises to C-suite and things like that, Brooke, something that the president also put in the executive order?
Sure. And I think that industry is sort of still in wait and see mode. We haven't yet seen, this list of underperforming companies because they were specifically talking about, punishing companies that weren't meeting their deadlines or were sort of otherwise failing to invest in the priority projects for the Defense Department. And there was supposed to be sort of this list of underperformers that we have not yet seen. And I think, part of what the administration, might have been trying to do there is get some movement, get some, the defense companies to think more seriously about investment and sort of change their framework. And so, sometimes you need a little jump start. And we've certainly seen a lot of activity from the defense suppliers since that executive order in terms of ramping up production. But it is a two-way street. And, what the defense suppliers always said is that they need that long-term visibility. They need these commitments from the Defense Department. And you have seen the Pentagon stepping up, making some of these longer-term deals that give these companies the visibility to invest. Wasn't there a $5 million cap? And I think the CEO of Raytheon last year got paid more like $35 million. So they get paid quite a lot of money to do what they do. So nobody is hurting financially in the C-suite in America. All right. Brooke, thanks so much for joining us. Look forward to reading more of the coverage in your newsletter. She is Bloomberg's Boston bureau chief as well and writes, as we said, the Bloomberg Industrial Strength newsletter. You can subscribe to that on the Bloomberg terminal. Coming up, United Health beats and raises its outlook. What's driving the strength? We'll tell you next. This is Bloomberg Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg. What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
A strong quarter for United Health, beating on profit, raising on guidance, with shares moving higher and lifting other health insurers as well. Sign of a rebound after last year's shock. Joining us now is Bloomberg Health reporter Ike Swetlitz. So, Ike, what do we know about what's driving these gains? What's going right at United Health?
Yeah, so United had a pretty challenging year last year. They replaced their CEO and raised prices in their insurance plans. and raising prices. There have been some fewer people signing up for those plans, but that's been a pretty big driver of the better quarter this time around.
I also saw they had some commentary, specifically the chief of government programs, around challenges and questions on the structure of the Medicare obesity program. Ike, what does that just say about United Health and other insurers' ability to participate in these government efforts?
Well, the government's sort of working on this project to look at covering GLP-1s in Medicare, but they need a certain percentage of people to sign up for this program in order for it to take effect. So United's comments, I think, we're all watching to see whether they're going to sign up. United is one of the largest Medicare Advantage insurers, and so their participation may sway things here.
How is United doing, just quickly, compared to the other health insurers? Because it had a horrible drop last year, obviously.
Well, they're the first to report here, so I think it's sort of a sign, potentially of what's to come. Many health insurers have been saying for a while that medical costs are increasing, and they don't see payment rates, especially from the government, increasing enough to keep up with that. So I think this is sort of the first preview that we're getting of what's to come.
Okay, Ike, thank you very much. That's Bloomberg's Ike Swetlitz on United Health earnings. And just 4 minutes to go until your opening bell. We'll have that on the other side of this break. You're watching Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are seeing some slight gains in terms of futures. We got some good numbers in terms of jobs. We got some good numbers in terms of spending. Traders are clearly looking through the war or hoping it turns out well, as President Trump has assured us that it would, and soon. S&P futures, you can see up 0.2%, just about what we lost at the close in the cash trade yesterday. NASDAQ futures doing the same. Ringing the bell at the New York Stock Exchange. UiPath, the ticker is PATH, and the stock has lost just about 85% of its value in the last 5 years. So nowhere to go but up, right? Crane shares ringing the bell at the New York Stock Exchange for, I think it's a high-income ETF, and they've got a little robot, Danny,
adorable,
with them. I'm not sure if it's the one that there was a robot that ran the marathon, right?
Surely not that one. That one has stumpy little legs.
Looks slow.
Horrible for running
Looks
the marathon.
Slow. Some dude did it in 2 hours and like 1 minute. Did you see that?
I did not see that.
2 hours and 1 minute. That's insane.
So impressive. I can't believe that. No.
I'm pretty sure that's true. I think I'm not wrong.
Well, fact check it, and it sounds right. Yeah. Okay. Producer Ann confirms the Chinese marathon. Someone did run a 2-hour marathon.
No, I'm talking about Boston.
Oh, Boston.
Yes.
Okay.
China.
I don't know.
No. Yesterday was the Boston Marathon, remember?
I do remember that. Anyway, I am looking at shares of Apple at the open, going a whole lot of nowhere, down 0.2%. Apple CEO Tim Cook is going to be replaced by the head of devices, John Turnus, in September. He's going to be tasked with ushering Apple into the new AI era. It's been struggling to break out from its incremental growth, hinging on the iPhone. Maybe we get a foldable iPhone more soon. Anyway, we're down only 0.33%.
All right, defense stocks have been reporting earnings this morning as the war with Iran fuels demand for munitions. President Trump said that we're restocking. We've got more ammo, he said on CNBC. RTX, Raytheon raised its outlook. Northrop Grumman maintained its outlook with plans to expand production. GE Aerospace, or General Electric, trading as GE Aerospace, warned about sales risks due to fuel prices. Joining us is BNY Wealth Chief Investment Officer Sinead Colton-Grant. And this sets up, I guess, the push and pull in the market perfectly, Sinead, because corporate earnings are on fire. They're doing very well. On the other hand, we have an inflation problem that may somehow hurt growth, right? How do you see it panning out?
So let's think about the fundamentals. The earnings are strong. That's great. Interest rates, which are obviously linked to inflation, there's no expectation that we're going to see really any change between now and the end of the year. You can almost say the first hike getting priced in is July of next year. So that's a pretty stable environment. Now, when we think about inflation, during the 2010s, we all got conditioned to inflation at 2% or lower for the most part. But actually, to have inflation at the 2.5%, 3%, that is perfectly okay for an economy. It can grow well, businesses can flourish, and financial markets can perform extremely well, particularly equity markets with inflation even as high as 3 or 4%. Now, our forecast for the end of the year, the midpoint has been 3%, and we've had that as our expectation since the start of the year, simply because inflation is a little bit stickier. So inflation at these levels, fine. We obviously need to watch to see how do those elevated energy prices translate into inflation over a longer time period.
The thing that I struggle with is that if you listen to most energy experts, they're having a mild freak out over what's happening right now, and that the true extent of supply disruptions haven't fully been realized. We had a story out from our energy team governor group saying that the amount of lost consumption may need to double, that if the waterway remains closed for 3 months, it's going to trigger a global recession. They're not the only people saying this. But nobody in equity land is saying this. A few people, a few bond traders are. It feels like there is just this disconnect between the experts that look at energy markets and what equity investors say.
Well, and I think it's a case of perspective and time horizon. It's not unusual to see different asset markets pricing probabilities differently. And what you're clearly seeing in equity markets is that investors are looking through the conflict. There's an assumption that we're going to see a resolution of some sort over the next, call it, month to 6 weeks or so. Clearly, energy analysts are looking at, well, what's going on the ground in terms of disruption? I would say we focus a lot on energy supplies, but we also need to think about the supply of things like fertilizer, because that has also been impacted. Now, again, A lot of views are predicated on the assumption that this will be relatively short-lived. But here's what we also know, and this is something that we talk to our clients about a lot because geopolitical risk can be very unsettling. Obviously, there's a huge humanitarian cost. But when you've gone through multiple geopolitical risk events, what history shows us over the last 7 decades is that 12 months after the onset of the geopolitical risk, markets are higher, and typically they're higher by, on average, 10%. So there's a reason for that difference in pricing.
You know, we also have higher tax refunds, which offset, I guess, the slightly higher price at the pump. We don't need to go crazy. $4 isn't insane, right? We were at $5 in 2022. So that seems to even things out. And earnings, I just keep going back to the numbers that we're seeing are mind-blowing. I think consensus is for $327 on the S&P going out 12 months. Are you that optimistic as well that we can keep this thing going?
So we are optimistic. The high end of our forecast right now is 315, and so that gives us a year-end S&P target of 7,600.
315 year-end, right?
Correct.
Yeah.
Correct. So that's pretty constructive. You know, we're seeing a lot of earnings beats. This is another quarter. It's looking like double-digit earnings growth. And it's a pretty strong fundamental backdrop across multiple sectors. We've seen tech come back very strongly. The multiples now are looking a lot more attractive than they were in October. But what's really important for ongoing strength in the S&P in particular is a broadening of that strength. And we're seeing the earnings expansion and the lift coming from industries outside of tech.
You have seen, though, a lot of the earnings upgrades revolve around tech. And I just wonder how much of the leadership remains intact, even if the consumer is strong and still spending on things like goods. Do you believe that's still what carries this index higher through the end of the year, that tech can regain the crown after it sold off to the start of this conflict?
Well, you know, I'm not sure that it needs to, because we had such strong performance over the last 2 or 3 years. And now what we really want to see is some of those tech-related benefits, whether it's AI-driven productivity gains, broadening out through sectors as a whole. Now, when we look across the board, we do like tech. We also like industrials. We like financials. And we're starting to see many of the, you can call them AI-adjacent activities, really starting to buoy other sectors.
All right, Sinead, thank you so much for joining us this morning. Appreciate your time. BNY Wealth Chief Investment Officer, Sinead Colton-Grant. Let's get a look on your equity market right now. And we are mostly undoing very mild drops yesterday, or not quite at this moment. We're a little changed. We are going to hear from a potential future Fed Chair, Kevin Walsh, in about 20 or so minutes time. So maybe we just take a breather until then. Some of the individual movers, an interesting thing happening with healthcare. So United Health has very, very strong earnings. So you can see those shares up nearly 8%. However, then they cast doubt on the government's program to try to increase access to obesity medication and the insurers' willingness to take that on. And that's why if you look in the down column, you'll see Eli Lilly is one of the worst performers. What happens for Eli Lilly if there's not more mass widespread adoption of insurers covering some of the obesity medications? So those shares down 3 1/3%. Apple, it's slightly lower, but given its size, it's pulling the index down about 3 points on the announcement that CEO Tim Cook will be stepping aside in September. Let's take a look at the sector breakdown this morning. Consumer discretionary financials, those are at the top. Healthcare is at the bottom. That's basically being dragged down by Eli Lilly. Even though the insurers are doing well, Eli Lilly is just a bigger company. Staples, real estate, communications, all of those lower for an index that is a little changed, Matt.
All right, really interesting stuff there under the hood. Coming up, Alaska Air suspends profit guidance as the war in the Middle East shocks the industry. We'll discuss with analyst Tom Fitzgerald next. This is Bloomberg Open Interest.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Let's get you some top calls, what the analysts are saying this morning. First up, HSBC, they upgrade Intel. They cite an overlooked surge in its server chips. The firm expects strong growth in shipments and pricing to boost earnings in a meaningful way. Shares up nearly 2.5%. Next up, Colgate-Palmolive is getting upgraded at Rothschilds and Redburn. The firm says that the consumer products company is delivering reliable growth and shows a strong track record and productivity savings, but not a lot of change here in the share price. Finally, ExxonMobil, that gets downgraded at Wolfe Research. The firm says that easing Middle East risk lowers the geopolitical premium as oil markets normalize. Shares down 0.5%, despite, Matt, all the energy analysts freaking out that we still have a problem and a closed Strait of Hormuz.
Right. Well, energy has done very well throughout this war, right?
That's true. So maybe the peak is in and gone.
The energy sector is up 22%. Doing better than any other sector in the S&P 500 in terms of industrial groups. President Trump says he does not support a merger between United and American Airlines. On his recent CNBC interview, he also said he hopes someone will buy Spirit soon, and the government may step in to help. Let's bring in TD Cowen analyst Tom Fitzgerald. And Tom, to be clear, you don't cover directly Spirit since the bankruptcy, but you obviously have a view on the entire industry and the state of play. How do you see this, that the President of the United States wants to help get the deal done? Is that going to spur some action?
You know, it's impossible to say. I think, as someone once said, there's more rumors than airplanes on Spirit's fleet. But I don't think the government wants to get in the habit of bailing out industries and picking winners and losers.
This government might want exactly to do that.
And there's the affordability issue as well going into the midterms. But do you open up the door to other airlines, whether it's a JetBlue or some of the other ultra low-cost carriers who are struggling? Will they also be seeking a bailout? It's a sticky situation.
Well, there was this idea floated that by having Scott Kirby going to the White House and considering an American merger, that it opened the way for them to buy JetBlue. The president also saying on CNBC today that he doesn't want to tie up between United and American Airlines. Does that tell us anything about a potential JetBlue purchaser?
It's definitely in the cards. I mean, there were articles last month about the company potentially hiring advisors. I think everyone can look at the leverage statistics. Fuel's only going to make their challenges worse. It would not be surprising to see the board try to look for a strategic solution.
What's your take on the price increases that we've seen? I mean, a lot of it's through increased baggage charges, which to me, by the way, I know it's maybe a tangent, but it makes no sense, right? If you raise the price on checked luggage, then people bring more stuff on board with them, and there's no room for it.
And you have to awkwardly wheel your suitcase up and down the aisle.
Tom? Yeah,
it's a little
looking
easier.
For a space.
Base fares tend to ebb and flow with the oil market on a lagged basis, but ancillary fees tend to be a little stickier. We
but
saw
why
that
not charge people for carry-on luggage instead of checked? Then people would check everything, right? You don't want people bringing, their entire, life's assets on the plane with them.
Yeah, well, sometimes it's person to pack lighter, so then you save on the fuel and you have the deplaning, so.
Okay, well, beyond that itself, by the way, I've seen people bring like violins and precious things on board. You're not going to check that,
that makes a lot of sense.
That are like really awkward shaped. Anyway, so Alaska
I once
Air.
brought a sword.
No, you did not.
With me, yeah.
In what world are you allowed to bring a sword through security?
Well, first of all, it was the late 90s.
Okay.
And secondly, the pilot
sense.
actually saw me trying to get it on the plane.
And then was he like, "Sir, please come fly this aircraft"?
He volunteered to carry it. He volunteered to carry it in the cockpit. But my question is really about the inflation and the pricing power that they have, because we hear so much about it, but airline prices don't seem to change that much in the last 20 years. So how do you view it?
I think right now, as long as the labor market's hanging in, you still have the positive wealth effect from the equity markets hanging in. I think demand for air travel is going to be strong, and they should be able to pass through pricing. We'll see as the summer goes on, if gas prices stay elevated for a longer time, there's a risk that the price-sensitive leisure starts to show some cracks. But right now, it's they're firing all cylinders on the revenue front. Corporate seems to be very robust. I think the Delta print, the Alaska color last night, that bodes well for United after the close tonight.
Well, I mean, given that Alaska suspended its 2026 guidance on those fuel costs specifically, is that an admission from them somewhat that there is a ceiling to how much that they can raise prices?
Well, I think it's just harder to get, a longer term, and they're always just trying to predict revenue, 40, 60 days out. I think the other thing that Alaska is specifically grappling with is about 20% of their fuel is exposed to the Singapore benchmark, which is much more elevated than U.S. jet fuel benchmarks right now.
All right, so what about the other big cost is the people, right? We're seeing big problems, and there's always big problems in German unions. But how about for U.S. carriers? Are they doing fine with staffing? Do they have enough labor? And are they able to keep costs down?
Labor's okay in terms of staffing and attrition. It's been one of the stickier parts of inflation in the industry since the pandemic. We're not expecting...
And is their second biggest cost or their first biggest cost?
It depends on where fuel is, but it's either one or two, depending on the price of jet fuel. We're not expecting another big surge of labor inflation in the later part of the decade when the CBAs open up again. But it is, United has a tentative agreement with their flight attendants out right now. That's going to drive inflation in the second quarter. And it's not just there; it's maintenance, airport infrastructure. There's a lot of, that's all this secular cost convergence that's made a much more challenging operating environment and separated the wheat from the chaff.
All right, Tom, thank you so much for joining us.
Thanks for having me.
Appreciate your time. TD Cowen's Tom Fitzgerald. And tune into our interview with United CEO Scott Kirby. That's tomorrow at 9:15 a.m. New York time. Coming up on today's show, Apple's next CEO doesn't signal strategic change.
That's not Apple's next CEO.
No, that would be so surprising if Scott Kirby did. That, on the right, is Apple's new CEO. Apparently, it doesn't signal any strategic change, that according to BI's Anurag Rana. He'll be joining us next right here on Bloomberg Open Interest.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
He
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check of what's going on in the stock market 20 minutes into the session. We're now looking at gains. So we could be approaching all-time highs. Danny, I'm not sure what the closing high was, but it's, I think, around 71.11, right? And we're trading at 71.26 right now. NASDAQ trading up to 26,610. So very slight gains, but up nonetheless. Even with NVIDIA down. It's off only 0.25%, but it's a more than $4 trillion company, so that makes a lot of waves. Intel gaining 1.5%, and the chip industry is going to be very fascinating to watch over the next months as we get more deals in AI, right? Amazon committing another $5 billion to Anthropic and saying that it could go as high as 25 at a low valuation. United Health gaining 9% on better earnings and a better outlook, but hims and hers down. And this is kind of the Lilly trade that Danny was talking about. If these big health insurers don't agree to take Medicaid money for weight loss drugs, it's going to hurt companies like that. Amazon doing well. I talked about this cash injection they're doing with Anthropic. Anthropic also turning around saying, look, if you invest $25 billion in us, we'll buy $100 billion worth of chips and services from you. And then Apple right now down about 0.6% as Tim Cook announces his successor.
Yeah, I also just want to point out Apple announced that they were going to start a weight management program online, and that's also why they're doing well, and hims and hers isn't doing well, because obviously that challenges hims and hers.
But an Apple weight management program that
an Amazon.
Amazon. Okay, yes. I got it. Good point.
No,
yes.
Apple would be
yeah.
Interesting.
Well, I think a lot of people who are doing weight management already use Apple's platform.
Like an Apple Watch with a little GLP-1 prick in it that can give you your dose. Something to consider.
I was thinking about it in a different, like a Noom kind of way. But yes.
Yeah. That makes sense. Okay, let's get back to that top story. A new CEO over at Apple, Bloomberg Intelligence senior analyst Anurag Rana, joins us now. Anurag, I know you think that this is a trade of continuity, but what about around the edges? We've had some excellent reporting about just how their leadership style differs, that Tim Cook liked to rule by essentially getting viewpoints of many different people, and perhaps the incoming CEO is more deliberate and a decision maker of one.
And if that's true, that's very good for Apple, frankly, because we want to see some new hardware products. We want some more innovative hardware products. And one of the criticism I get a lot by anybody who I talk to is, think about it. Samsung came out with their foldable phones so long ago. Why haven't they seen one from Apple at this point? So these are small things, but, if you are the leader, you want to go ahead and show a product first before anybody else can take care of it.
So, I think the bigger question beyond a foldable phone is, why is Siri still so dumb? And I don't mean to sound vulgar, but it just isn't capable still, years after ChatGPT launched, of much of anything at all. Can this new CEO really move the needle on that?
I think Mark Gurman's already reported that we are going to see a new upgrade of Siri, in the Worldwide Developer Conference in June. And a couple of things he's talked about is pretty impressive, actually, because they are going to use Google Gemini's technology to embed in their own models. On top of that, it will have the ability for Siri to go and ask any of the AI agents that resides on your phone. So if you, for example, say, Siri, go out and ask OpenAI for something, it will go into your app and take care of it. Now, you don't have to load the app up and try to get that. So I think that upgrade is coming. And by the time we see the CEO transition, that upgrade would already be part of the next operating system.
Well, considering Turnus is a hardware guy, Anurag, what sort of upgrade cycle do we expect for the hardware itself and innovation?
I think they've laid the rails out for that, and Mark's already mentioned that when you look at it, the iPhone cycle refresh, not all of that is going to happen in September. It's going to be staggered throughout the year, and the good advantage of that is, you go through 2 cycles of that. You're not going to see that volatility in revenue growth rate for Apple, which means not everything is going to hinge on what the December quarter looks like. December quarter is still going to be seasonally the strongest quarter, but not at the same degree as we see right now. With most of the launches happening in September.
Just got 20 seconds here, Anurag, but do you expect to see moonshots from this new CEO? I mean, apparently he didn't want to really do the Vision Pro and wasn't too down with the car. Like, is he going to do some cool, new, different stuff, or just, business as usual?
No, I hope that there is moonshots. They really have the cash flow to go out and do some moonshots. And, if you go look at any large company, whether it's Amazon and Google, all the moonshots have worked because visionary people have invested some money in that without knowing what the payoff is going to be.
All right. Thanks so much for joining us. Anurag Rana, Bloomberg Intelligence senior analyst, covers Apple. Coming up, we're going to talk about Kevin Walsh. We're going to look at Kevin Walsh. We're going to hear from Kevin Walsh on Capitol Hill for his Fed chair confirmation hearing. By the way, that is going to probably go into what would normally be Bloomberg Tech. That starts usually at 11 o'clock New York time. So we're going to push that to noon New York time. Tune in to Bloomberg Tech at noon, hopefully after this Walsh hearing wraps up.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you
the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Preston. Retail sales numbers for the month of March are in, and they show a solid increase from February, but it's not because Americans could spend more money. It's because we had to. Here's ABC's Jim Ryan.
Last month's retail sales figure was up 1.7% on an annual basis from the month before. But it comes as energy costs have surged during the U.S.-Iran conflict. Strip out gasoline prices from the numbers, and retail sales last month were up only 0.6%. That's slightly less than February.
The war with Iran now in its 8th week. Ceasefire discussions were supposed to be held this week in Pakistan, but so far there's been no direct confirmation they will in fact take place. In a post on social media this morning, President Trump sent a message to Iranian leaders saying he would greatly appreciate the release of 8 women who another social media user said were set to be executed by the regime. Opening statements happening today in Harvey Weinstein's 3rd New York rape trial. This one beginning nearly 8 years after the former movie tycoon was arrested amid the Me Too movement. ABC's Phil Tate is outside the courthouse in Lower Manhattan.
The 74-year-old who was once one of the most powerful voices in Hollywood was convicted of the rape of Jessica Mann. That was back in 2020 during his first trial. But the verdict was overturned in 2024. His second trial had only delivered a partial verdict as deliberations appeared to fall apart. He was found guilty 1 count of first-degree criminal sexual act, which carries a maximum sentence of 25 years in prison. But he was acquitted of other accusations, and the jury was hung in Miss Mann's case.
Weinstein has pleaded not guilty to all the charges. Singer David under arrest in Los Angeles on first-degree murder charges after the body of a 14-year-old girl was found dismembered in the trunk of his Tesla last year. Markets this hour, the Dow is up 346 points, and the S&P is up 23. You're listening to ABC News. One Canadian tourist killed, many others hurt when a gunman opened fire on the pyramids outside Mexico City.
Friends Greg Magadini, Jalen Abar, and Jasleen Landaverde were among those pinned down when the gunman opened fire.
Obviously, we're right at the top of the pyramid, so the only exit is really like the bottom of this like the stairs, but then the stairs are so steep.
They waited until the gunman turned his back before attempting to escape, jumping to the landing below.
The drop is about 15 feet.
Greg and Jalen sustaining minor injuries, but Jaslim injuring her foot badly.
ABC's Matt Rivers. Today would have been Queen Elizabeth's 100th birthday, and the royal family is celebrating with a series of commemorations. However, says ABC's James Longman in London, they're also dealing with other things as well.
The royal family has, of course, had its difficulties since her death, not least the scandal surrounding the former Prince Andrew and cancer diagnoses for Charles and Princess Kate. The family is hosting a special reception at Buckingham Palace to mark the day today, and her daughter, Princess Anne, is unveiling a special garden in Regent's Park.
The Southern Poverty Law Center says it's the subject of a criminal investigation by the Justice Department over its past use of paid informants to infiltrate extremist groups and gather information on their activities, often sharing it with local and federal law enforcement. And Kevin Walsh, who's hoping to become the next chairman of the Federal Reserve, has just shown up at a hearing before the Senate Banking Committee as a part of his confirmation proceedings. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com, as well as Scarlett Fu and Paul Sweeney with you, the Bloomberg Intelligence program. Coming up, we're going to talk to Michelle Jamrisko, Bloomberg News White House and National Security Editor, get the latest on the war in Iran. Will there be talks? If so, who's going to go to these talks? And when will these talks take place? Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He's going to join us here, lead us up to the confirmation hearing for Mr. Walsh, Kevin Walsh, Federal Reserve Chair nominee. His confirmation in front of the Senate Banking Committee. That starts around 10:25-ish. And when that starts, we'll bring that to you. So that'll coming up. That should be spirited, to say the least, I would think here. So we got a lot going on. Or combative. Yep, exactly right. So we'll see how that plays out. Right now, let's kick this whole thing off with Alexis Christopherson getting Bloomberg Business Flash.
Thanks, Paul. And we have stocks solidly higher here, lifted by another round of strong earnings and better than expected March retail sales. The S&P 500 up 23 points at 71.32. Dow Jones Industrial Average up more than 360 points now at 49,801. NASDAQ Composite up more than 92 points at 24,496. Brent crude is at 95.22 the barrel, down about 0.25%. And West Texas Intermediate slipping about 1% now at 88.75 the barrel. The Bloomberg Dollar Spot Index a bit stronger at 1192.99. In stock news, 3M's earnings beat the street, but sales growth was short of Wall Street expectations. The maker of Post-it notes, the stock there basically unchanged at the moment. General Electric's first quarter profit beat Wall Street expectations. That's as strong demand for air travel helped the jet engine maker sidestep disruptions tied to the war in Iran. Shares of GE down nearly 4%, and D.R. Horton posting its seventh straight quarter of declining earnings. It also trimmed its forecast for the number of home closings it expects this year, hurt by bad weather and those rising mortgage rates. D.R. Horton is now up nearly 8%. And President Trump says he would like to see a buyer emerge for Spirit Airlines. He also said he's open to the government coming to the carrier's aid. The Wall Street Journal reports that Spirit is seeking an infusion of cash from the government during a spike in jet fuel prices. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. Let's take a look at some of the stocks on the move today. We can do that with the Bloomberg's Christine Aquino. Christine, what are you looking at?
All right, Paul, let's take a look at Apple this morning. Big corporate news, of course, with the CEO transition. So Apple, those shares, ticker AAPL, down about 0.6% at the moment. Pairing some of those opening losses that we saw earlier was down nearly 1% at the open. So more details here, of course, with the transition from CEO Tim Cook, who will be handing the reins over to hardware boss John Ternus later this year. Ternus will become CEO on September 1st, and then Cook will transition to become the executive chairman. So Ternus has headed hardware engineering since 2021. He spent 25 years on product development. And so Bloomberg Intelligence's Anurag Rana weighing in on this change, saying that the role does signal continuity rather than a strategic change. But given Ternus's role as the hardware head, we could see Apple sharpen its hardware strategy over the next few years. So we'll see about that.
All right. So finally, a change in leadership over at Apple. And by the way, there's going to be a Bloomberg Tech special on the new leadership at Apple at 12 p.m. Eastern time. What do you have as your second mover?
Let's take a look at United Health today, Scar, because those shares roaring quite nicely this morning. So ticker UNH, they're up more than 9%. We did get their earnings report, and so they boosted their adjusted earnings per share forecast for the full year. First quarter profits also beating expectations here. So adjusted EPS above $18.25, so $18.25 versus the estimate of $17.83. Now, the company also weighing in on their plans for coverage for obesity drugs under Medicare. So they're saying that they're seeing difficulties with that potential plan. Medicare insurers had until April 20th, so basically yesterday, to tell the government whether they would participate in this plan to add coverage for weight loss drugs. And sounds like, at least as far as UNH is concerned, they're not necessarily enthusiastic about that.
Minnesota mining and manufacturing. The kids know it as 3M. What do you got?
3M, maker Post-its and everything sticky. I really like their sticky tabs, for the hooks. But yeah, so mixed set of earnings this morning. I mean, they did see organic growth, adjusted organic growth, falling short of the average analyst estimates. So organic sales falling 1.4% in the first quarter. They did stand by their financial guidance for the year, despite a, quote, volatile environment, according to CEO Bill Brown. So Barclays, though, saying that they may have made their lives harder by not lowering their guidance for 2026 organic sales growth, given the decline in the first quarter, but we will see. I mean, at the moment, those shares holding up relatively okay. Ticker MMM, they're up about 0.4%.
All right, good stuff. Thank you so much, Christina Aquino. She is our managing editor for Markets Live coverage. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Be sure to subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's go now to Washington, D.C. and check in with our own Michelle Jamrisko. She is our White House and National Security Editor on the latest on the war in Iran. And of course, there's a lot going on in Washington this morning, Michelle, but I wanted to get from you the latest in terms of whether Iran is going to show up for these peace talks, ceasefire talks that we know the vice president is traveling to Pakistan for.
Well, it's anyone's guess, Scarlett, including the president of the United States. So Trump this morning telling CNBC that he's not sure yet that whether they'll be sending them. He thinks they have no choice when referencing Iranian delegates, but to send them, he says he's still optimistic that they could get a great deal, in his words. So from the U.S. side, I think it's pretty clear that they do want to send the delegation that Trump has flagged before. Vance, Witkoff, and Kushner should be headed there. They have not left yet, but we're expecting perhaps that they would depart today and hopefully be meeting somebody on the other side.
Why is there so much confusion as to how this will or will not proceed here? I've never seen anything like it from both sides.
Well, certainly this is what we've been dealing with throughout the conflict, is the rhetoric, the public rhetoric, not really matching what perhaps is going on behind the scenes. And that's from both sides. Of course, you have the president trying to kind of jawbone the reality that he wants to see, and he thinks he has all the leverage in the situation to do so. So trying to kind of force Iran into what his game plan is for the negotiations to end the war. On the Iranian side, of course, we've heard, especially through the state-run media and semi-official news agencies, that they will not be bullied into action, that they will not come to the table until a U.S. blockade has ended in the Strait of Hormuz. But it's really presented this sort of chicken and egg situation where the U.S. side is saying, and Trump repeated this morning, that the U.S. will not end the blockade until there is a deal. However, Iran is saying there will be no deal until the blockade is ended. So we're in a bit of a sticky situation back and forth, and we've seen before, especially with the first round of talks, where that can happen in public, and then behind the scenes there are a few delegates working on both sides to kind of come to some sort of agreement, even if there is not major progress in that first round. So we're expecting, and we're open to the possibility that that might happen again. We could see the groups back in Pakistan in the next couple of days, and the things will be back on track. But we just don't know, and certainly high uncertainty today, especially with things still happening in the Strait of Hormuz, that wouldn't suggest a return to normalcy anytime soon.
Right, absolutely. So I guess my question when it comes to this standoff between the U.S. and Iran is, who is leading
the way in Iran? Who's the leadership that we should be concerned with? Is it the head of the IRGC? Is it the foreign minister? It feels like they're on different, one is more pragmatic than the other, perhaps?
Well, this has been the long time struggle for the U.S. in dealing with the Iranian regime, is that has been increasingly decentralized. Of course, the IRGC plays a huge role more broadly. In this conflict in particular, I think the U.S. would like to think that those who are coming to the negotiating table have some power to make those decisions. And those, of course, would feature the likes of the Iranian Parliament Speaker Ghalibaf, as well as the Foreign Minister Abbas Araghchi. So those are the figures that I think the U.S. sees as a little bit more moderate, a little bit more rational to their needs. And so one would hope that there was some agreement coming together from that side. But we've also heard a lot from one figure on the Iranian side who was more seen to be a kind of a reformist figure on the Iranian spectrum. And that is the Iranian president, Pezeshkian. And if you're judging by public statements, at least in the past couple of days, he's been increasingly defiant about Trump's and the U.S.'s broader style in trying to end this conflict. So it doesn't suggest a whole lot of matching of tone among those two leaders from the two presidents. But of course, very different leadership there. There's been a lot of talk about whether or not Iran has actually changed a regime. I mean, of course, the U.S. has assassinated the Ayatollah. New Ayatollah is the son of the previous one, so the supreme leader. So there's a lot of questions to be answered about who's making the decisions over there. But as for now, the U.S. would like to focus on the couple or few folks that are coming to the negotiating table.
Very good. Michelle, thank you so much. We really appreciate your reporting. Michelle Jamrisko, Bloomberg News White House and National Security Editor. In just moments, we're going to go back down to Washington, D.C., the Senate Banking Committee confirmation hearing for Kevin Walsh, President Trump's nominee for the Federal Reserve Chair. But first, we want to set the scene here with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist here. Ira, what do you think your Treasury bond market and the trading desks around global Wall Street, what are they going to be keen for with Mr. Walsh's testimony today?
Yeah, it's kind of interesting. Some people think that Kevin Walsh is going to be able to get the committee to be more dovish, and they expect him to sound very dovish today. So they expect the front end to kind of rally a little bit, although we haven't been, right? We've actually been selling off on the higher oil prices that we've gotten today. So, you know, inflation expectations going up, and that's been driving short-term treasuries higher. I think also most people, now this isn't certainly consensus, but I think most people do think that that Walsh is not going to be able to convince a lot of the other members to cut interest rates very aggressively, even though most have penciled in at least one, if not multiple cuts before the end of this year.
Okay, so his outlook on interest rates certainly will be a top of mind. There's also a lot of talk here as well about the future Fed independence. And my understanding is that he has floated an idea of revisiting a 1951 agreement between the Federal Reserve and the Treasury that helped boost Fed independence. What do we know about this?
Well, so you know, the Federal Reserve, a client not so long ago mentioned this to me, and I think this is a good way to kind of frame this argument, is the Federal Reserve is inherently a political organization because the 7 members of the Federal Reserve Board of Governors are political appointees, right? They are appointed and then they're confirmed by the Senate, and that's what you're seeing today with this confirmation hearing before the Senate Banking Committee. But operationally, they are independent, and that's the reason why these governors have 14-year terms, so they can be independent. There's not going to be anyone who's going to, be appointed by one president and then not serve under another president, assuming they fulfill their full term. So the way that I would think about Kevin Walsh is he believes in Fed independence, but at the same time, I think he wants to make sure that he keeps the person who nominated him reasonably happy and is going to try to figure out ways to work with Treasury in order to try and lower interest rates. And certainly certainly the Federal Reserve, it can work with others, and it has to, and that it's a banking regulator as well. So it has to work with the Office of the Comptroller of the Currency. It is a member of the FSOC, basically the body that are a number of different regulators get together to discuss the financial stability. So that Financial Stability Oversight Council is something that the Fed's on. So they still work with other organizations within the government, even outside of monetary policy.
So, Ira, what is the data telling the Treasury market now? I mean, I'm sure that the Fed follows the data. What's the data telling us these days?
Yeah, well, this morning's retail sales data was pretty good, actually. It wasn't bad at all. That control group, which is the inputs to GDP, was up 0.7%. Now, we have to be a little bit careful because it's not inflation adjusted, the retail sales data. Those are notional numbers, but it still shows that people have enough beyond what they paid for extra gas, because gas on a non-seasonally adjusted basis was up 30% in March, right? And in terms of their spending and what people had to spend their money on. But they still have excess money in order to spend on other goods and services. So the economy is nowhere near recession at the moment. It is slower than it was the last couple of years, but that's not necessarily a bad thing. And it's certainly something that the members of the Fed are going to keep an eye on. And it's one of the reasons, quite frankly, Paul, why you have these 1 or 2 or 3 cuts penciled in by a majority of the Federal Open Market Committee now, because they do anticipate additional slowing as the economy goes on.
All right, Ira Jersey, thank you so much. Ira Jersey, of course, is our interest rate strategist, chief interest rate strategist here at Bloomberg Intelligence, giving us kind of the lay of the land here as we move over to Washington, D.C. now, go the confirmation hearing before the Senate Banking Committee of Kevin Walsh is taking place. Let's join them right now.
Well, we can do that. You want to wait? We got Senator McCormick right now speaking, so we'll wait till we get to.
I think he's providing some kind of character.
Yeah, I haven't seen that before. A character statement, perhaps regarding Mr. Walsh. But I think the key thing would be, I was just reading some of the notes from Bloomberg News reporting on Senator Warren, really questioning the independence of Mr. Walsh, and we know that's going to be a line of questioning for some members of the Senate committee here, because we have a president who is very vocal about wanting interest rates lower. And he's called that out. He's called out the current Fed Chairman Powell for not lowering rates more aggressively. And so the expectation is that with this nominee, that we'll have some undue influence from the president. But now Mr. Walsh is saying, no, I will be independent. So
yeah, the question for markets and for investors is, will a chair, Kevin Walsh, make policy based on what the economy needs and what the data says versus what President Trump has made clear he wants, which is lower interest rates? And his track record is really interesting because he was a longtime hawk as governor of the Fed from 2006 to 2011 during the great financial crisis. He often warned about the threat of inflation and the need for higher rates. But last year, in July 2025, he turned kind of dovish.
Yes, and that's kind of calling into question for some, again, his independence. But again, this is a Fed, as we've been taught by economists like Michael McKee and by rate strategists like Ira Jersey, it's a committee. And yes, the chairman has certainly a very important weight on that committee, but it is a committee.
It's a consensus-driven organization.
Yes, and it's one that this Fed has been saying for such a long time that it is data dependent. And the data right now, one could argue, and if you look at the WIRP function, the World Interest Rate Probability function, this is the data suggesting, at least to the marketplace, that no rate cuts in the near term, no rate hikes in the near term. Just kind of let's
see how it goes.
Let's see how it goes. And that seems to be what the market's discounting. Maybe that's in conjunction with what the language is coming from the Fed. But that's kind of where the market is right now. I'm looking at the bond market today. We've got the 10-year Treasury up a couple of basis points to 4.27%. But as Ira was pointing out, the front end of the curve, the 2-year up 4 basis points to 3.76%. And both of those numbers have been generally in a range, a pretty steady range. The 10 years kind of 4 to 4.5,
totally
right smack in the middle of that. So that you could argue that the bond market really this year with the Iran war has been quite efficient. Not really any panic buying or selling here. So it's been quite
in
efficient.
contrast to the equity market and the oil market, which has moved a lot more violently with the Iran war headlines. We've seen stocks really take a hit, but then come right back and more, and because we're near record highs or at record highs. Whereas the bond market definitely took a hit, but hasn't recovered to the same extent.
Yep, absolutely. I'm looking at the, if you look at the VIX for the stock market, I'm sitting right at 19, so below 20 is, kind of a quiescent area, as Tom Keene would say. North of 20, it starts to reflect some angst. And we did move out to about a 31 level on the VIX right at the beginning of the war, but since has come down. So we'll keep an eye on that. Looking at the markets here, you want to get a little reset here?
Yeah, let's check in with Alexis Christoforous for our Bloomberg Business Flash. Hey, Alexis.
Hi there, guys. So we are having both the S&P 500 and the NASDAQ in record territory once again. We have got stronger earnings to sift through this morning, and also better than expected March retail sales. Both of those things helping to boost stocks here in the early going. The S&P 500 up 18 points. Dow Jones Industrial Average up 285 points. We've got the NASDAQ adding about 74 points. Oil is now moving higher, so reversing an earlier slide. Brent crude is up about 0.5% at $95.91 the barrel. WTI crude now just below $91 a barrel. That is up more than 1%. Lots of earnings to get to today. United Health reporting first quarter profit that blew past Wall Street expectations and boosted its outlook for the year. And Halliburton says it sees signs of a resurgence in oil field activity in North America. Meantime, shares of telehealth firm Hims and Hers Health falling today after Amazon launched a GLP-1 management program through Amazon One Medical. Also, Amazon leaning in on AI, committing another $5 billion investment in Anthropic. And that's your Bloomberg Business Flash.
All right, thank you very much, Alexis. We appreciate that. Right now, let's head down to Washington, D.C. to Senate Banking Committee confirmation hearing for Kevin Walsh, President Trump's nominee for Federal Reserve Chair. Let's go down and listen in.
She's been with me for many of the most important moments in my life. I'm grateful for her love and her personal accomplishments. I reciprocate that with somewhat of my own love, though I'm a little more stoic than she. And about every 20 years, I reintroduce her to this committee. She sat behind me 20 years ago, and it was almost 20 years ago to the day. And so let me offer today what I said then. Jane, happy anniversary. I'm also thinking of my late mom and dad. They were paying great attention to this hearing 20 years ago. They're no longer with us, but I was always proud of them and the values they taught me, and I hope they'd be proud of me today. We start today with a note of broad agreement, even though we might have heard different narratives at the outset of this hearing. This is a time of great consequence for the nation's economy. As a former Fed governor and friend or colleague of the last 5 Fed chiefs, from whom I've learned plenty of lessons, I'm particularly alert to the challenges and opportunities confronting the institution that I cherish, the Federal Reserve. To the President, to the Congress, the nation, I owe my best judgment and my most faithful efforts in serving the mission that you and Congress assigned to the Federal Reserve, including full employment and stable prices. The American people are counting on the Fed to deliver on its commitments, perhaps now more than ever. The real highlights of my life are not on my resume, as Senator McCormick said. They include the individuals with whom I worked and from whom I learned. I graduated from high school in upstate New York. I had some exceptional teachers there and some brilliant classmates. I've learned we're lucky in life if we start out with good influences in learning and in character. A public school education gave me both of these, and I'm grateful. I made my way to Stanford and found myself in the company of some of the most highly accomplished economists and policymakers. George Shultz, former Secretary of State and Treasury, was among the great patriots at the Hoover Institution, who I came to know as a teacher, mentor, and friend. He passed away right after COVID at age 100, but I still feel him with me. I could not have imagined a better formative experience than working from and learning from folks like him. I could tell you about all the things I learned, but maybe the most important was to be around people completely devoted to the ideas and ideals of our country. Silicon Valley in the early 90s, another fitting backdrop for all of the things we confront today. I found myself in the right place at the right time. The U.S. was at the vanguard of a new era of technological leadership, and I just looked out my door to see it. Now, in the last 15 years, I've gained deep experience in macro and in markets, working with Stan Druckenmiller. He never held a position in government, but is no less a patriot. He never got a PhD in economics, but I don't know a finer economic thinker. Without their guidance and the guidance of Condi Rice, my friend and I should say my boss at the Hoover Institution, I doubt I would be sitting before you today as the president's Fed chairman nominee. But I'm certain of one thing. Absent their tutelage, absent their example, I would not be as prepared for the urgent, mission-critical task at hand. In between these bookend experiences, I served quite a while ago as a governor at the Federal Reserve. At the onset of the financial crisis, as Senator Warren said, our central bank played an indispensable role, and we benefited enormously from the credibility that our predecessors had built up and passed down to us, governors of the Fed at the time. In these unusual and exigent circumstances, I saw the Fed and its people at their very best. But I also witnessed an institution that was tempted to play a larger role in the economy and society. So let me be very clear. Monetary policy independence is essential. Monetary policy makers must act in the nation's interest. Their decisions the product of rigor, deliberation, and unclouded decision-making. And as Senator Warren said, I do not believe that independence of monetary policy is threatened when elected officials state their views on rates. Fed independence is up to the Fed. That has three implications. First, Congress is tasked with the mission to ensure price stability. Inflation is the Fed's choice. Second, Fed independence is at its peak in the conduct of monetary policy. And third, as the chairman said, the Fed must stay in its lane. I'm committed to ensuring that the conduct of monetary policy remains strictly independent, equally committed to work with the administration and Congress on non-monetary matters that are part of the Fed's remit, and I commit myself to accountability. Finally, I'll just say this, Mr. Chairman. Milton Friedman had a phrase that always stayed with me. He always worried about government officials that lured and hung around with what he called the tyranny of the status quo. Status quo practices and policies are especially harmful when the world is changing this fast. If confirmed as chairman, I will be faithful to the Constitution, to the Federal Reserve Act, and to the very best of the Fed's traditions. I believe a reform-oriented Fed can make a real difference to the American people. And if confirmed, I will seek to create an environment in which the best people do their best work. Candor and goodwill will go a long way in pursuing those objectives. And I suspect this hearing, Mr. Chairman, will put us to the test. It's a real privilege to be here.
Thank you, sir. I will say that we typically stick to a 5-minute opening comments. I would encourage all of us to stick with our 5 minutes as it relates to our question and answers. We have full attendance today, and it's going to be really important for us to stick as closely to the 5 minutes as possible. If we go over by much, you'll hear me, which is an indication that you're already over, and I'll do my very best to keep us on time. Kevin, there are so many questions to talk to you about, to ask you about, to be honest with you, and I just want to name a couple of them, and we'll look forward to hearing more on these topics. I will not have enough time to delve into some of the most important issues facing our country. I'll take 2 of those issues and focus my time. I'm sure my colleagues on either side will have a conversation with you and ask questions about AI. The AI future is going to have massive impact on where we go as a nation. It's going to have a massive impact on your dual mandate as it relates to full employment. Our production may go up while our employment stays flat. So this is a really important question that at some point we should delve into. I also think that someone should spend some time talking about our balance sheet. We have nearly a $7 trillion balance sheet at the Federal Reserve. Too much attention has been paid to your balance sheet, and not enough attention has been paid to the nation's balance sheet. And I think it's really important for us to dig into that issue as well. Digital assets, the future of finance in the world seems to have a major component of it being digital assets. The market structure legislation we don't want your comment on, but the important role of the blockchain in the future is another really important part of the future of our economy. I will spend some time talking about affordability and the importance of the independence of the Fed. One of the things I've appreciated about your previous comments is the importance that you have placed on the dual mandate, stable prices, which typically comes through the form of interest rate changes, as well as promoting maximum employment. I think those two will become more challenging in the current environment. One, obviously, the second one being the AI and the future of full employment. You've criticized the Federal Reserve for getting too big, mismanaging inflation. I'm sure you know the definition of transitory, so I won't ask you, but I got a feeling you know, and some of your predecessors did not. Compromising the independence of the Fed. I think we should spend more time on finance, less time on climate change, on politics, on who is or who's not in charge. I think you would agree on those issues, though I will not ask you. I will ask you, however, that under your leadership, how will you steer the Federal Reserve to address the real life issues of affordability is my first question. And my second question will be about how do you make sure that the Federal Reserve stays out of the lane of external influences?
Mm-hmm. Well, thank you, Mr. Chairman. There's probably no more pressing question than the cost of living. We know at the Federal Reserve that price stability was an objective that you and your colleagues gave to the Fed. So when, over the course of the last several years, especially after COVID, when prices went up to the tune of 25 to 35% for virtually all deciles of the American people, that's in 2021 and 2022. Once you let inflation take hold in the economy, it's more expensive and harder to bring it down. And so the fatal policy error going back 4 or 5 years is still a legacy that we're dealing with. We need, in my judgment, fundamental policy reforms to fix it. And while it's true that inflation is less problematic, meaning the rate of change in prices is less severe than it was some years ago, hardworking Americans are no doubt feeling it. I think that means a regime change in the conduct of policy. I think that means a different new inflation framework. I look forward to working with my colleagues at the Fed, if confirmed, to achieve that. I think it means, as you suggested, using tools differently. The Fed has an interest rate tool and a balance sheet tool. My view is the interest rate tool gets in the cracks. It's fairer. The balance sheet tool disproportionately helps those with financial assets. The interest rate tool hits the entire economy. So we need a new framework, new tools, and I'd also say, Mr. Chairman, new communications.
Yes.
I think part of the reason why, after making a mistake in 2021 and 22, the mistake was compounded, is the Fed gives its forward guidance. The Fed tells the whole world what their dots are going to be, what their forecasts are going to be. Well, the Fed's human. Then they hold on to those forecasts longer than they should. I think if the Fed were to wait until it gets into a meeting before making a decision, that incremental deliberation can keep the central bank from compounding its errors. I think these are big changes that are needed, and if confirmed, I look forward to doing it.
Thank you very much. Ranking Member Warren.
Thank you, Mr. Chairman. So the Fed has been plagued by deeply disturbing ethics scandals in recent years involving at least 6 Fed officials. So it's critical that the next chair have no financial conflicts, none. You have more than $100 million in investments that you have refused to disclose to ethics officials and to the public. So let me ask, do the Juggernaut Fund or the THSDFS LLC invest in any companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles established by Jeffrey Epstein?
Senator Warren, thank you. So let me first share a point of agreement with you. The Fed has 2 tools. One is its monetary policy, and the second is its credibility. And the scandals that you talked about, the ethics problems
Walsh,
you
I
talked
appreciate
about,
that, but I
went to
have
the
very
core of the
limited
credibility
time.
that has hurt the
Could you
Fed.
answer my question, please? I asked. You have $100 million in undisclosed assets. And what I'm asking is, are any of those with this outfit that invests in companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles set up by Jeffrey Epstein? It's a yes or no question.
Senator, I have worked tirelessly with the ethics officials at the Office of Government Ethics.
And you have not
come to an ethics
revealed
agreement
$100
with
million
them and have
assets.
agreed, Senator, to sell all of
That's
my financial
not my
assets,
question. Mr.
including
Walsh,
the Duquesne
are you refusing
assets.
to tell us if you have investments, for example, in vehicles set up to advance Jeffrey Epstein? Is that what you're telling us? You just won't tell us?
Senator, what I'm telling you is that those assets that you represent as Juggernaut will be sold if I'm confirmed before I take office and sign the oath of office.
Let me follow up on that. Will you at least disclose how you plan to disclose and divest these secret assets? I'm sure you understand that the public might question your motives if, for example, billionaire Stanley Druckenmiller, who you honored in your opening statement, and who makes a living guessing what the Fed will do next, cuts you a massive check for $100 million as you take the oath of office to become the new Federal Reserve Chair.
Senator, as you know, it sounds like your fight might not be with me, but the Office of Government Ethics. I have come to full agreement with them and have agreed to divest all of those assets,
I'm asking you
especially
a very
those that you
straightforward
referenced
question,
before I
Mr.
take the
Walsh,
oath of office.
and that is, will you disclose how you divest those assets, or will you just collect a check for $100 million from someone whose whole business is betting on what the Fed will do?
As I said to the ethics officials at the Federal Reserve and the Office of Government Ethics, they agreed,
I'll take that as a
I would
no
be
as well.
redeeming my
So
assets
Donald
before
Trump
I take
has
office.
made clear that he does not want an independent Fed. In fact, he has said, and I quote, "Anybody that disagrees with me will never be Fed chairman." And he's made clear that you are his sock puppet, saying last week that interest rates will drop, quote, "when Kevin gets in." Yeah, I think they do. Not when economic conditions change, we'll get lower rates. Not when the economy needs it. Nope. He said, when my guy, Kevin Walsh, is in there, we'll get the interest rates that I, Donald Trump, wants. So independence takes courage. Let's check out your independence and your courage. We'll start easy. Mr. Walsh, did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the Federal
I'm just
Reserve.
asking you a factual question. I need to know, I need to measure your independence and your courage.
Senator, I believe that this body certified that election many years ago.
That's not the question I'm asking. I'm asking, did Donald Trump lose in 2020?
And I'm suggesting you in 2020, the Fed made a huge inflation problem, and you certified the election.
So
we
let
need to
me
keep
ask you
politics
another
out
question.
of monetary policy.
In our meeting, you said you would
politics.
be independent because you're, quote, a tough guy. Those were your words, tough guy. And you will be able to stand up to President Trump. So let's try it again. Name one aspect of President Trump's economic agenda with which you disagree.
Well, Senator, the Federal Reserve in recent years has wandered outside of its remit, wandered into other areas.
I'm asking for something
That's
you
not something I'm
disagree with
prepared to
Donald
do.
Trump on.
If I'm
Just
confirmed,
one
the Federal Reserve should stay in
economic
its
issue.
lane.
Just one little place where you disagree with Donald
Well, I
Trump.
do have a disagreement, actually, Senator, with the president. I think even this morning, he said that he thought I was out of central casting. I think central casting, I'd look older, grayer, and maybe show up here with a cigar of sorts.
Quite adorable. But, you know, we need a Fed chair who is independent. That's the only way we preserve the independence of the Federal Reserve. If you can't answer these questions, you don't have the courage and you don't have the independence.
I agree with you on independence, Senator.
Senator Rounds.
Thank you. Thank you, Mr. Chairman. Mr. Walsh, first of all, welcome. And I appreciated the opportunity to visit with you personally within the office. I agree with you, and I think Fed independence is critical. And I think that's an item that you and I agree on wholeheartedly. I want to take an opportunity just to kind of perhaps give you an opportunity to respond. I know that the ranking member had a number of items that she expressed concerns with. I'd like to give you an opportunity to just kind of work this way through. And let me just ask you a few questions, and I'll allow you to take the time to fully answer the questions. As I understand, Mr. Walsh, you worked with the career ethics professionals at the Office of Government Ethics and at the Fed to come to an agreement in terms of your dissolution of some of the assets that you as a businessman have. Is that correct?
Yes, Senator, that is correct. I worked with the Fed ethics officials first, answered all of their questions, then with the career professionals, the Office of Government Ethics, answered all of their questions, and then they wrote up an ethics agreement, which is part of the public record. But because I agree with Senator Warren on the ethical questions that have been raised over the last several years by several people that were members of the FOMC, so that there's no question about my independence, no question about the clarity of my financial record, I agreed to divest virtually all of my financial assets, the large majority of which will be divested before I raise my right hand and am sworn into office if confirmed by this body. So I've gone above and beyond, not for any other special reason other than the Fed needs to reestablish its credibility because the conduct of policy depends on it.
So let me just, for the record, the agreement which you have signed clearly states that you have agreed to divest your assets that are in question within 90 days of confirmation if you have not already divested them. That is correct.
Yes, Senator, and in fact, the large majority of those assets will be divested before I am sworn into office if confirmed.
Thank you. The career ethics professionals were the ones that basically had sent your signed paperwork to this committee's chief clerk. I really question whether or not they would have done that if they did not come to the ethics agreement with you in the first place, correct?
Yes, I presume that's right. We had a very good working relationship, and I'm happy to be sitting after the divestiture and cash or T-bills or whatever is the permitted asset so we can get back to the business of fixing the Fed, reforming an institution that has lost its way a bit, that has missed the mark. As Chairman Scott said at the outset, this inflation risk is still something that's being talked about around kitchen tables and boardrooms. My preferred definition of stable prices is a little different than most academics. I believe that price stability should be a change in prices such that no one's talking about it. That's an old-fashioned definition, but I think it's still valid. And the sooner that we can reform the institution with my colleagues if confirmed, the sooner we can ensure price stability, and we can have a new set of leaders atop the institution with high, credible, ethical standards to return the Fed to what it should be. The independence that both Chairman Scott and Senator Warren mentioned, critically important, but independence has to be earned, and it's earned by delivering on the promises, the commitments that the Fed has made. And as the Fed hasn't delivered on those promises, we shouldn't be surprised that we hear politics that are entering the room at the Fed. We need to get the politics out of it so the Fed can focus on its day job, deliver on full employment and stable prices.
It's true that people want to see stability within the Fed, but is it okay for a Fed governor or a chairman to change their mind on a particular policy?
It's more than okay, it's essential. Economics is not physics, it's not math. Frankly, most of us that ended up in the economics business, we started like I did as a math major. It was too hard. So we ended up in economics. In economics, what we need to do is focus to the left of the decimal point, not to the right of the decimal point. We need to focus on the big things. And if mistakes are made, central bankers, economic policymakers need to correct them fast. The real mistakes, the mistakes that cause inflation to be persistent, to undermine hardworking Americans' standard of living, and when those mistakes go on.
Thank you. Thank you, Mr. Chairman.
Yes, sir. Senator Reid.
Mr. Chairman, before we start the next question, I ask that we have entered into the record the U.S. Office of Government Ethics certification, which requires that all nominees disclose all of their assets, and showing that Mr. Walsh is out of compliance and that he has not met the ethics requirements.
Without objection, I will note, however, that what has been clearly articulated is that he will, according to his agreement with OGE, do what many others have done as well within 90 days, be not only in compliance, but to have divested himself from any assets that are in question.
Mr. Chairman, can I ask? I don't think we've had other nominees who are out of compliance and not disclosing at the time they come before the hearing.
Not on this committee, that's correct.
Not in this committee.
Before we, here's what we're not going to do.
Fair enough.
We're not going to have two chairmen, for sure.
Just asking.
Number one. Number two, what we're also not going to do is debate what we're putting into the record. And finally, what we are going to do is have a conversation about America's economy. And frankly, we all deserve the opportunity to ask our questions. We don't get to figure out the answers, but we do get to ask our questions. And I hope that we are able to continue in that direction. As long as we are, we're going to have a very good hearing. And if we're not, then I will find a way to help us to expedite getting back on track. Senator Reid.
Thank you very much, Mr. Chairman, Mr. Walsh. Until you dispose of all the assets you've identified to the Office of Government Ethics, you will not be in compliance. Is that correct?
That's not my understanding. Excuse me, sir. My understanding is that a signed ethics agreement provides duties and responsibilities on me and duties and responsibilities on the government, and that's what the nature of the ethics agreement is.
You have an agreement that within 90 days you will dispose of all your assets. All your assets. Is that correct?
Senator, I have an agreement within 90 days so that there is no appearance of anything inappropriate, that I would divest all of my assets, the majority of which before sworn in. What I've disclosed, Senator, is all the information that is mine to disclose. I've shared all information about assets that I control and that I can share, which I did much to the satisfaction of the Government Ethics Office.
Excuse me. What you've said is that you will take the oath, if confirmed as chairman, with assets that have already been identified as presenting potential conflicts of interest. Will you agree to not take the oath until you have fully disposed all the assets that you've been identified?
Senator, I'll agree to take the oath pursuant to the terms of the ethics agreement that I struck with the Office of Government Ethics. I don't think anyone could do more than that. Other than me, I've agreed to divest even more assets so that I will have virtually no financial assets.
The divestiture is totally up to you. You can select what assets you're disposing of, what assets you keep. Is that correct? And then still be sworn in as chairman.
The divestiture is up to the agreement that I struck with the Office of Government Ethics.
Who makes the decision as to what assets are divested, you or the Office of Government Ethics?
Both of us. That's why it's an agreement.
Excuse me. I must commend you on the way you can circularly go around questions and not answer them. It's a skill. Unfortunately, it's not a good skill for the chairman or of the Federal Reserve Board. We typically ask questions and expect to get direct, faithful answers. You haven't given them to the ranking member, and you're not giving them to me. So, again, you feel you will not be, you will be compliant if after 90 days you still have a significant number of assets that have been identified as presenting conflicts of interest. Is that your view?
No, Senator. If I were to violate the ethics agreement, I would not be in compliance. If I follow the agreement, I will be.
Well, that's your position. I think others would differ. When you sell all your assets, where are you going to place the proceeds of those sales? I believe that Chairman Powell has placed them in sort of funds which are very difficult to individually influence. Do you propose to do that?
Yeah, I propose to put them in permissible assets that are as close to cash or treasury bills as I possibly can. I haven't selected anything, but it will be as plain vanilla as possible so that there would be no appearance or reality of having any influence. We'll be sitting in something like cash.
Okay. Now, the question of independence is just one that I think will dominate these proceedings. This morning, President Trump was asked on CNBC, will you be disappointed if your new Fed chair doesn't cut rates right away? And President Trump answered, I would. It's very hard to separate President Trump's obsession with rate cuts, his attacks on the Federal Reserve, on Chairman Powell particularly, and your nomination. So this independence thing seems to have evaporated quite quickly between President Trump's statements and your positions. Again, you maintain you'll be independent of President Trump?
Yes, Senator, I do.
Well, President Trump constantly maintains that nobody's independent of him, that it's his morality that guides the whole United States government, including the Federal Reserve, and that you will be someone who will carry out his wishes. Frankly, do you suspect that he chose you because you indicated to him that you want to cut rates?
Senator, I don't know the reason for the president's choice, but I can tell you what I've been writing about for 15 years and what I said to the president, which is
you're going to I'll cut rates if you give me the job.
No, that's not what I said, Senator. Now, the president, as you might know, much like virtually all presidents I've either known or studied, presidents tend to be for cutting rates. I think the difference is President Trump expresses it quite publicly without surrogates or subterfuge, but presidents want lower rates. But Fed independence is up to the Fed. Fed leadership has to make a decision about what's the right thing to do.
No.
In my judgment,
you're a leader. You're the leader. You establish the moral and ethical standards and economic principles of the Fed. And you just pass it off to, well, you know, it's not my job, it's everybody's job. That means it's nobody's job. Thank you.
Senator Tillis.
Mr. Chair, before my time starts, can I make a parliamentary inquiry?
Certainly.
I want to make sure that we get this right because I'm not an attorney, but I think it's pretty important to suggest that according to Mr. Walsh, he has signed an agreement that is in compliance provided that he executes the agreement.
Correct.
So we should not have into the record that he is before us out of compliance because you stipulated that what Senator Warren said was a first of a kind here, but he is not out of compliance. He has agreement that if he executes, will be in compliance. That's why he's properly before us. And I just want to make sure for the record that that is clear.
Yeah, very clear. Let me just say it. I'm going to reiterate what you just said, but I was writing it down myself. The Office of Government Ethics has entered into an agreement with Kevin Walsh that he has up until 90 days after confirmed to divest of his assets.
So the word, I mean, to non-attorneys here, I heard someone say he's before us out of compliance, and that's why I checked with the staff to be absolutely certain. He is properly before us. He will be in compliance if he executes agreement that addresses the concerns that have been presented by some of my colleagues on the other side of the aisle. I just want to confirm for the record that that is in fact accurate.
So if we're doing a matter here of, is this parliamentary inquiry? Is that what this is?
I've made a parliamentary inquiry, so I'm not burning my time on something that I thought felt like a cheap shot to say he's out of compliance when in fact he's not.
Then I'd like to ask the other question, and that is, have we seen this agreement? Do we have any way to verify that, in fact, these sales will occur if we have no idea what's in them and no one has told? And let's remember the law for a minute. The Fed, unlike other parts of government, do not have a 90-day you can be out of compliance. Fed law is explicit that you cannot own any portion of a financial interest in a bank.
Mr. President, Mr. Chairman, excuse me for interrupting. Senator,
now I'm going to let the attorneys take over.
Are we going to all get extra time here?
No.
I'd like extra 3 minutes.
All right.
Okay.
Mr. Chair, I just, for the record, and the only reason I say
that was a parliamentary inquiry, so it doesn't count.
Yeah. But,
okay.
Mr. Chair, the reason I mentioned that is because you had stipulated it. I don't think you meant it this way, but you as a chair said that this is the first of a kind of someone being out of compliance. I don't think you meant that. I wanted to make sure it was clear for the record.
Well, let me just be very clear again. The career ethics professionals were the ones that sent Mr. Walsh's signed paperwork to this committee's chief clerk. They would not have done so if they did not come to an ethics agreement with Mr. Walsh. Mr. Kennedy, Senator Kennedy does raise a good point. We are going to stick to our timeline, and I appreciate you raising the point of how long an inquiry can go on, and that does not buy you more time unless, of course, we all decide we want more time, and then I would rule on that, and I would rule against it.
Thank you, Mr. Chair. Mr. Walsh, congratulations. You can't count this as a date with Jane, particularly this one. I think probably the first hearing was a little less acrimonious.
Senator Thompson,
I'm not going to ask you anything. You can take a break and get ready for the bludgeoning on the other side. They're going to beat you till you bleed, and then they're going to beat you for bleeding. I'm going to talk about what's preventing me from being in a position to vote for you until we've spent time together in my office. You have extraordinary credentials. They're impeccable. I think the way you're dealing with the ethics issue is strong. Problem I have is where we are right now. And I start by saying I loved your opening statement. I love your focus on the independence of the Fed. I love the idea of Fed independence with respect to achieving the dual mandate, but Fed transparency on so many other things that the Fed does that, frankly, we're all frustrated with, bank examination, supervision being some among them that I think we should have more insight into. Mr. Chair, I'd like to submit for the record 2 executive orders under President Trump, one in 2020 and one in 2025, talking about making federal architecture beautiful again and focusing on trying to preserve the integrity of old buildings.
Without objection.
Thank you. And Mr. Chair, I will be submitting an analysis, but if we can go to slide 2. And turn it up right. Much has been made about the building project that has Chair Powell under investigation. I'm not going to get into the details except to say that I used to work for a firm that did audit and compliance, so I'm naturally wired to go back from the ground up and figure out what the deal is. Here's what I know. The Martin building has been conflated into this project to make it a $4 billion building. Even if you put the Martin building in, it's a $3 billion building. The reality is what we're talking about is the Eccles building and the East building, for which, bring that up higher, Jack, you're a tall guy so people can see it. These are the overruns. And these overruns occurred in part because the cost of inputs went up 69% since the original estimate. Asbestos was identified. Remediation was required. Pylons had to be built underneath the building because it turns out they used it as a landfill and they had a water table issue. There were a variety of reasons why this building went over budget. And as a matter of fact, if we put everybody in prison in federal government that had a budget go over, we'd have to reserve an area roughly the size of Texas for a penal colony because of the way government projects work. And the reality is the overage of inflation adjusted was about $730 million, the majority of which seems to be legitimate. Next slide. Not acceptable, unfortunate, but legitimate. Now, what I've really got a problem with, and we're talking about Fed independence. By the way, I think you're going to be independent. You have to be. You got to convince 11 other people to vote with you, at least a majority. It's a consensus organization. You try to get the majority to. Most of these votes are 11-1. So if anybody thinks the president can appoint somebody and you unilaterally can control things, you're going to be an unsuccessful chair if history is any guide, and you've served under some of the best. So I know you're going to do it right. The problem that I have here is that we had some U.S. attorney with a dream or assistant U.S. attorney thinking it would be cute to bring Chair Powell under an investigation just a few months before the position was going to be open. This happened this year. Normal course and speed, here's how it works at the Fed. May the 15th, the term would have expired. We'd be having this hearing, you'd be getting confirmed. Custom also suggests that the sitting chair, even though he has 2 years left on his term, would have exited. But instead, we have somebody who thinks a building project that went over by about $700 million with a lot of what seemed to be justifications for it are holding up this whole process. It sounds like to me somebody over in the DOJ didn't even check with the boss. The boss said on the same night that I said I can't go forward until this bogus investigation is done with, said he didn't know anything about it. So we've got people in DOJ over in the D.C. circuit or the D.C. district doing these investigations. We have got to end this investigation. Big DOJ didn't know about it. The president didn't know about it. Let's get rid of this investigation so I can support your confirmation. Mr. Walsh, the only thing I've found the least bit odd about you is you've never watched an episode of Seinfeld. You've spent so much time at being a rock-solid economist that you're not even taking time away for a little laugh like that. I look forward to supporting your nomination, and I look forward to this investigation being taken down. If the chair wants to have all of our subcommittees start looking at capital expenditure projects for the agencies that we're overseeing, I think that's a great idea. And I'd like to be on a committee specifically drilling down on this analysis. If somebody can prove me wrong, I'd be happy to make a criminal referral. But I don't have the D.C. Circuit tell me a crime was committed when 7 members on this committee said it wasn't, including the chair. Thank you, Mr. Chair.
You're welcome. Only one question. What is Seinfeld? Senator Van Hollen.
Mr. Chairman, thank you. Mr. Walsh, good to see you. Reviewing your record, I am concerned that your position on interest rates seems to shift with what's politically convenient, rather than based on sound economic judgment. In the aftermath of the 2008 financial crisis, the worst recession since the Great Depression, with some of the worst unemployment in our lifetimes, you were a hawkish voice, expressing concern that the Fed might wait too long to raise rates. I think you got it wrong then, but now you seem to have swung 180 degrees in the opposite direction to embrace lower rates, a view that conveniently aligns with the president who nominated you. You've made this pivot even as today prices are too high. I think we all know that. Our economy works for families when prices are affordable and unemployment is low. That's why price stability is an important part of the Fed's mandate, right?
Senator, yes.
And the Fed uses its monetary policy tools for price stability and full employment. That's the job Congress gave to the Fed. Here's how Ben Bernanke described how the Fed uses those tools. He said, and I'm quoting, "Generally, if economic weakness is the primary concern, the Fed acts to reduce interest rates, which supports the economy. If the economy is overheating, the Fed can raise interest rates to constrain inflationary pressures," end of quote. So that's a textbook model of the Fed. Cutting rates supports the economy, but can lead to higher inflation, while raising rates helps to fight inflation, but can limit growth. Do you agree with Chairman Bernanke that that's generally how the Fed can use monetary policy to affect the economy?
Senator, I do agree generally with that proposition, but I'll note at a moment like this, the supply side of the economy is changing dramatically. So the core of what Chairman Bernanke said is a question about what's the economy's potential. As I said in my opening remarks, I think the economy's potential is growing quite quickly, and that makes the decision that you tee up to be a difficult one, and one that the Fed's going to have to dig deep in evaluating what's the right policy choice in the upcoming meetings.
Well, I want to push you a little bit on that in a moment, but right now the Fed has set its main interest rate at 3.5 to 3.7%. Last December, President Trump told the Wall Street Journal he wanted to cut rates to 1% and maybe lower than that by the end of this year. So just to better understand how you think about economics, in the economic model Bernanke laid out, let's say there's an economy with decent growth and no recession. If the central bank were to cut rates from 3.5 to 1% or lower, a massive cut, that would typically push prices up, right?
Senator, unlike many of my colleagues, past and present, I don't believe in forward guidance. I don't believe that I should be previewing for you what a future decision might be. I think it's essential that the Fed make decisions in the room.
Mr. Walsh, I'm not asking you what decision you would make. Obviously, that's going to be up to you. I'm asking you for the framework in which you think about these things. And it seems a pretty straightforward question about what would happen if we reduced interest rates by the end of this year to 1% or less. And under the Bernanke model, and I think almost every economist or most economists would say that that will drive up prices. And so that's what I'm asking you. Would you agree that that would likely drive up prices?
So, Senator, the Fed has two important monetary policy tools. One is interest rates, and the other is a balance sheet that we created in the 2008 financial crisis. Those tools should be working in concert, not at cross purposes. So it's hard for me to isolate one variable when we'd have to have a discussion on the other.
All right.
Sorry.
Well, let me just say this was a pretty clear question about the framework in which these decisions are made. I have heard you talk about how AI may change that calculation. Yes. I will just say, and I think you know this, I mean, I have this, you know, the Financial Times pointed out the economists reject Kevin Warsh's claim that the AI boom will enable rate cuts. And I find it just implausible to suggest that by the end of this year, AI would produce such increases in productivity that it could reduce in a rate cut to below 1%. And you can't tell me that that would very likely increase prices.
So, Senator, can I say two things? First,
Senator,
sorry.
Quickly.
Sorry. Monetary Policy Center works with long and variable lags, quite famously. If the Fed were to make a decision today about the conduct of policy, it's likely to find its way to the real economy 6, 9, or 12 months later. So it's difficult to judge policy today for an immediate result. And that would be my only concern about the framing of your question.
Thank you. Mr. Chairman, in closing, this is what concerns me, is that your views now have sort of flipped to conform with where the President of the United States is. And that's been a concern many of us have. Thank you, Mr. Chairman.
Senator Kennedy?
I want extra time, Mr. Chairman.
I know, sir. I know.
Consider these 5 minutes a parliamentary inquiry. Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know. Okay. I think it's that thing you stick your hand in.
Yeah, kind of like this?
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend Senator Warren, and she, as my friend, suggested that, I wrote it down, you will use your power, you might use your power to bail out your friends if they get in trouble, kind of like President Biden did with Silicon Valley Bank and Signature Bank. She didn't say the last part, I just did. Are you going to do that?
No, Senator.
Okay. The ethics folks, they've cleared you, but they've said you've got to sell some assets. Is that right?
Yes, sir.
Okay. And these assets that you have, you can't just hold a yard sale, can you?
No, not for most of them, sir.
Okay, so it takes a reasonable period of time, right?
Yes, sir.
And you've promised to sell them, right?
I did.
And if you don't sell them, we'll know, and the ethics folks will know, right?
Yes, I'd be in violation of the ethics agreement if I refuse to sell them.
But you're going to sell them, right?
Yes, Senator, I will.
Okay. Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can agree, and it's not something that I would shy away from. I've heard many senators from this very committee in years past express strong views on interest rates.
Okay.
Humble central bankers should be listening and then making their own decisions.
But some politicians matter more than others. And generally speaking, presidents matter, their opinion matters more than, say, a senator. President Trump has offered his opinion about what you ought to do with interest rates. Is that right?
Senator, he has not made his opinion on that a secret to anybody.
Yeah. And every president has that you're aware of.
Yes, and they all tend to be in the same direction, Senator Kennedy.
Okay. Now, the problem is, can we agree that your credibility as Fed chairman is the most important thing you have?
It's the most important thing to me, it's the most important thing to the institution, and it's the most important thing to the successful conduct of policy.
Okay,
if the markets
that's a yes, right?
Yes, Senator.
Okay. The problem is that President Trump has said he's not going to appoint anybody who wouldn't agree to lower interest rates. Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
So the president has never sat you down, looked you in the eye, and said, here's the deal, Scooter, I'm going to appoint you, but you got to agree to lower interest rates. That didn't happen, or did happen?
The president never once asked me to commit to any particular interest rate decision, period, and nor would I ever agree to do so if he had, but he never did. I was honored he nominated me. Like everyone else in the committee in the world, I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Okay. I've got one more question because I'm about to run out of my parliamentary inquiry time. I've heard your argument the last few months about artificial intelligence has made us so productive, labor so productive that companies don't have to raise prices. Therefore, inflation isn't a problem. Therefore, rates can be cut. Do you really believe that right now?
No, that is not how I would characterize the story on AI.
Okay, but you've said what I just said, haven't you?
I have said that this is the most disruptive moment in modern economic history in the U.S. and the world. I've said that artificial intelligence, AI, short for
let me stop you because the chair's going to cut me off.
Oops, sorry.
Here's my worry, that a lot of this stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. Okay, I'd be careful there.
Yeah.
Thank you, Mr. Chairman. I'll get to my 5 minutes in a little bit.
So you come back about midnight, sir, and we'll go ahead and start it all over again. Brand new day, sir. Brand new day. Thank you for your patience. Senator.
Thank you.
Cortez Masto.
Thank you.
Yes,
Mr. Walsh, thank you for taking the time with me. I appreciate meeting with you. Congratulations on this nomination, and welcome to all your family, friends who are here. Let me talk to you about a couple of things. It's really around economic theory, and we have talked a little bit about this when we were meeting. Inflation has been above the Fed's target for 5 years. Would you agree with that?
Yes, Senator.
Yeah,
yes.
and core PCE inflation has been running at about 3%, a full point above that Fed target, correct?
Yes.
And so some Federal Reserve officials have said that this excess is due to tariffs. Do you agree with that?
Senator, I don't. If I can make 2 points.
Please.
Much as we discussed in your office, I think the data that's being used to judge inflation is quite imperfect data. And among the projects that the economics profession, and if I'm confirmed as chairman of the Fed needs to do, is to try to use our new understanding and new data sources to see what's really the inflation rate in the economy. We used to use core PCE, core measures, so we'd exclude food and energy. If because it was sort of a rough swag as to what was going on. We don't have to do a rough swag anymore. What I'm most interested in is what's the underlying inflation rate, not what's the one-time change in prices because of a change in geopolitics or a change in beef, but what's the underlying generalized change in prices in the economy. And my broad sense is that these inflation risks and the inflation damage the last several years is improving somewhat. It has improved somewhat in the last year. The measures I prefer are looking at things that are called trimmed averages, where we take out all of the tail risks, all of the one-off items, and we ask ourselves whether the generalized change in prices is having second-order effects on the economy. Again, they're not where they should be, but I think that the trend is quite favorable.
And these trend averages and the data that you're looking at now, it's not traditionally the norm that economists would use in this position. Is that correct?
Some in economics profession are increasingly looking to these median-type measures, but among the projects I would hope to undertake as one of the first reforms at the Fed is a data project, where we would go off and we would evaluate with the public sector and the private sector, including the Bureau of Labor Statistics, a survey of 1 billion prices. And what I'm really most interested, Senator, is what's the change of that 500 millionth and one price? Because that's inflation. That's a change in the generalized level. In a market economy, prices change all the time, and I don't want to be confused by that. I want to know what inflation really is, and I still think there's some work to do.
And I respect, listen, I'm listening to you today and talking with you. I respect you truly believe as an economist and a theorist in this theory, in what you are talking to us today about, which is traditionally not the norm. And many are disagreeing with you on that, and publicly disagreeing. And so I understand that. But I guess the position I have is I hope you're right, but at the end of the day, my concern is people are suffering right now with high costs, and we need to address it. And I don't know how long it's going to take for your economic theory to gain traction or to be proven that it's going to benefit so many people in this country right now. And here's one other thing, because I don't have that much time, and this is what is also a concern of mine, so I want you to address it. Earlier, you've been on the Federal Reserve Board, and you were there during the financial crisis of 2008. You and I talked about this. I was the Attorney General then. It hit Nevada so hard. Here's what I do know, and at that time, in 2006, you attended numerous meetings where housing experts pleaded with you to stop predatory mortgages. In fact, Gail Burks, who was the CEO of Nevada's Fair Housing at that time, who I worked with, repeatedly warned Fed leadership, including you, about predatory lending practices such as flipping loans or misinforming seniors about reverse mortgages. And in 2007, you said, and I quote, "Subprime mortgages have gotten a bad name in this environment, and in some cases, that's not just." You also said that you don't see any immediate systemic risk issues among big banks. And you said that at that time. And then just recently, and this is what I want you to address, Senator Warren has said that you told her you had no regrets during this tenure. How can we trust that your economic theory, when you were wrong then, is going to be the accurate theory we need now to help so many families and businesses that are struggling with the policies that we're dealing with now?
Senator, let me address a few things. The chairman is going to cut me off when he must, but I would say this. For many years before the global financial crisis, I warned about the very real risks of Fannie Mae and Freddie Mac blowing up, which they did. I think that part of the housing market was vulnerable for many years, and not enough was done about it, even in spite of my protestations and my urging about GSE reform. It wasn't done. I think that compounded the financial crisis. Secondly, I think subprime mortgages then, subprime assets then, were indicative of prices of almost every financial asset that were mispriced. What I suggested then and what I believe now is that subprime mortgages were just indicative of a set of prices that were incorrect, and they all repriced. Just to give one fine example before I turn to the chairman.
Perhaps no examples right now.
Okay, sorry.
Let's go to Senator
Thank you.
Haggerty. I want to give you the opportunity to finish that exchange.
Thank you, Mr. Chairman. And Mr. Walsh, I want to welcome you and your family. And I want the committee to know that I've known Kevin Walsh for 30 years. We first crossed paths back in 1992 shortly after Kevin graduated from Stanford.
We're listening to Bill
We
Haggerty,
both worked in the White House staff at that
Republican
point in
from
time.
Tennessee.
And I just want to say this, that the man testifying before us today is the same man that I got to know then. Serious, disciplined, with a true heart for public service. And I want to say this, I've said it before. Kevin Walsh is the man for the moment. His background, his experience, and his discipline are precisely what we need to bring our economy into its full potential. I'm delighted to see him here today as we both reinforce competence here at home and do the same thing abroad. And if I think about Kevin's qualifications, think about the contrast with the nominations that we saw with the last administration. I think this committee will recall that President Biden nominated a prospective federal bank regulator, frankly, a graduate of Moscow State University in Russia, who advocated for replacing private bank deposits with retail accounts held at the central bank. Those who might criticize Kevin for his private sector success miss the point. Kevin's experience is not a liability, it's an asset. It brings a practical understanding in terms of how markets function to bear, how capital is allocated, and how policy decisions shape the real economy. Mr. Walsh, how will your experiences in both the public and the private sector shape your governance of the Fed should you be confirmed?
Senator, thank you very much, and thanks for the kind introduction. For your colleagues on this panel, Senator Haggard and I shared a desk, 91 and 92, so I've known him for a very long time. I think my prior experience at the Fed, which some of your colleagues made reference to, are going to allow me to hit the ground running. This is as consequential a moment for the U.S. economy and, frankly, for the institution as any point since the late 1970s. And so my experience at the Fed, my understanding of the people, the culture, the governance, and of the things that are ripe for reform are going to give me a leg up. We don't have a long time to do new studies and contemplate what reform should be. We have a short window to try to bring inflation back down to where it should be to ensure price stability. And because AI that Senator Kennedy referenced is so consequential, and AI is quickly becoming at something like escape velocity, it's important to revisit the Fed's models and see whether this innovation cycle, while it could have over time improvements in the price level and make the Fed's job on inflation easier, there's a question about what that means for employment, which is another part of the Fed's mandate. So I think that's part and parcel of what my background and suggestion and history would suggest. But if I can make one other point, what the Fed needs is a reform to its frameworks and reforms to its communications. I've seen what the Fed's done well, and often I'll give them one cheer or two, but now more than ever, the Federal Reserve needs 3 cheers, and that's what I hope to deliver.
Well, let's stay on this point, particularly, and you've mentioned this in your commentary, the point of the Fed's mission creep over the years. If you think about what the Fed has done, they've strayed into what I would call politically contentious areas. They've gone well beyond their core mandate. And we've seen this across the Federal Reserve System. And what the Fed has done is eroded its credibility as what it should be, which is an apolitical and independent central bank. In bank regulation and supervision, the Fed's focused on non-material and often politically charged areas. I'm thinking about climate change policy here. Elsewhere in the Federal Reserve System, we've seen regional reserve banks used as platforms for promoting very divisive partisan policies. There I'm thinking about DEI, climate policy, even racial reparations. The Minneapolis Fed even went so far as to publicly lobby for an amendment to a state constitution on education policy. How far beyond the remit can they get? In the 2020 Monetary Policy Review, the Fed even sought to redefine its legislative mandate of maximum employment as a broad-based and inclusive goal, close quote. I mean, that's tacitly understood to mean that the Fed should accept higher inflation to privilege select groups of Americans. And while the Fed undertook this social engineering, it also financially engineered a massive footprint in our market. QE provided near unlimited bid for government debt, which of course made it easy for us to subsidize more government debt here. It subsidized government financing, and it encouraged, frankly, what I view as very reckless federal spending. In each of these examples, we see a clear pattern. The Fed has strayed beyond its core mandate to encroach upon policy decisions that ought to be left to those of us that are democratically accountable. Mr. Walsh, the Fed's own actions have eroded its credibility. What do you think should be done to regain public trust?
Senator, robust reform. The Fed can deliver on the mandate that you gave it if it sticks to its knitting. As it wanders into areas upon which it has neither authority or expertise, it loses its focus. And I'll just give one example. In 2020, as you reference, when the Federal Reserve changed its inflation framework in August of 2020, inflation was running at around 1.72%. And the Fed changed its framework, rewrote in some sense the remit you gave it, and they asked for a little more inflation. They ended up with a lot more, and that was the foundation for the inflation surge that happened in the subsequent years, which we're still living with.
Okay. Thank you, Mr. Walsh. Thank you, Mr. Chairman.
Senator Smith.
Thank you, Mr. Chair. Good morning, Mr. Walsh. It's still morning. Let me start with this. I think you have said that you have confidence that this economy has potential. I think that's fair to say. And you've also said that this is a time of great consequence for the nation's economy, perhaps one of the most significant hinge points in a couple of generations. That's fair to say?
Yes, Senator.
Thank you. And so I agree with that. And I actually want to go a bit further because I think that it seems to me that this economy is amazing for rich people, people who have a lot of capital. And in fact, we can see in 2025, billionaire wealth grew 3 times faster than the average rate of the previous 5 years. And wealthy households hold a massive portion of the nation's wealth. And this, I think, is the tipping point that our economy actually faces right now. And I can tell you that in Minnesota, a lot of people are telling me that it is harder and harder for them to afford the basics. They aren't rich. They don't have enough money to pay their bills, to pay their doctor's bills. So I want to look at this with you for a few minutes. And I want to start with inflation. So last week, President Trump said that gas prices are, quote, not very high, and, quote, we're having some fake inflation because of the fuel. So understanding what you've been saying about data and measurement and all of that, let me just ask you, do you think that gas prices going up 20% is fake inflation?
Senator, the gas prices like beef prices, eggs, milk, and the rest, they move. And when they move in the wrong direction, the American people are hurting by it. There's no question about it.
That's right. American people feel it. It's not fake to them. It's money that they don't have in their pocket because gas is up 20%. I think my constituents would say that that inflation is real and not fake. Okay, so let's look at unemployment. At the State of the Union, the president said, quote, the roaring economy, excuse me, this is the quote, the roaring economy is roaring like never before. So do you agree with that statement? Is that how you see the economy, that is roaring like never roaring before?
So Senator, if I can clarify 2 things. One, there's a difference between the change in prices and inflation. The change in prices happen in a market economy. When inflation moves up, that's because the Fed had something to do with it. Now, on the state of the economy, I would say that the broad contours of the economy are improving. The potential of the economy, the real results of the economy are improving, but I think it can improve more. And I think in the years ahead, I think the economy's potential is strengthening.
So, the reality is that the economic data, understanding what you're saying about economic data being not imperfect, that there was almost 0 job growth in 2025. And so that looks to me like not a roaring economy. It looks like a weak economy, which is what my constituents are telling me back in Minnesota. Let me go to one last look at this. Around the country, the average cost of home insurance rose 12% last year. Now, in my home state of Minnesota, not a coastal state, premiums rose 34% in 2025. This is, of course, caused by extreme weather events, hail, floods, tornadoes, hurricanes, climate change. So is that inflationary, in your perspective? Is that increase in home insurance, property and casualty insurance, isn't that inflation?
So, Senator, if I can answer 2 questions that I think I heard, and we talked about both of these in your office. When we look at the payroll numbers every month and we ask ourselves whether it's good or bad, The job you gave to the Federal Reserve is to ensure we're at maximum sustainable employment. I think broadly speaking, the economy is running about close to full employment, though we never know what the right number is. So if Americans that want a job can find a job, then by the Fed's metric, we're at full employment. On the question of insurance premiums and the rest, when I look broadly across the economy, I would say when we look at health care, when we look at education, we look at housing, those prices have tended to go up more. In the less regulated parts of the economy, we've seen a downward structure, a downward change in prices, and we try to aggregate them the best we can.
But I'm not exactly sure what your point is there, but I would just say that my point here is that rising home insurance rates caused by increasing extreme weather events, climate change, is another inflationary pressure that people in my state are dealing with. And this, of course, the reason I'm focusing on this is because I'm worried that because of the pressure that you are going to be under from the president to lower interest rates, that this inflationary pressure that my constituents are feeling is going to get worse and not better. And so I don't have time to ask my last question, but it is literally this. The president has said that he demands that the next Fed chair will lower interest rates. And I take him at his word at that, and that is what causes me such grave concern here. Thank you, Mr. Chair.
Yes, ma'am. Senator Lomas.
Thank you, Mr. Chairman. Welcome, Mr. Walsh, and congratulations on your nomination. And thanks for appearing before this committee, and taking both the positive questions and some of the hostility. I apologize for my colleagues' behavior when it strays outside of decorum. My first question is about the balance sheet of the Fed. What is your view about the size of the balance sheet currently?
Thank you, Senator. As we talked about in your office, the Fed balance sheet has played a particularly, I think, unhelpful role in helping the Fed achieve its dual mandate. The Senator had just mentioned what she described as the increase for financial assets relative to real assets. Well, part of that is the Federal Reserve. The Fed is not blameless in that as it's grown the Fed's balance sheet, grown its imprimatur on the economy, those with financial assets have benefited from it. The reason why I prefer monetary policy to use interest rates as the dominant force is interest rates affect a far broader cross-section of the economy. Interest rates get in the cracks. If we were to cut rates, then broader number of people will benefit from it versus quantitative easing, which tends to move through financial assets first. Half of our fellow Americans don't own any financial assets, so they're wondering what's in it for them. Broadly speaking, Senator, on the balance sheet, I was involved in 2008 and 2009 in response to the global financial crisis that Senator Warren referenced, and we used extraordinary measures and created a bigger balance sheet. But we agreed to do that only in the times of emergencies, only when interest rates were pinned to zero. The big balance sheet has become an ordinary recurring force, and I think has been quite unhelpful, and is part of the reason why the Fed is in the business of politics. Slowly and deliberatively, I believe we need a smaller central bank balance sheet. It took us 18 years to create this big balance sheet that's done quite a bit of harm, it strikes me, to the Fed's credibility. Working with the Treasury Secretary, we're going to have to find out a way in which we can take the balance sheet and make it smaller, because a large balance sheet where the Fed owns more outstanding debt than many parts of the financial markets, that's fiscal policy in disguise. Fed needs to get out of the fiscal business, focus on the monetary business, so the Fed can deliver on the remit you gave us.
Thanks for that response, because some of us don't appreciate the connection between the size of the Fed's balance sheet and interest rates. With regard to interest rates, can you tell us a little bit about your conversations with President Trump about interest rates?
Yeah, I don't want to put words in the president's mouth, but I think he has said loudly and clearly his view on interest rates. Don't think I'm breaking any news here. But I can tell you what I said, and what I said to the president is what I've said to this committee and what I've frankly been writing about for more than a decade. Interest rates are the much better way to be using monetary policy than buying bonds and mortgages, some of which are issued from the United States Treasury Department. That is a confusion of roles. That leads to a set of mission creep. So interest rates are the dominant tool, and interest rates, as I mentioned, get in the cracks. My broad view on the conduct of policy from here is that too many Fed officials, past and present, opine in advance about where they think interest rates should be next meeting, next quarter, and next year. I think that's quite unhelpful. As we've heard today from many of your colleagues, we don't know the state of AI. We can't be certain about the state of geopolitics. The economy is going to change. You need central bankers that are humble, that are nimble, that are open-minded, that can react when we have good data, when events strike us. My broad view is that interest rates need to be forward-looking, need to be based on better data, and we should have a big, robust deliberation inside the FOMC. I tend to favor messier meetings than some, where people don't show up with rehearsed scripts, but we can have a good family fight. If the central bank has that good family fight, I think that they're going to make better decisions. And if they happen to make mistakes, they'll correct them sooner. So I'm not one